you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharjani and with me is Soumit Sarkar. Well, before we move on to the queries that you have for us on the show today, let's take a quick look as to how the markets are doing. Certainly cheering the last few days of 2025. The Nifty 50 is up almost 0.6% as we speak, well above the 26,100 levels. The Bank Nifty also, doing fairly well, up by about 0.4%. Let's try to pull up the mid-cap 150 and the small-cap 250 as well. The mid-cap 150 almost in tandem with where the benchmarks are, up by about 0.6%. The small-cap 250 up by about 0.7%, slightly doing better than the mid-cap 150. Let's try to pull up the sectoral heat map. But before that, let's also try to pull up the Nifty 50 heat map to see as to what are the counters that are actually, leading to that rally of around 0.6% that we're seeing on the Nifty 50. You have counters like Shriram Finance, of course, leading that chart up by about 3.7%, followed by Wipro up 2.4%, Trent, Infosys, Bharti Airtel, Hindalco, some names doing fairly well in trade today. Just few names in the red includes counters like SBI, Ultratech, as well as something like an Axis Bank. Let's try to pull up the sectoral heat map to see as to how sectors are doing. Nifty IT clearly leading that entire pack of sectors. Let's quickly try to pull up the sectoral heat map before we see as to what the gainers on the Nifty 500 on the BSE 500 look like. There you go. It's Nifty Metal, which is up 1.7%. Nifty IT also up 1.4%. Media also doing fairly well, up by about 0.9%. All sectors in the green. Nifty FMCG just up by about 0.3%. But let's also try to pull up the BSE 500 and see as to what are the counters that are moving in the broader end of spectrum and what is that advanced decline ratio looking like. You have counters like Sterlite Tech, Kena Construction, RVNL, Suntech Realty, all seeing gains anywhere between that 4 to 12% But on the flip side, you have counters like Restaurant Brand, Prism Johnson, Gujarat Ambuja Exports, as well as Coromandel down by about 3 to 1% each. But with that, let's also welcome in our guest for the day, Gaurav Sharma, Associate VP and Head of Research at Globe Capital, and Saurabh Jain, Equity Head Research at SMC Global Securities, joining us now. Welcome to both of you, gentlemen. A very good morning to the both of you. The first question that we have is on Varun Beverages. Now, the person wants to know whether he can buy Varun Beverages at the current price levels and hold for a year or not is the question. Saurabh, I'll quickly come to you first on this one. Just wanted to get a sense, post this acquisition announcement of Twiza. Firstly, how are you seeing that acquisition, and do you think that for a one-year time frame, is this a good counter to make an entry into right now?
Season's greetings. See, in case of Varun Beverages, we have seen in the last one year or so, the stock has done nothing, primarily because of the, valuation. On the operational front, I think with the addition of new lines like chips and all, apart from the cold drinks, the company is doing good. And this is the lean season, which is currently going in. And starting first quarter 2026, we'll see activity coming up again for the summer season. Now, the acquisition that the company is talking about for the South Africa region, they are already doing business over there and they are doing good. And this acquisition will further strengthen their position as well as their operational matrices. So, in my opinion, yes, it is good to buy in a staggered manner, that too in a staggered manner for 1 year.
The next query is coming in from Nitin from Vadodara. He is holding around 100 shares of Lupin, bought at a price of 2,078 rupees. He wants to know whether should he continue to hold this counter or sell. Gaurav, any view on Lupin?
Hi, Soumit. Morning. So yes, Lupin, the chart-wise, it looks upbeat. A good consolidation has already taken place. I see it heading towards 2,300 and further towards 2,400s in coming 2 to 3 months. So yes, he should hold on to his position.
Okay, all right. So that's with regards to where Lupin stands. We've got our next question, which is from Siju, who's writing us from Qatar. He's got 500 shares of transformers and rectifiers bought at the levels of 334. Wants to know if this is the right time to make to average it for the next 2 to 3 years. Saurabh, your view?
See, we are quite bullish on the electric equipment segment, that too on the capital goods sector, capital goods side. And yes, we feel that the last 6 months will give good amount of growth and the enhancement in the order book too. Trill is a good company with the good operational matrices. I believe it is good to hold.
Next is a live caller coming in from Hyderabad. Dheeraj, you can go ahead and ask your query.
Good morning, sir. My query is regarding Siemens Energy, sir.
Right. I believe
Sir,
you are
I'm
holding around
holding,
50 shares at a price of 2,620. What is it that you want to know?
I would like to know the short-term target, sir. Is it the right stock which I entered at the current price, or should I shift to some other counter? I would like to know some short-term suggestions, sir.
Saurabh, what would be your short-term target on Siemens Energy and any other stock that you would recommend?
See, while it will be difficult for me to give any short-term views. Yes, this stock has fallen a lot in view of the rich valuation. The valuations are rich also looks to be rich now also, even after the correction. So in my opinion, he has to wait for long.
All right, so that's with regards to where Siemens Energy stands. Gaurav, any quick view on the charts?
Looking absolutely weak. Better to reduce the position.
Right. We've got our next question from Mohit, who's writing us from Ludhiana. He's got 350 odd shares of Fortis at the levels of 270. The time horizon is for the next 2 years. Wants to know as to what should be the next course of action for him. Saurabh, your view?
The hospital segments are doing, all the hospital stocks are doing good. Talking about Fortis Healthcare, this company also looks good to me. And if he wishes to change his stock, then he may switch over to Apollo Hospital.
Oh.
Again, a live caller coming in from Visakhapatnam. Pradeep, you can go ahead and ask your query.
Good morning, and thanks for taking the query.
Yes.
This is regarding Urban Company. I have got 2,000 shares at 26, sir. Can I know the short-term outlook, 2 to 3 months?
Right, he wants to know the short-term outlook on Urban Company. But I believe on charts it would be difficult to give any short-term. But Saurabh, what is your view when it comes to Urban Company?
See, it is a newly listed company. The management is quite confident of the new areas in which they are venturing into, and probably because of the new areas, the profitability in the recent quarters got impacted. I believe that the future is quite good for the company for the next 2-3 years, even down the line. So, in my view, I think it is good to hold for long term.
Okay, good to hold for the long term is the view on Urban Company. The next one is from Satyan. He's asking about 2 different counters. Basically, he wants to know if he can shift from RHI Magnesia to something like a Schaeffler. His time horizon is for the next 12 odd months. He's bought RHI Magnesia at the levels of 500. Gaurav, I'll come to you on this one. Where are the charts looking more attractive right now?
Mahima, the stock is consolidating in a range from past almost a couple of months now. The thing that I see on the charts is that the stock has taken support from 425 odd levels, where it rested some time back as well. Going ahead, a bounce towards 500, 525 is quite imminent. Therefore, he should hold on to his position.
The next query is coming in from Murli, and it's on Ambuja Cement. He wants to know the long-term view on Ambuja Cement. Saurabh, what's your view here?
We are quite bullish on the cement sector, particularly in the second half of the current fiscal year. If you look on the valuation side, yes, the valuations looks quite comfortable to me, and we believe that going forward in the next few months, we'll see that the demand will rise, and also the pricing power will return to the company like Ambuja Cements, and we feel that it is good to hold.
Standard disclaimer, Ambuja Cements is also a part of the Adani group of companies, and so is NDTV Profit. But viewers, with that, let's slip into a very short break, but we'll be right back answering all the queries on the other side, so do stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, passengers.
It's not keeping in mind only our richest passengers, it's also keeping in mind our entire passenger segment. They're very well looking at 10 years down the line. This is probably one of the most well-connected places in India. It's going to be a buzzing hub of economic activity.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the
Welcome back. You're watching Ask Profit on NDTV Profit. Moving on to our next query, which is a live caller query coming in from Bangalore. Mohan, you can go ahead and ask your query.
Just bought buyback shares of 25 at 1,506.
Right. And you want to know the long-term view or the short-term view?
I want to know for the long-term view.
Okay. Saurabh, what's your long-term view when it comes to Vatek Vaba?
I think the company has good order book. A part of the construction work is what the company does. It transfers the subcontracting some kind of a work to the as a subcontractor, and by virtue of which their margins keep on are likely to increase further. And a few months back, it had got a bad news with respect to the cancellation of orders when we saw some kind of a good amount of selling in the stock. But I feel going forward, the order book will increase and the company's operational profitability will also seek some kind of a growth. So my take is hold.
All right, so that's with regards to where Vatek Vabak is concerned. The next one is from Shivani, who's writing us from Mumbai. She's asking about Texmaco Rail. She's got 200 shares at the levels of 170. So elevated levels is where she's bought it. Wants to know if she can continue to hold this for the next 1.5 years, but wants to know the target for this particular counter. So Gaurav, I'll come to you on this one. What's the next target from a slightly longer term perspective that you're seeing on the charts?
Yeah, so Mahima, today is probably the first or the second day when the railway stocks are getting into limelight. They are attracting good amount of volumes. I think they are likely to run up towards 155. Texmaco Rail is likely to run up towards 155 to 160 range in the coming couple of quarters. So I think it is better to hold on to the position. Not much of a downside is likely from these levels. The stock has bounced back from where it has seen and rested at least 3 to 4 times earlier. So these are very good levels. Hold on to the position. She can even add up here.
Next query is coming in from Vishwanath Reddy from Andhra Pradesh. He's holding 600 shares of NLC India, bought at a price of 55 back in 2021. He wants to know whether should he sell or continue to hold this counter going forward. Saurabh, any view here?
See, we are positive on the power consumption and metal and mineral side, and it is a combination of both. We expect that both revenue and the profitability will increase going forward in the next few years. So it is good for the long term.
We've got our next caller. Venkat is calling us from Chennai. Venkat, hi, a very good morning to you. How can we help you today?
And a very good morning to you, and wish you all a very, very happy and prosperous 2026.
Wishing you the same, Venkat.
And this is regarding the query of whether I can go for IDFC Bank or Shriram Finance, which is the best one I can buy now at this price.
Okay.
And I am looking for a period of 1 year with an upside target of about 15%.
Okay, all right, got your question.
Because IDFC, I saw that the PE is about 50. Is it advisable to go for that, or should I go for
Understood.
Shriram
Okay.
Finance. Give me
Understood.
your opinion on that.
Got your question, Venkat. I'll take this up with Saurabh then. Saurabh, if you were to pick between IDFC First Bank and Shriram Finance, considering the MUFG deal as well, which one would be your bet for the next 1 year?
See, after the release of the RBI minutes, it is quite evident that the inflation will stay low and there would be another round of rate cut, which will again put pressure on the bank on the net interest margin side of all the banking stocks. In contrast to the companies like Shriram Finance, who borrow major funds from these banks, their cost of funds will further go lower. And after the Japanese investor coming in the Shriram Finance, I think the outlook has further strengthened for the company. In my opinion, out of the two, Shriram Finance is the best. Will be good for the investment.
The next query is coming in from Ambika from Chennai, and it's on IEX, that is Indian Energy Exchange. She holds around 2,500 shares at a price of 142. She wants to know the medium to long-term perspective for IEX. Saurabh, any view on IEX?
I think the monopoly has got challenged some time back, and it is the resultant of both high valuation, and the monopoly that the stock has got beaten down. Still, the valuations are looking expensive to me, and in contrast to that, the operational matrices are not supporting such kind of a growth that should match the current valuation. In my opinion, I think it is better to exit.
Okay, all right. The next one is from Sai Kiran, who's writing us from Hyderabad and asking about Tata Motors CV. He's bought 250 odd shares at the levels of 400 and wants to know whether from the next 1 year perspective, can he continue to hold or not at the current price? Saurabh, I'll come to you again on this one. Your view?
Not that much positive on the commercial vehicle, on the Tata Motor commercial vehicle. I think if you want to invest money in the domestic commercial vehicle segment, then I think Ashok Leyland is the best one.
Next query is a live caller query coming in from Uttar Pradesh. Arvind, you can go ahead and ask your query.
सर गुड मॉर्निंग सर. सर मेरे पास सुंदरम फाइनेंस के 200 शेयर्स है 4600 पे. अब मैं एक्चुअली जो भी फाइनेंशियल सेक्टर्स में चल रहा है, बस सुंदरम फाइनेंस कुछ चला नहीं है कंपेयर टू और फाइनेंशियल सेक्टर्स चले हैं और कंपनियां चली हैं. तो मैं फंडामेंटली और टेक्निकली जानना चाह रहा हूँ कि सुंदरम फाइनेंस का क्या है.
Saurabh, your fundamental view on Sundaram Finance?
देखिए, सुंदरम फाइनेंस फंडामेंटली काफी अट्रैक्टिव लगता है. देखिए, स्टॉक ऐसा नहीं काफी तेज हुआ था पीछे, अब ये कंसोलिडेशन एक दायरे में घूम रहा है. 4 टाइम्स टू बुक वैल्यू पे ट्रेड कर रहा है, और मैं समझता हूँ कि कंपनी जैसे कि एनबीएफसी, जैसे कि सुंदरम फाइनेंस को काफी मदद मिलेगी ब्याज दर नीचे जाने से, और ग्रोथ भी आएगी. तो मेरे हिसाब से आप अच्छे स्टॉक में बने हुए हैं और आप बने रहेंगे.
Gaurav, your technical view on Sundaram Finance?
Yeah, technically still the stock is in a sideways kind of a phase. No point exiting it either. I think a break above 5400 will take it towards a next trajectory. He should hold on to a position, keeping a view at least 6 months from here. And I think good price points can be available.
Okay, all right. The next one is on Garden Reach Shipbuilders. The person has bought 25 shares at an average price of 2,550. From a long-term perspective, that is 3 years, he or she wants to know whether to remain invested or not. Saurabh, your view?
I think on the operational side, the company is good, but yes, on the valuation side, it looks expensive to me. I think better to book some of the holding is what I recommend.
Right. The next query is coming in from Murli from Chennai, and it's on Vedanta. Now, given that demerger has been approved, should he continue to hold Vedanta from long-term perspective? Saurabh, any view here?
Yes, we are quite positive on the metal and mineral side, and Vedanta is a niche player in that, and I think the demerger will further unlock value. You should stick with it.
Okay. All right. The next one is on ITC Hotels, and this is okay. We don't have the name of the person, but wants to know if this is the right time to make an entry into something like an ITC Hotels or not. Gaurav, enough data on the charts to give that answer?
Yes, he can consider initiating a long position here. The stock has corrected quite too much. The last 2 quarters are generally considered the better ones for the hotel and the transportation holiday restaurants industry in India. Therefore, yes, this is the right time to enter. Take a stop at 185 and look for targets close to 200, 220, 225 levels.
Queries coming in from Suman from Kolkata. Around 20 shares of Motilal Oswal bought at an average price of 907. Gaurav, what would be your short-term view on Motilal Oswal Financial Services?
Stock is available after a reasonable correction here. It is just hovering near the 200 period exponential moving average. I think if the stock is able to sustain above 880 levels for the next couple of days, I think this will head towards 950 to 975 zone. Then the viewer can take a position around 880 plus levels.
Okay, all right. So that's with regards to where Motilal Oswal stands. With that, Gaurav, thank you so much for taking out the time and, of course, giving us all those insights on all the queries that we asked. On this side of the show, of course, now we're joined by Ajit Mishra, who is the Senior VP of Research at Religare Broking, joining us now. Ajit, hi. A very good morning to you and season's greeting to you. I'll take up the next question, which is on Carborundum Universal. SP Khandelwal from Jaipur is writing this question. He's holding 100-odd shares at the levels of 1550. Wants to know the outlook for the next 6 months on the chart. Ajit, your view?
Yeah, good morning, Mahima. So, festive greetings to you, the entire team, and all the viewers. So, Carborundum Universal, we are seeing gradual drift since it's been almost 4 months now after making a new record highs. In fact, it's been almost 1.5 years rather. And price-wise, we have seen decent correction from the record highs. Currently, it's hovering in a very tight band for almost 3-4 months. Indications are in the favor of further consolidation because of late there were multiple attempts to reclaim the long-term averages on the weekly chart, but couldn't sustain. So as of now, he can continue to hold his position. 800 is where we are seeing a strong base formation with upside hurdle at 950. So if the view is short term, let's say 3 to 6 months, consolidation might extend further. So he can consider switching to the counters which are participating in the market trend, like in the private banking names, auto, metal counters is something that he can focus on.
Well, with that, let's start our first rapid fire segment. And Ajit and Saurabh would request you to keep your answers short for this rapid fire segment. Starting off with Mohit from Ludhiana. He has 350 shares of Fortis Healthcare, bought at a price of 270. Time horizon for holding is 2 years. Saurabh, your view?
Book partial profits.
Okay, Nugent Software is the next one. Govind Kumar wants to know from a 1 to 2 year perspective, can he continue to hold the 500 shares, bought at the levels of 970 or not? Saurabh, your view?
Hold.
Pushpa from Mumbai has 10 shares of Deepak Nitrite, bought at a price of 1,975. Short-term view, Ajit?
Book profit on rebound around 1800.
Okay, Hindalco is the next one. Rajesh has bought it at the levels of 462. 550 shares is what he has. Short-term view on this on the charts, Ajit?
Hold with the trailing stop loss at 855.
Abhishek from Kolkata holds shares of Ganesha Ecosphere, bought at a price of 5,940. Should he continue to hold, Saurabh?
Exit.
Okay, PFC is the next one. And this is from Triambaka, who's writing us from Mysuru, Karnataka. Wants to know if this is a good bet to continue to hold from a long-term perspective or not. Saurabh, your view?
Hold.
Okay, the next query is coming in from Pragadishwaran, and he has 75 shares of Kalyan Jeweler, bought at an average price of 512. He wants a 3 years target. Saurabh, your view?
Better to exit.
Okay, Deepak Fertilizer is the next one. Sabo from Kerala wants a 3 months view on this one. Ajit, your view on the charts?
Rebound likely, maintain the stop at 1120.
Sashwat holds 37 shares of Raymond Limited and Raymond Realty. Saurabh, should he continue to hold?
Hold.
Okay, LIC is the next one. Padma from Bengaluru has been holding this since IPO. Whether she can continue to hold this from a long-term perspective or not. Your view on this, Saurabh?
Book profits.
Jigesh from Kerala holds 120 shares of IRDA, and should he continue to hold this counter, Ajit?
If the view is short-term, better exit.
Okay, Godrej Properties is the next one. Shantana Murthy wants to know if he can continue to hold this from a short-term perspective or not. Your view on the charts, Ajit?
Yeah, rebound likely, maintain stop at 2000, around 2200 review.
Alright, okay. With that, we end the first rapid fire round for Ask Profit. But viewers, we'll slip into a very short break, but we'll be right back answering your queries on the other side, so do stay tuned.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, passengers.
It's not keeping in mind only our richest passengers, it's also keeping in mind our entire passenger segment. We are very well looking at 10 years down the line. This is probably one of the most well-connected places in India. It's going to be a buzzing hub of economic activity.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either call us or WhatsApp us to ask your queries. The Nifty 50 holding well above the 26,100 levels. Of course, it will be a wait and watch to see whether these levels are sustained till the end of 2025 or not. But we've seen FI buying for the past 3 odd days, and we have Sharad also joining us to give us a perspective as to what the F&O market setup is looking like right now. Sharad, is it positive enough?
Well, it is positive enough, and welcome back, Mahima. And let's just see the markets, how actually they have actually panned out. And we see a very strong gap up opening was there. Global cues are suggesting there are some signs of Santa rally. And today also the IT pack, Bharti Airtel, and even you could say some steel names are doing really well in the trade. Now these are FI heavy counters, and we might see more action in this space. Nothing much to see in the losers front. And let's just pull up the Sensex key levels. It's at around 85,468. The future levels, the spot levels is also comfortably up in the day's trade. Let's look at the options, how it's actually working out, and the bullish data and the sentiment is getting much more stronger in the day's trade, and it's sustaining above key levels as well. BankX also, the story remains the same. Support coming from most of the constituents, and especially HDFC Bank, it's still holding in the green. And if you look at the other stocks also, they are showing a good move as well. If you could just pull up the other stocks in the BankX, these are also the top trades coming in. Yes, this is on the screen itself, but SBI, some minor profit booking is there. But net, the position is good, and be the options. Also, the numbers look same. And let's look at the strong build-up coming in the long segment. Solar Industries and KA Industries make it to the list. On the other hand, short covering candidates, they include RVNL and Mazgaon Dock, Defense and Railways. Pre-budget trade, which we had mentioned you earlier, now it's actually playing out. Long unwinding for these two counters. And last but not the least, the short build-up that's coming in Chola Finance. Yesterday also we saw pressure in that, and Emphasis also makes it to the list. But largely the volumes are not that strong in either of these counters. But net, stock-specific moves are definitely happening here. But you could say sector and the markets, mostly all of them are in the green.
Well, thank you, Sharad. Thank you for that setup when it comes to the F&O market. Moving on to our next query coming in from Rajesh Patel from Indore. He's holding 20 shares of TCS, bought at a price of 2,922. He wants to know the long-term view when it comes to TCS. Saurabh, your view on TCS?
We are positive on the IT sector, especially in view of the cutting down of the interest rate in the US markets. We believe some few more rate cuts will definitely help Indian IT companies to get more discretionary spending coming in from the US markets. And also there was some recent statement by the TCS. They are doing good on the AI side of the business. So we are positive for the long term, and my take would be a hold.
Okay, the next one is on Hindustan Zinc. This is from Lakshya. He's been holding 598 shares at the levels of 468. Wants to know if he can continue to hold or sell them at the current market price. He's sitting on profits of around 83,000 rupees. Ajit, your view on the charts? Further upside is what you're seeing, or should he book his profits?
So Mahima, as we all know, the kind of euphoric move that we are seeing in silver, so that is closely reflecting in zinc as well. And with every passing day, we are seeing that stock is inching towards newer highs. As long as the momentum is intact, I don't think one should rush to book profit. But yes, at the same time, keep on trailing your stop losses on rise. So now 600, the today's low can be considered as the stop loss. And gradually towards, let's say, 640, 45 is the area where last time we saw distribution. So around that area, he can consider booking his profits.
The next query is coming in from Suresh from Trivandrum. He wants to know the long-term perspective on Zydus Life at the current value, Saurabh.
See, we are positive on the Zydus Life Sciences. If you look on the operational matrices, the company is posting up a good growth, and the management is also quite confident for the long term. So my take, it is good to check in Zydus Life Sciences for the long term.
Okay, the next one is on EPAC Durable. Sandeep from Hyderabad is writing in. He's got at the levels of 270 and wants to know what should be the target for the next 1 year, one odd year. Jeet, on the charts, what's it indicating?
So Mahima, after this sharp correction from the record highs from 660 to 240, we are seeing noticeable buying interest, but it's extremely volatile also. So, as of now, it's still, maintaining up the short-term averages, but the kind of volatility the stock has been experiencing, one should definitely stick with the strict stop losses, because 245, 250, the recent swing lows, that will be the critical area to watch out for. In case if it fails to hold, then probably we may say next leg of the decline also. On the higher side, 335, 340, the long-term averages is something which might act as a strong hurdle. So as of now, he can continue to hold with the 250 as a closing stop loss, with the 3 months, 6 month kind of a time horizon. Above 340, he can review his positions.
Okay, all right. So that's with regards to where EPAC Durable stands. But as we've promised, let's cut across to Kajaria Ceramics media con call, where the management is actually addressing the clarification and update on the recent CFO fraud case. Listen in.
Processes and business frameworks. We started with Kajaria Ceramics Limited, where the exercise helped us identify a lot of operational gaps as well as significant cost optimization opportunities. The outcomes were tangible and swift. During the year, we have achieved cost savings of more than 150 crores on an annualized basis. These efficiencies came from multiple areas, including reduction of manpower, cutting down travel expenses, reduction in re-engineering of cartons and reduction of cost of packaging material, better raw material negotiations, and overall plant operations of the company. However, we are not stopping here. We have identified more areas where we reduce the cost further. While Kajaria has always been a strong sales-driven organization, we believe that sustained leadership requires equal excellence in cost efficiency and governance as well. This exercise will continue till we achieve excellence in all the areas. In August 2025, for the first time in the history of Kajaria, we also conducted a supplier meet to reinforce the new ethical business practices. A clear message was communicated: zero tolerance for corruption or unethical conduct. Any deviation from this standard will not be acceptable and will be severely dealt with. As part of the stronger governance while we were in the last phase of correction. This was actually our last plant which we put, a new sanitary ware plant. These were detected through enhanced systems, audits and controls, and appropriate corrective actions have been initiated. I want to emphasize that this reflects our commitment to transparency and robust governance going forward. This current episode may not have come to light had we not begun this process of systems, processes, and MIS audit that was initiated as part of Kajaria 2.0. All-round improvement in productivity, purchases, cost and yield improvement, as well as rapid cost savings and enhancement of overall profitability will only help Kajaria to become the leader in the industry, not only for sales, but in costs as well. To all our stakeholders, I would like to reassure that Kajaria's fundamentals remain very, very strong. We are optimistic about India's growth story and Kajaria's role in it. This is Kajaria 2.0, where our philosophy is very, very clear. Bad news to be shared immediately and good news only to be shared on completion. Friends, our journey has just begun and the best is yet to come. Thank you. I invite you for any questions, please.
Thank you. Ladies and gentlemen, we will.
Well, the next query is coming in from Revati from Andhra Pradesh, and it's on multiple PSU banks: Bank of Baroda, PNB, Canara Bank, Indian Bank. Okay, Saurabh, as a PSU bank as a whole set, what's your view?
See, we are quite positive on the PSU bank side, and we feel that the valuations are still comfortable, and going ahead in the next year or so, the banks will post good set of numbers. Albeit there may be a bit of pressure on the net interest margin side, but considering the fact that the now balance sheets are quite clean and pristine, we feel that the markets may give some higher valuation to these banks. So all the names that you have said, we are quite positive.
Okay, all right. The next one is on Titagarh Rail Systems. Mamta Khandelwal wants to know if this is the right time to make an entry into this counter for a long position. Ajit, would you recommend that?
The kind of underperformance that we are seeing in most of these railway-related counters, if the view is short-term, I would definitely recommend her to avoid this, because we have better counters to trade and invest in. But like a tactical play means for a rebound cost today, in fact, in the last couple of sessions, we are seeing a bit of attraction in some of these names. But largely we have multiple resistance to look out for. So I feel that it's better to avoid even for a very short term. Stock like Bharti Airtel, which we were discussing, which is showing strong traction. Then we have private banking names, Auto. This is something that she should be focusing on.
Queries from Vishwas from Bangalore, and he wants to know a view on ONGC stock. Saurabh, any view on ONGC?
View it a bit negative on the ONGC, because we feel that the crude prices will stay down only, and maybe going forward in the next year they may get corrected going forward also, which will put pressure on the earnings and the margins of the company. So I think it is better to exit.
Okay, better to exit ONGC from a fundamental point of view. We've got our next caller. Shweta is calling us from Hyderabad. Shweta, hi, a very good morning to you. How can we help you today?
Hi, very good morning, Mahima. We missed you so much in Profit.
Thank you.
So happy you're back.
Yeah, I'm also happy that I'm back.
Yeah.
Go ahead, ask your query.
My query is regarding the Bharat Dynamics and the BDL.
Okay.
I'm holding BDL at present at a price of 1500.
Okay.
So I would like to know whether is it good to stay in BDL or should I shift to BEL at current price?
And you're looking at this from a charts perspective? Long-term outlook. Okay, then I'll take this up with Saurabh. Saurabh, would you recommend her to continue to hold BDL, or should she shift to something like a BEL?
On the valuation side, I feel the stock is expensive. She has to, if she wants to chip in, she can buy in a staggered manner, and that too for a period of more than 3 years.
Well, thank you. With that, let's slip into a short break and we'll address more of your queries on the other side.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, passengers.
It's not keeping in mind only our richest passengers, it's also keeping
Welcome back. You're watching Ask Profit here at NDTV Profit. There's some breaking news flashing on your screen with regards to where India-New Zealand free trade deal agreements stands. They've agreed for access of infant formula milk products. New Zealand PM is something that the New Zealand PM has said. We're looking forward to that trade deal happening very soon to finalize the free trade agreement. It reduces tariffs on 95% of exports to India. This is, of course, coming in from the New Zealand Prime Minister itself, and they expect to sign FTA with India in first half of 2026 is what the expectations are. So that's with regards to where the India-New Zealand free trade agreement stands. But let's move on and ask the next question that we have, which is from Vishwas, who is writing, okay, we've covered this already. The next one is from Shrikant, who is writing us from Hyderabad and asking about Meesho. He's bought 3,000 odd quantity at the levels of 250. The stock probably is locked in lower circuit today. Let's try to pull that up, sitting on a quite significant loss. Saurabh, I'll come to you on this one. Post the listing, I mean, we did see a bumper listing for Meesho, but now do you think it's a good idea to continue to hold, considering competition, valuations, everything?
See, we are not comfortable with the business like the Meesho has, and since it is a new listing and the profitability is distant away, we feel it is better to avoid.
The next query is coming in from Jigesh from Kerala, and he wants to know the short-term target on Wipro. Ajit?
We are seeing traction across the IT pack, and Wipro have also started pitching in. We have surpassed the immediate resistance around 270. So near term, it can gradually inch toward, let's say, 285 to 90 levels also. So you should continue to trail your stop loss on every rise. So let's say at current levels, 268 is something that you should maintain as a stop, and around 285 he can trail his stop loss to 275 and continue to hold his position.
Got a next caller. Manish is calling us from Kolkata. Manish, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. Actually, I bought RR cables, price 1444 rupees.
Okay.
And currently I'm profitable, but I'm looking for I will partially book the profit, or I'll hold for some days.
Okay.
Means it's for interest. It's for trading purpose.
Trading purpose. Okay, Manish, got your question. I'll take this up with Ajit. Then Ajit, your view on the charts for RR cable?
So it looks strong, Mahima. In fact, we have seen a fresh breakout with volumes. Everything looks conducive for this, recovery or rebound to extend further. 1600, it could be a mild breather around that area. But as of now, with the 1500 as a stop, he can continue to stay put. Above 1600 mark, we can gradually inch towards the record highs also. So he can continue to hold his position with 1500 as a stop loss.
Ramesh from Bangalore holds around 8 shares of Dixon Tech, bought at a price of 14,500. He's currently sitting on a loss. Saurabh, should he continue to hold?
I think try to exit at your purchase price.
That's with regards to where Dixon Tech stands. The next one is from Upendra, who's writing us from Dubai and wants to know, from a 1 to 2 year perspective, which counter should he make an entry into, whether REC or Power Grid? Ajit, where are the charts looking more attractive right now?
I would prefer REC, Mahima, because both these counters are into the power segment. But the way we have seen, like they've already spent REC, PFC, almost 1-2 years of consolidation, and the downside seems capped. So at least from the long-term perspective, REC looks better placed.
Next query is from Narasimha Reddy from Hyderabad. He is holding few shares, 25 shares of SBI Life, bought at a price of 2,055 rupees. Should he continue to hold for long term, Saurabh?
Long-term prospects look good to me for the SBI Life Insurance. I think if you compare with the other companies, the operational matrices are quite strong. And after the announcement of FDI hike in the FDI limit for the insurance companies, I think the valuations will further strengthen. So my take is hold.
Okay, all right. Hold SBI Life is the view that Saurabh has fundamentally. The next one is from Kesav Rao, who's writing us from Andhra Pradesh, asking about Tata Technologies. He's got 134 odd shares at the levels of 1103. Wants to know whether what should be the next course of action for him. He's not mentioned whether this is from a short-term perspective or a long-term perspective. But Ajit, on the charts, what would you recommend right now?
Stuck basically because 1100 and now the stock is quoting at 665. Though we see recovery attempt bounce every now and then, but it fails to hold above the short-term averages also. So this indicates this underperformance to continue. So the better approach is to take the loss and switch to Persistent or Coforge, or in case from the IT major basket, HCL Tech.
There's a caller query coming in from Hyderabad. Aditi, you can go ahead and ask your query.
Yeah, my query is on Jio Finance. I'm holding about 3,000 shares and I bought it at a price of 312. So I just wanted to get a view. My outlook was a short-term one.
Ajit, your short-term view on Jio Finance.
So Sumit, we are seeing now rebound from the previous swing lows close to around 290 area, and currently we are hovering around the long-term averages. A decisive break above 305 might trigger the next leg of the up move. So she can continue to hold with 290 as a stop loss, but for any fresh momentum, decisive break above 305 is required.
Okay, all right. So that's with regards to where Jio Finance stands. But, as we were discussing with regards to where India and New Zealand free trade agreement stands, India bags tariff-free trade deal as the FTA talks with New Zealand conclude. We have Rishabh Bhatnagar on the phone line with more details. Rishabh?
Hi. So what we're picking up from Commerce Ministry officials is the fact that India and New Zealand have concluded talks for a free trade agreement. What we're seeing is that India is getting zero duty on almost on 100% tariff lines. So that is unprecedented. Currently, it roughly starts at about 98 to 99% for other trade deals. But what we're seeing is that 100% tariff lines have been included, and there will be zero tariffs essentially on whatever India sends to New Zealand now. What we're seeing is that in return, India is given tariff cuts in about 70% lines. This covers about 95% of India's exports to New Zealand. So there are gains on both ends as well. But on the India side, gains have been anticipated in textile, clothing, leather, footwear, basically all these labor-intensive sectors. There is also agri-products like processed food, spices, coffee, pharma, plastic, rubber. All of these will also find new market and will gain tariff-free access to the New Zealand market. So that has come across as the major win from this New Zealand FTA. Remember, this trade deal has been concluded in roughly about 9 months. Talks only started in March this year. So a major win that we're seeing. What is also very interesting is the services sector wins that India has received in this particular trade deal. There's a new post-study work visa that will be coming up. There is also a lot of more opportunities opening up for Indian students in terms of how many hours they can work per week.
Right,
so all
Rishabh.
of it being baked into this particular trade deal.
Well, thank you, Rishabh, for bringing us those details on the exclusive India-New Zealand FTA deal. Moving on to the next query, it's from Krishnamurthy from Chennai. He holds 310 shares of IRFC, bought at an average price of 177 rupees. He's sitting on a loss right now. He wants to know whether should he accumulate more for the next and hold for the next 2 years. Saurabh, your view?
See, while on the operation side, the business looks good, and there is a possibility that the company will see good amount of growth going in the next 2 years. I think the correction was largely because of the higher valuation, and I think, in my opinion, I think he has to hold it for the next 3 years for his price to return back.
All right. So that's with regards to where RFC stands. All right, so it's time for our second rapid fire segment, and Saurabh and Ajit, you both know the drill. Try to keep your answers as short as possible. The first question is from Madhu Babu, who's writing us from Hyderabad, asking about Suzlon Energy. For the 6 months, can you continue to hold? Ajit, on the charts?
Yeah, hold with stop at 45.
Vikas from Pune holds 700 shares of Route Mobile, bought at a price of 650. Saurabh, your long-term view?
Exit.
Okay, JK Cements is the next one. This is from Murli, who's writing us from Bengaluru. Wants to know if we can continue to hold the counter or not. Ajit, on the charts?
Hold with 5100 as a stop.
Murli from Bangalore holds 50 shares of JK Cement, bought at a price of 5,458. Should he add more or hold for the next 12 to 18 months, Saurabh?
Hold for next 1 year.
Okay, Bajaj Housing Finance is the next one. Srinivas from Warangal wants to know whether he can continue to hold this for a long-term perspective or not. Saurabh, your view?
Hold for long term.
Ahmed from Delhi wants to buy Hindustan Copper at the current level. Ajit, should he enter?
Wait for some consolidation.
Okay, Servotech Renewable is the next one. Sainath from Hyderabad wants to know whether he can hold or sell. Ajit, on the charts?
It looks weak to us. Avoid.
Vasant from Chennai wants to know whether should he buy Natco Pharma at the current level, Saurabh?
Avoid.
Okay, Union Bank is the next one. Venkatesh is holding 145 shares at the levels of 48. Should he hold for the next 1 year? Ajit, on the charts?
Certainly.
Anurag from Noida has a few shares of Dabur. He wants to buy more at current level. Saurabh, would that be a right idea?
Hold, but do not buy more.
Okay, Ujjivan Small Finance Bank is the next one. For the next 1 to 3 months, should this be a good hold? Neha from Bengaluru wants to know. Ajit, on the charts?
Yeah, hold with stop at 50. Upside potential 65.
The next query is on Renuka Sugars. He hasn't mentioned the name, but wants to know whether should he buy at the current level, Saurabh?
Avoid.
Okay, Grishma has invested in IDFC First Bank. Wants to know the target for the next 1 year. Ajit, on the charts?
Looks positive. 100, 110.
The next query is from Narendra Bethaji from Bangalore. He holds few shares of Shree Cement. He wants to know whether should he continue to hold this. Saurabh, your view?
Hold for long term.
Okay, BSE is the next one. Kurshit from Delhi wants to know if this is the right time to make an entry and invest 1 lakh rupees. Ajit, your view?
2550 should be the stop.
Senthil from Chennai holds 2,500 shares of L&T Finance at a price of 300. Ajit, your short-term view?
Book profits.
Okay, HBL Engineering is the next one. Naresh from Hyderabad wants to know if he can hold or average at the current levels. Ajit, your view?
Hold with stop at 800.
Venkat from Hyderabad holds 5,000 shares of Engineers India, bought at a price of 221. Should he continue to hold or average, Saurabh?
Hold.
Protein Egov is the next one. Pratap from Andhra Pradesh wants to know if he can continue to hold or not. Ajit, your view on the charts?
Use rebound to exit.
Okay, all right. So that's the view with regards to where Protein Egov stands. And in fact, we've managed to answer 64 questions despite of the cut-ins and the links, etc. that we had on the show for today. But Ajit, Saurabh, thank you so much for taking out the time and, of course, helping us answer those queries. With that, viewers, we're completely out of time on this edition of Fast Profit. Do stay tuned. KYC on the other side.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, passengers.
It's not keeping in mind only our richest passengers, it's also keeping in mind our entire passenger segment. We are very well looking at 10 years down the line. This is probably one of the most well-connected places in India. It's going to be a buzzing hub of economic activity.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with. Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today on show in KYC there is a very important company in this agro space, but I'll let you guess which this company is. It's an agro pesticides manufacturer. Also, looking at the stock itself, it has recently did a stock split and a bonus issue, and the stock is up more than 30% in just last 1 month. The company's name is Best Agro Life, and that has actually caught my attention, and a lot of viewers who look at KYC and they have stated to look into this company and to see whether this company is worth the up move or not. The first question is, will the sales actually do well in Q3 as well, or this impact will continue to happen because already they stated that in the Q2 numbers? That's the first question we'll be asking the management. Are there any recovery expected in the bulk sales? Is the management walking the talk? They had mentioned that in the Q2 con call, so that's what we'll ask the management again. And what is the launch pipeline for the patented products? That's where the bullish sentiment is there, which the street is expecting, especially in H2. The fourth question is, what are the debt reduction plans? Already I saw the debt reductions are coming down. It's almost 0.5 debt reduction level. So will this actually come down more? And also any international expansions on the cards? That's what we'll ask the company. Apart from non-LATAM or the non-American regions, which else regions are they finding value going ahead? And that is going to be very much important. But Best Agro Life, let's just ask about more questions about the company, what this company is all about. Of course, it is a pesticide player itself. It is having some patented technologies also. So let's just make you understand what the company does. My company manufactures agrochemicals, but to just give you a perspective, the space has been under tremendous pricing pressure, and also the seasonality of the rain season, especially for domestic players, has been on the negative side. They have roughly 9 patented products. It's just on the start when it comes to the patented products, and they are supposed to have higher levels if they want valuation premium in the market.
And the branded institutional sales, that's the breakup coming in. Branded is roughly 69% and the institutional sales, that comes in at 31%. Also, let's pull out, apart from the branded and the institutional, there's the contribution of products, how things happen. And largely in Q2, the number has been on the lower side. If you compare it with the Q2 FY26, that's 38% of sales has happened from the patented segment. And when you have a patented product, of course, you command a higher margin in a business like this. And also, you have a bargaining power. Non-patented products, they are a bit commoditized. And the sector itself, if you look at it currently, is going under a big pricing pressure, and the Q2 numbers have been on the weaker side. Now you must be wondering, the stock is up 30%, why? So we'll try to break it down why it is up. Of course, one of the main and the key reasons would be coming in is the stock split and the bonus issue announcements, and that is where the interest has actually come into the markets. So maybe it's a demand supply situation, because fundamentally also we need to judge the company. That's why we are having 8 of these parameters coming in: income statement, balance sheet, cash flow, return ratios. These are the 4 basic numbers which you should actually look out for. Apart from that, even shareholding, street cred, valuation amongst its peers, that's something which we will do for you. And also the outlook going ahead. Is it mixed? Is it good? Is it bad? We'll get you all the details. Out of these rating parameters, which are 8, we'll give our rating. The first one, that is the income statement, and we'll of course get you the numbers, how it's actually panning out. The 3-year CAGR for the revenue, that's a decent 14%, but my concern starts coming in when it comes to the EBITDA and the margin fronts. Nothing much happening. A company has given a target of 13 to 14%. So the question is, will that actually bounce back, in the H2? That's something which we'll ask the company. Net profit, there are some issues. The Q2, largely the numbers which had come in sequentially, the numbers have done well, but when you judge the company, especially a fertilizer company, you should do year-on-year basis, because there is a seasonality impact to it. And look at these numbers here: revenue down, EBITDA down, margins hit, net profit down, and that's where the concern starts coming in for me. Because of that, I'm just getting the short-term as well as the long-term numbers. I'll be giving this a total setup, a kind of a neutral rating, but there is some hope here. 15% coming in, and they're expecting that to be around that 13 to 14% odd mark. So there seems a hope, and if that has bottomed out, maybe we can see some kind of help in the margin front. But net, my view still remains kind of, neutral for the income statement. Also, let's move to the balance sheet segment, how actually that is panning out. And largely we see the book value that has gone up on the higher side, but the borrowings, that has largely come down, and that is why my comfort comes in the debt to equity ratio. But the concern is, of course, they're on the working capital front, because it's a very highly working capital business. And over here we see that the Q2 numbers were on the weaker side, Q1 also, and largely Q3 is supposed to be a good quarter for these companies, but this time the company has itself stated that the sales will be impacted. That means these numbers might see some more hit coming in, and because of that there are 2 divergences happening. I will give a neutral rating when it comes to the balance sheet. The third one is the cash flow segment. This is also very much important, and remember, a company like this will always have kind of, you could say, a very divergent cash flows coming in, because this is the nature of the business. There is lumpiness, there is seasonality involved, so that is something we'll be looking out for. And no clear trend actually comes out. Of course, the operating cash flow for September, that has done well. That you look at that amount, 228 crore rupees. PAT, that has come down, and I mentioned you there has been inventory hits coming in. Now whether this reversal happens in Q3 or Q4, that's something which time will say. The cash flow to PAT numbers, they are decent to actually get you in. Net cash flows, it's very divergent, but net I would say the upper numbers have been very strong. At least this a seasonality impact which has come in, and because of that I will give a good thumbs up or for the cash flow segment. But return ratios, that's also my concern. Generally a 15%, when you look at it, it's a very decent number to actually look at for a company like this, and had this been on the higher side, I would have actually given a good thumbs up for it. But see, the reduction has started happening in from 26%, it's 15%, and then these numbers is going down to 13%, and that's where the concerns are happening. And because of that, I will be giving a thumbs down when it comes to the ROC, the return on capital employed numbers. Now let's come and show you the ratings, how things actually move when it comes to the overall shareholding, how it's actually coming in. largely looking at the shareholding, we see not much change happening. The promoters, it's maintaining that 50% mark. FIs, there is a concern. It was 9%, but then it has come down and it's almost 6% odd. DIs, nothing much change, but institutionally the participation has gone down, and retail participation, which was 41, has gone up to 42%. So because of the institutional participation slowly coming down, I would be giving this a thumbs down, and that's why shareholding pattern, we can see there's a red mark happening. Street trade, that's a very important trigger, and largely the stock came into my interest because it spiked up almost 30% plus in the last 1 month itself. But apart from that, let's look at how other numbers have panned out. Last 6 months, it's 22 odd%, and then the last 1 year, it's down 37%. That's very concerning. So if you're a shareholder for more than 1 year, that's where the stress starts coming. That's where your patience in holding the stock is getting tested. Last 5 years, let's see what has happened. It's decent, 73 odd%. That's not a problem. So because of the divergence coming in, 5 year, this has been good. 1 year holding, this has been really big questionable investment. But last 1 month, that's where the interest lies for the market, and it's a very forward looking setup whenever you come and invest in the market. So I would be giving this a neutral rating when it comes to the street trend or the share movement. But apart from that, let's see the valuations, because the company has two types of peers. One is, of course, the larger peers in the agri-pesticide segment, and ones are the smaller ones who are domestic focused. So I'm going to get all of them to give you the flavor. Where does the valuation stand? And these valuations are 12-month forward P ratios going ahead. Best Agro Life, remember the word, it is 16 times FY27 P. But now let's see how the competitors are faring. And we could just show the UPL and PI Industries again, and we see here, it's almost 19 to 20 times. It's on the expensive side, but remember, they do command this premium in the market because of the sheer strength and distribution. Let's see the local players, how that has actually come in. And these are the local names, Dhanuka Agritech and Sharda Crop. They are largely similar, when it comes to their valuations. Not much changes happening. And remember, all of the industry valuations are on the lower side. There has been a significant correction. So most of them are showing some kind of strength and maybe a valuation comfort also if you want to play a short-term technical bet on this theme as well. But net, be it comes to the local peers and the valuations from the steep corrections from the highs, I would give this a neutral rating when it comes to the valuations. But now we are done with 7 of the rating parameters. The 8th rating parameter is also very much important. That's the outlook for the company. They're anticipating a lower Q3 sales number. They have mentioned it already. There's a change in the sales strategy and some adjustments as well. They're expecting a 13 to 14% EBITDA margins in H2, and that's a decent one. They have come out with almost 15% in Q2 itself. Patented sales, that's likely to improve from December onwards, and that's very much important. It contributes high margin push and also a strong momentum for other sales profile as well. Exports area growth expansion, that's what we'll be looking at and asking the company which are the geographies and by when these benefits will start coming in. So net, we can say that we have given this outlook a kind of a neutral rating going ahead. But let's just give you the entire picture, what we have done over the last 8 to 10 minutes and analyze the company itself. And let's just show the 8 parameters which are there. Largely for the income statement, balance sheet, it has been a neutral rating. Cash flow has something which I show some improvement in parameters. Return ratios were disappointing. Shareholding, the institutional participation has gone down. And street trade valuation and outlook, it's there. But is it fully there? That's the question, and that's why I've given a neutral rating when it comes to this space. And overall, for Best Agro Life, it's on the lower side in my show, KYC. It's 3.5 out of 8 I have given to this company. The stock has, of course, done really well over the last 1 month or so, but can this move sustain, or this is just a demand supply kind of a move, because the more shares will be available for the retail as company has announced a bonus as well as share split. So we'll discuss all these questions, and we'll be joined by Vikas Jain. He's the CFO of Best Agro Life. After the break, stay tuned to NDTV Profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon, passengers.
It's not keeping in mind only our richest passengers, it's also keeping in mind our entire passenger segment. We are very well looking at 10 years down the line. This is probably one of the most well-connected places in India. It's going to be a buzzing hub of economic activity.
Welcome back. We are now joined by Vikas Jain. He is the CFO at Best Agro Life. A very good afternoon to you, Vikas. Largely, the stock has done really well over the last 1 odd month, and there has been an announcement. There's a bonus coming in and a share split also. What's the rationale for this? What is tempting this company to do this right now, especially after a very weak quarter in H1? Why this a reward coming to the shareholders?
Yeah, so I think as you had shown that since last 1 year, there was little downward trend in the price of the shares. So we thought it would be a good option to give certain benefits to the shareholders. So that's how we thought of doing the splits and bonus now.
Right, but Vikas, this is just for the shareholders, but fundamentally, let's go back to how you have actually placed the company in Q2. There were concerns on your Q3 sales number, and you had mentioned it in the investor presentation itself. Now we are almost at the end of Q3, and I want to know about this numbers, the sales. Will that be as bad as what it was last time in the con call in Q2, or now has this actually improved?
So this year we are going to improve, and the last 2 years, where in the H2 we were into generally losses. So this year we had tried that we'll not go into losses. We had changed certain policies this year, resulting in a lot of reduction in the sales return. So we wanted to improve our market share. So we had done a lot of sales earlier, and in H2 earlier years we used to take back a lot of sales return. But this year we had changed our policies to ensure that we are not taking huge sales return and to ensure that not getting into losses. So more or less the policies have worked. We have been able to reduce our sales return by more than half, and hopefully we should be, so this is the beginning of the Rabi season, we should be able to see good sales resulting into not huge profit, but at least will ensure that we are not into losses.
All right, but will this impact happen in Q3 or Q4? That's what the street wants, because Q3 is already largely discounted, but you had pointed out is going to be on the weaker side. So will the benefits actually move to Q4 going ahead, or we can see some respite in Q3?
So we'll see respite both in Q3 and Q4. As we mentioned earlier years, there were huge sales return, which this year we have avoided. And also there were other factors, like 2 other factors, wherein we wanted to drastically reduce our inventory levels and to improve our cash flow. That also we have been able, we were successful this year. And the third point which we had took ourselves to reduce was the OPEX. If you see our OPEX for 6 months, we had reduced a good 13 to 14% of our OPEX, and the trend will continue in Q3 and Q4. So this should give us benefit and ensure that we are not into losses in Q3 and Q4.
All right, you mentioned Vikas about the reduction in OPEX. Now, if that happens, you have given a 13 to 14% EBITDA margin target for H2. Will it remain the same? 15% I think I was in Q2, and you are expecting 13 to 14% in H2. Am I right with this, or would you like to change your margin outlook guidance for H2?
So prior to September, our initial guidance was that we would be achieving close to 15% EBITDA for full year. It was not for Q2, it was for full year. But due to the excess rainfall which has happened throughout September, continuing in October, and also a lot of flooding had happened in mostly north part of India, we had reduced our numbers to 13 to 14%. So we are hopeful to get 13 to 14% EBITDA for full year by the time we close Q4.
All right, so you are sticking with what you had stated earlier in Q2, and no major change has actually happened over this last 1.5 odd months. But Street is also looking at an important commentary which you had given. So of course the management will be joining us in some time. But I just like to point out to our viewers, the stock itself, they have given a kind of a good guidance going ahead after taking a big beating in Q2 when it comes to the numbers, and the management is keeping and reiterating their guidance going ahead. Now, why you're seeing an up move in the stock? There are two reasons for it. Shareholders are getting rewarded in terms of bonus and share split, and when this happens, because the number of shares that also goes up and share split also increases. So what happens is larger retail participation also comes in, and right now also the valuations are depressed for the industry and for the company as well. That means we can see some more smart money buying or HNI buying happening in this segment as well. And slowly I just like to know one more thing, is that the bulk sales, that is something which we are looking at, where there can be a good up move coming in from the month of December as well. This company also has patented products and non-patented products. Largely from my analysis, the patented products are still on the lesser side, and now that expectation, if you look at it, they can be looking at growth over there. But now we are joined back by the management. Vikas, the bulk sales, I was talking with our audience that from December onwards that number has to go up, and that you had mentioned it also in the con call. So we are in the end of December, and bulk sales recovery, have they started coming in, or some sales strategy or recognition strategy is actually impacting the December numbers?
So with respect to patented and bulk sales, our endeavor was we are going into a high level of innovation and to get R&D products. So since last 3 years, we had launched 9 patented products, which is pretty difficult in this industry. So these 9 products, along with 3 products what we had introduced, had ensured that our portfolio from these patented products in the branded has gone up from 35 to 50%. So this year, we have increased our share of these patented products, and going forward, our endeavor is that we should be hitting or continuing this 50% of our patented products from the total branded products. So this will ensure, or this will result in a lot of reduction in other generic products, but ultimately the profitability, gross margins will improve because of this policy. And on the bulk sales and the technical sales, what we had been reducing since last 2-3 years, again, this year we have not been pushing too much, but the plan is to improve on these technical and bulk sales as well next year. So next year you will see a good amount of growth coming. This was more like a stabilization year. We wanted to control various things. More or less, we have been successful in doing that. So next year you will see not even the improvement in the bulk tech and bulk sales, but also improvement in margins, because the share of the patented products is increasing each year.
Because for the viewers who are hearing for the first time about your company, If you could just help us divide, the patented sales, technical sales, bulk sales, what are these actually there in your industry? It is theoretical, but our audience who are listening for your company for the first time, what you're all about, if you just give us that kind of a breakup.
So just to explain initially about all these sales. So for our industry, there are different kinds of way we sell. One is the technical and the bulk, wherein suppose, for example, we have a technical plant. So we import raw materials, and for various products, we do a lot of backward integration. We produce technical. So this technical can be sold to other competitors who will finally make it into finished goods and sell into the market. So this is the technical part. Then formulate is wherein we produce fully for on behalf of other companies. We white label, in other words, it's called white labeling, wherein we give in their brand. So that is a bulk sales. So this is technical and bulk where we sell to the competitors.
Correct, because that's an interesting point you've raised. Your debt reduction and international expansion plans, if you could just give us highlights of both of my queries, debt reduction and international expansions.
So international expansion has been going on pretty fast. We have applied for our products, especially our patented products, in many part of the world. And we had also recently incorporated an entity in Mauritius, which will hold those IP. So we have already started a small portion of exports this year, and the exports will pick up going forward in next 1 or 2 years. And this will become a good part of our revenue model. The other part, debt, we have reduced debt by more than 20-25% in last 3 years. And the present level of debt is more or less sufficient what we see, or we might take a little bit of debt from here on. But the existing levels is a good level of debt which would continue for us to continue our branded sales.
All right, but I have an industry-specific questions. Q1, Q2 inventory impact was there. A lot of companies and your peers are also changing strategies, inventory adjustments, sales adjustments. Is the international and the domestic segment, both of them, which you are catering to, has this actually moved on? The industry specifics are bottoming out, or the pain will be there?
So industry has been facing the pain since last 2 years. It had reduced a little bit this year with respect to the prices, but the effect continued because of the unseasonal, or rather bad seasonal conditions this year. So it was not more about pricing this year, but it was more about the seasonal conditions. So we feel in this industry, it doesn't happen that we suffer for a long time. So the prices more or less have stabilized, and we don't see the prices affecting next year as well. And hopefully, if the season is a little bit moderate also, the industry will improve from here on. So you are right that mostly the industry has bottomed out in this year, and there will be a lot of improvements next year onwards.
All right, the industry has bottomed out this year. That's coming in from the management, and as per my analysis also, the valuations in this sector are on the lower side. Thank you very much, Vikas, for joining in and giving your views going ahead. And that's all, folks, for KYC. Best Agro Life was in focus. Stay tuned to NDTV Profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
it's not keeping in mind only our richest passengers, it's also keeping in mind our entire passenger segment. We are very well looking at 10 years down the line. This is probably one of the most well-connected places in India. It's going to be a buzzing hub of economic activity.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment.
It stays buoyant over global rally and US rate cut expectations as Nifty stays steady above 26,100 level. Broader markets continue to outperform the benchmarks. All the sectors trade in the green territory today, barring the public sector banks. IT and metals are the top gainers. Gold prices surged to a record high, riding on growing expectations of further US interest rate cuts and strong safe haven demand, with silver and copper also joining the rally to hit an all-time peak. Infosys shares continue to stay in focus after a volatile trading session in the company's American Depository Receipts or ADRs on the New York Stock Exchange last week. The company, however, clarified that there were no material events that required disclosure for the ADR spike. Shriram Finance deal with MUFG gets brokerages thumbs up. Brokerages widely upgrade outlooks and raise target prices, citing strengthened capital adequacy, improved funding profile and enhanced growth prospects. KC International surges after Delhi High Court allows the company to bid on Power Grid Corporation. KC will be allowed to continue participating in ongoing tenders, including those floated by the state-owned transmission utility. India and New Zealand jointly announced the successful conclusion of the ambitious free trade agreement. FTA grants India zero duty on 100% of tariff lines of New Zealand. In return, India will give tariff liberalization in 70% lines, covering 95% of bilateral trades between the countries. A very good afternoon to all our viewers. You have tuned into Markets at 12. I'm Nisha Poddar. And to begin the show, here's something that we have exclusively breaking right here on 12. Let's take it straight to the big story that we are breaking on the fintech developments. Sources do tell NDTV Profit that NPCI intends to sunset the collect option in select of the categories in terms of the payment options that are being used. Now, let me take you through all the technicalities as well as details that I'm gathering from sources, remember, who are independent of each other and several sources as part of the industry. So, sources with direct knowledge suggest that collect and auto pay options on UPI are on NPCI NPCI's radar due to their misuse in unscrupulous transactions and frauds which impact the common man like you and me. Sources confirmed to NDTV Profit. Then NPCI has spoken to the payment aggregators or PAs to selectively sunset the collect option. NPCI is likely to sunset the collect for person-to-person merchant, or it's called technically P2PM category, and this will reduce the misuse by the merchants for recurring payments. So NPCI is also likely to reiterate the strict display guidelines for auto pay options that you and I have on our UPI app. So NPCI's measures on collect as well as auto pay is to prevent the misuse by the merchants on the UPI apps. NPCI is, remember, responsible for formulating the operating guidelines for the payment fintechs, which, remember, follow the regulations that have been sent by the Reserve Bank of India. In fact, we did reach out for this story for official comments from NPCI, Paytm, Pine Labs, MobiKwik. Remember, these three companies are payment aggregators and are in the listed space. We did not receive any official comment on this particular development from any of these listed companies. Now, remember, that collect option is a transaction which is initiated by the merchant to really recover funds from the customers like you and me, and it is not initiated by the payers. Auto pay option, that allows us the automatic recurring payments of, say, our daily bills, our monthly bills, and even our subscriptions to various apps and services by the vendors. So the payment aggregators, PAs, are the fintech entities that act as these intermediaries which collect these payments from the customers on behalf of the merchants. In fact, NDTV Profit did speak to several of the payment aggregators who spoke anonymously about the menace of both collect and auto pay options causing financial loss to the customers due to ambiguous display options and therefore financial fraud happening in the industry via the UPI payment. So industry sources say that the collect payment to really shift to intent and QR payments, small merchants to get impacted due to the sunsetting of collect to P2PM category. It will also reduce fraud collection of payments from the customers using UPI and better auto pay display to really prevent the misuse by the subscription-based apps, especially in really recovering funds where auto pay display guidelines really protect the customers like you and me from unknowingly subscribing for the long term. So this is the story that we have for you. Vineet Bolinskar, who's the head of research at Ventura Securities, now joins in to discuss this. Vineet, you've been tracking this particular segment. Thanks so much for joining in. I did reach out to Paytm, MobiKwik and Pine Labs, who seem to be impacted. In your sense, with this measure by NPCI, which is yet to be made public, what do you think will be the impact on these companies?
Actually, we do not see too much of an impact going ahead because, there are a lot of safeguard features that are put in. For example, when you talk of merchant-based payments, where you go for EMIs and loans, merchants have critically signed documents. So they're really aware of the kind of auto pay that they're getting into. As far as the P2P is concerned, there are a lot of initiatives taken by the merchants or the payment aggregators to ensure that, there are a lot of, call outs being pushed to consumers so that they can avoid any kind of fake or, fraudulent transactions. So we do not see too much impact on these happening, and we think that the growth story will continue from here.
All right, but also Vineet, for the larger public, at least it will restore more confidence in the UPI mode of payment and also prevent the misuse for all the people, including you and me.
Yes, definitely. It's a step in the right direction, and it's definitely going to curtail the frauds that are emanating from the system.
But no stock impact you see, and some of the other payment aggregator TPAP companies are really coming in with an IPO. PhonePe is also expected. So any impact when it comes to the operations, Vineet?
No, operationally, we don't see any kind of impact. I think UPI is a proven technology. People use it very well. In fact, if you compare UPI versus checks, I think that trend is very much in favor of UPI, and they might have to incur initial costs related to getting the systems up and technologically ready. So that is there. Another thing is that when you are doing your EMI transactions or rent payments, they could be positioned in such a way so that they do not eat into the traffic of the high intensity user, and they are allowed to be done at hours when the pipe is not heavily being used. So these kind of technology innovations would have to be carried out, but they're at a smaller cost and not too much of a problem transactionally or operationally.
Vineet, hold on to your thoughts for the viewers who have just joined us, who want to understand the story development that we are reporting right here, is that sources with direct knowledge do suggest to NDTV Profit that collect as well as auto pay options on UPI are on NPCI's radar due to their misuse as well as the unscrupulous transactions which are causing fraud. And sources do confirm to NDTV Profit that NPCI has spoken to the payment aggregators recently on selectively sunsetting the collect option. What does this select sunsetting mean? That it could be restricted only to the category of person-to-person merchant, which could likely impact the smaller merchants rather than the bigger institutions or banks when it is called the collect option. Now, what do we mean by collect option? It is a transaction which is initiated by a merchant to recover money from the customers like you and me, where the transaction doesn't initiate from the side of the payer, but it is initiated from the side of the one who's recovering the fund. And there have been several misuse cases as well as frauds causing financial loss to the public, and that's what NPCI could be looking at really arresting by sunsetting the collect option. On the auto pay option, which you and I use for bill payments as well as for subscription apps, there again a lot of ambiguity in terms of the display option of auto pay, of signing up to an auto pay, which is basically an automatic recurring amount that gets paid from your account on a regular basis. That also needs a stricter display, for which NBCI has been coming up with several guidelines, and now it looks like that they are going to reiterate because of the misuse. So both auto pay as well as collect option are the ones which are going to be on the radar. Thank you so much, Vineet, for joining in with your quick take. Not as much impact on the companies immediately, but this is one service that they did provide. It would arrest the fraud situation, but on the other hand, the number of transactions, the amount of transactions through collect that is there, part of that could get impacted when it comes to the listed entities in the payment aggregator space. All right, let's take a look at the market also. Market is really roaring with some global cues which have been good for us. Even the resurgence of FII inflows has been really welcomed by the markets, and 26,140 levels. It's 0.7% up in the markets in Nifty 50. And when we really take a look at all the other sectors except the PSU banking index, all the sectors are really cheering the good developments and the cues that are on the anvil for the market. When we really take a look at some of the Nifty 50 contributions and the companies which are the stocks which are performing better and contributing to Nifty 50, well, Bharti Airtel is the big boy with the top contributor, ICICI Bank from the banking pack, and of course Shriram Finance, which has recently announced the Japanese funding coming in for 20% stake of 40,000 crore rupees. That is also adding to the flavor in the market. Let's now take it across to the Commerce Minister Piyush Goyal, who is speaking about the New Zealand FTA announcements.
New Zealand traditionally has been an investor overseas. It invests around 8% of their GDP annually in other countries. Bilateral trade, both in terms of goods and services, in 2024, we are at 2.4 billion. It is the second largest partner after Australia and Oceania. We are presently at USD 1.3 billion in merchandise trade. The next 3 points essentially are elaborations of that. I'll come to the services side. Services is again about 1.3, and both areas have been growing over the past few years. In terms of total services exports to New Zealand, it grew by 13%, and imports from New Zealand, it grew by 7%. Services are traditionally in the area of travel, telecommunication, computer and information services. This is just a pictograph showing the India's exports to New Zealand and imports from New Zealand. You will notice that this is on an upward trajectory from our side. Just to give a brief background on when we started and where we are, this was launched on 16 March. Honorable Prime Minister met the Prime Minister of New Zealand, the CIM, and their Trade Minister here in Vanijya Bhavan, and in 9 months we have completed this with 5 formal rounds, as the Commerce Secretary mentioned. In addition to the conventional areas such as trade in goods, services, we also have chapters which are relatively new to trade agreements, which is economic and technical assistance and cultural, traditional knowledge and trade economic cooperation. This is a pictograph showing where, which state, what comes from, and how is it that this FTA will serve to boost the products from that state. We'll be leaving this presentation for you so you can go through it. Coming to the gains. 100% tariff lines fully duty-free from New Zealand on entry into force. Our present average with New Zealand is 2.2 in terms of the duties, but that is a bit deceptive as averages are. Our peak tariff for most of the goods that we export to New Zealand, which is textile products, leather, ceramics, carpets, automobiles, was pegged at around 10%. So that is the level of gain that we will experience for our exports to New Zealand in all these areas.
Right, so those were the details really coming in on the free trade agreement that has been signed between India as well as New Zealand, and there are highlights that have really been spoken about on how this mechanism will really work, where we have jointly announced a successful conclusion of the FTA agreement with New Zealand, where it will grant India zero duty on 100% of their tariffs. Let's take it across for more details.
We are pegging the access that we have granted, we are pairing it with the agricultural productivity framework in 3 main areas: kiwi, honey and apple. To give you a broad outline, the level of per hectare production in New Zealand compared to that in India is over 5 times. So we thought it essential that since this FTA is about complementarities, we take from New Zealand what it is good at and pair it with something that we are good at. So this agriculture technology cooperation comes from that in 3 areas. We have accorded market access through quotas, further capped with seasonal imports into India, and MIP. My next slide will show the exact details of these quotas. Number 1 is Manuka honey. This is their iconic product. Current is 60%, 66% of duty. We've given them a quota of 200 metric ton, and it has a MIP of $20 and $30 per kg. Apples, our current duty is 50%. Our current imports from New Zealand are 31%. The quota we have given them is 32,500. It will increase to 45,000 in 6 years. Within this quota, they will get a 25% duty. Out of this quota, they go back to the duty of 50%. Once again, this is at a MIP of 1.25 per kg. Kiwi fruit, current applicable duty is 33%. Our current imports are 5840 metric tons. We start with a quota of 6250, goes up to 15,000 in 6 years. MIP of 1.8 per kg. And at this, it is 0% duty, and out of quota, it is 50%. So roughly, it will be half of 33%. All these three areas, New Zealand is giving us extensive agri-tech cooperation, covering plant management, planting, the orchard management, supply chains, packing, etc. The final quota that we have given in this FTA is on albumins, including milk albumins. The current import levels of New Zealand are around 3,500. We have given a quota starting with 1,000 metric tons. This will have a duty of 11%. Anything outside of this quota will continue to attract 22% duty. Just a pictograph showing the agricultural productivity arrangement with the nuances of how we have built it in. Gains for New Zealand in goods. Presently, our average is 6.2%. On entry into force, the average becomes 13.18% in terms of duty, and going on to the 10th year, it becomes 9.06%. India has offered market access in 70% of the tariff lines, covering approximately 95% of the current bilateral trade value, and approximately 30% of the tariff lines in India are in exclusion. The products which have been kept in exclusion are mentioned here. Full dairy, the whole dairy chapter is in exclusion, which covers milk, cream, whey, yogurt, cheese. Animal products other than sheep meat, vegetable products, sugar, honey, animal fats, arms, ammunition, gems, jewelry, precious metals, etc. This is a broad table showing the exclusions and what is it that we have given them against each category. Exclusions, I've already covered that. Tariff elimination immediate, where they have a reduction in tariff as soon as the FTA comes into force. These are typically for wood products, for wool, for sheep, meat, leather, raw hides. This was a huge demand of our leather industry here in India. Phased, what is phased over a period of time, which is petroleum oil, vegetable oil, etc. Reduction, wine, pharma, polymers, iron and steel, honey, apple, albumins is what is in quota, and this is what India has given to New Zealand. Services and mobility, key gains. This is a big takeaway from the FTA. 118 sectors have been given from the New Zealand side. This is EU plus because they have also given us audiovisual services. There is a special annex on health and traditional medicine services. In terms of mobility, a huge win for the students. There is no cap on the number of students going there. We have locked in at least 20 hours per week in terms of work rights for Indian students. So even if there's a local legislation which brings it down to 15, it still stays 20. Presently, I'll put it on the table. In November, they put in 25, but that is only there for a limited period of time. Post-study work visas goes up to 4 years in the case of a doctorate degree. Temporary employment entry, there is a quota of 5,000 visas. This again is something New Zealand has never given any other country. A comparator is China, which got around 2,000 visas. Work holiday visas is for 1,000 young Indians annually for a period of 12 months. India, from our side, has given 106 services and an MFN treatment in 45. Gains in other chapters for India. Number one, investment. New Zealand has committed to increase investment to 20 billion into India over 15 years and this is EFTA style, this comes with a rebalancing mechanism in case it doesn't get fulfilled. One thing I'd like to point out here, because for a comparison, from 2000 to 2025, New Zealand has invested roughly 90 million into India. So this is a substantive figure. We have got annexes on pharmaceutical and medical devices, which provides us expedited pathways, because now they recognize that if we have certifications from EU, UK, US, Canada, any of the regulators, then they will cut down the process for clearing our medicines, our medical devices. Presently, it takes 3 to 4 years there. IPR, this is another big win. They have agreed to amend their laws to give space to our GIs by making it in terms of EU parity. Organic primary products, we have entered into an interim MRA, and a more detailed one will be worked out. They will recognize whatever Australia has, with which we got a full MRA. Economic and technical assistance across all areas which the two countries can help each other, including audiovisual industries. We know that the film industry is big into shooting there, tourism, sports, etc. Custom and trade facilitation, one of the things we do learn through FTAs is how to improve our systems. This is a part of that. So in this, the Indian Customs and as well as that side has committed that 48 hours and 24 hours is what they will take to clear express shipment and perishable goods. MSMEs, a huge win, a cooperation from the New Zealand side on building linkages, incubators, and plugging in trade-related information. Rules of origin, once again, it's a balanced, robust framework. And the last, cultural trade, traditional economic cooperation chapter is what we have built in terms of pushing our Ayush, our culture, tribal affairs, and wellness into the New Zealand landscape. There are 7 side letters in the agreement. One is on wine, one is the working holiday visa, one is a comparable regulators which they have listed in pharmaceuticals, the other one which they have listed in medical, the letter on geographical indicators, and a side letter on MRA organics, and a side letter on consultations related to the dairy sector in the FTA. Strategic significance, very quickly, New Zealand helps us because it's a part of the Pacific Island country, and with the tariffs coming down, now our exporters can take advantage of a combined logistics, costing, and the combined economy of, let's say, Australia and New Zealand. By 2045, it is understood that they will have a huge demand of workers, and this is an opportunity for India to position itself as a key supplier for both skilled and semi-skilled workers. Pathways have been created for our Indian traditional medicine systems, that is Ayush. New Zealand, as a developed country, is part of many networks and organizations around the world, and our FTA with them helps us leverage that. There's a tariff preference for India.
All right, so those were the critical details on the free trade agreement that India and New Zealand have signed. But let's focus on Tech Mahindra as a stock, where Kotak Securities has reaffirmed its buy rating. My colleague Jasmeet joins in to tell us why. Tell us, Jasmeet.
Well, thank you for that. If you look at the overall IT pack, it has been buzzing in trade, and over that we have now Kotak Securities doing an hike update on the target price of a Tech Mahindra to 1800 from initially 1700. Now what they see is they see reaffirmed confidence in the company's goal to achieve the medium term as well as long term goals. They also see the stronger optimization on the growth going forward, as well as the management's target of reaching 17% of margin goal by FY27, 15% of margin by FY27. That's something which is reset by the management. Further, they also see enhanced project management capabilities of the company, which will be in focus and which help company to further expand their margin going forward, while they believe FY25 targets are achievable under the current management's tightened conclusions. So all in all, we see a positive momentum coming in for the stock as well. Even the brokerages stay positive on the same.
All right, Jasmeet, thanks so much for giving us all those important details. The stock definitely is in the positive momentum because of this buy rating. But we are out of time on this edition of Markets at 12. Do keep it with NDTV Profit. Thanks so much for tuning in.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
It's not keeping in mind only our richest passengers, it's also keeping in mind our entire passenger segment. We are very well looking at 10 years down the line. This is probably one of the most well-connected places in India. It's going to be a buzzing hub of economic activity.
2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
CDSL
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome, you're watching NDTV Profit. This is Profit Buzzers. I'm Mahima Vachrajani and with me is Sharad Dubey. Sharad, I think last few days of 2025 and we're seeing good gains in terms of where the Nifty 50 stands, at least today. And the question really here is whether the Santa rally is here to sustain or not, right?
It's the last two odd sessions, Mahima, the mid-cap, small caps have actually gathering pace as well. And now the hopes are actually coming that a Santa rally comes in. Just to give a definition of what Santa rally is all about, it's the last 5 trading sessions of the December month and 2 trading sessions of the January month, and that's the area which is called Santa rally.
Exactly.
So hopefully, fingers crossed, that markets will do well, going ahead, especially the broader indices. That's where the concern is coming.
Absolutely. Let's try to pull up, in fact, the Nifty 50 heat map and see as to how counters are faring right now. The advanced decline ratio, of course, is skewed towards the buyers for the entire Nifty 50, constituents. Let's try to pull that up if we can. There you go. This is the entire NSE that we're talking about, but the Nifty 50 heat map, if we can, try to pull that up. In fact, even if we take a look at the broader end of the spectrum, it's looking very positive. Of course, Shriram Finance topping that chart, followed by something like a Wipro, Infosys, doing fairly well in trade today. Shriram Finance on the back of the MUFG deal. Some counters that are seeing some profit booking or are in the red, includes counters like your SBI, you have Axis Bank, some banking names, in the red, but the advanced decline ratio, like I mentioned, is fairly skewed towards the buyers. Let's try to pull up the mid cap 150 and the small cap 250 as well. Broader markets, as Sharad mentioned, have now picked up pace. The mid cap 150 doing much better than the benchmark indices, almost at its day's high point as we speak, up 0.8%. The small cap 250 also up almost by about 1% and at its day's high point. But some specific names, Sharad, that you're probably looking at, in the wider end of spectrum, there are a lot of counters that are buzzing.
Correct. Mahima, the stock is Grow. Interestingly, JM Financial came with a sell rating.
Yeah.
And let's just pull up Grow. That has also been doing well. And order specific, this is something which I would like to talk about. Just pull up the Grow chart as well. You see there's an up move coming. Still stock is up 4%. And two segments I would like to mention. Last week also we had mentioned, especially the defense and the railway pack. If you can just pull up the Nifty Defense Index and some railway names also, all of them are doing well in the trade. This is the pre-budget trade which I've been speaking about, 40 to 50 odd days.
Correct.
And basically history does repeat itself, and that's what's happening. There isn't major any news flow coming in, but entire media and everywhere else there are a lot of news snippets comes whenever this budget happens.
True.
And remember, all these stocks are down.
Yeah, correct.
So any kind of a positive move, we'll see a good up move coming in. And I think now we are joined by Prashant Tapse. He's the Senior VP Research Analyst at Mehta Equities. A very good afternoon to you, Prashant. And the markets are doing well, and the hints of Santa rally has started. Even I am wearing a cloth which Santa wears. It's in the red color. But Prashant, looking at the key trades here, Nifty Bank, the setup looks good. Can we get that Nifty all-time highs back, just before December ends?
I think there is very high possibility of retouching the all-time high of 26,350, 330 levels. So I think the major contributor would be from the rupee, which is supporting the markets to sustain on a very positive zone. We have seen last 1 month how rupee has depreciated, and suddenly a 1% fall in the rupee is giving some kind of very strong push. Again, global markets are sentimentally positive. And as you said, even FIs may be on the holiday mood, so we will be missing the heavy selling pressure like 2,000, 3,000 crores on an everyday basis. Again, some kind of the New Zealand FTA agreement, which is giving some kind of support to Indian markets. India is opting for alternate business for every continent or every country. So technically also, again, I think 26,100 is a resistance. If we are going to close today, I think this week we have only 4 trading sessions except the Saturday, Thursday is a holiday. I think, yes, there is a high possibility for markets to trend and hit the all-time high again.
All possibilities of it hitting the all-time high on the Nifty 50 is what Prashant is expecting. Though Sharad is wearing the Santa color, but he's expecting the Nifty to be in the green. Yes. And touching the all-time high once again. The specific counters that are in focus on the back of order wins, you have some names like GE Vernova, where it's won a contract of around 2,500 megawatt terminal station. The order includes design, supply, execution of this 2,500 megawatt terminal session. The other one that is in focus is IRB Infra Developers, the company to act as a project manager for SPV, that is IRB Harihara Corridors for tolling operating works at NH 731 in Uttar Pradesh. The stock is up 2.3% as we speak. Soma Textiles is the other one that is in focus on the back of an order win. It's received a 281 crore order from Roadway Solutions India for construction work. The execution timeline is for the next 24 months. The stock is locked in upper circuit of 5% odd. Prashant, I'll come to you on these 3 names. Any of these names that you're liking in particular?
I think G stock looks very good for me. I think the way how the order book has been panning out, and I think this is the month where the December as well as the next 3 months we'll get a lot of order books for these kind of businesses, and valuations are, I think, expensive. But again, considering the ROCs and ROEs, I think this valuation can be justified. And even if you see Q2 as earnings, there is some kind of underperformance. I think we are expecting H2 would be a better than H1 for GE, TV and D.
Right, let's look at the acquisitions aspect also. A lot of spate of acquisitions also coming in. Prashant pointed out the order wins, but acquisitions are also important. Varun Beverages, they have acquired a soft drinks brand in South Africa. It's a 100% stake. It's called Twizza. And the acquisition is 1119 crore rupees. This valuation seems decent, right? 1.2 times trailing sales versus 7.5 for Varun Beverages.
And interestingly, Vari Energies also, let's have a focus. They are acquiring stake in United Solar Holdings, and the acquisition is at $30 million. Stock also doing well in trade. It's near its day's high level, up almost 2%. So they get kind of exposure in Oman as well. And also Fortis Health. There's another acquisition happening here. The company's arm will be buying a 125-bed hospital in Bengaluru. This acquisition is, the company's name is People Tree Hospital. It's in Yashwantpur. The acquisition will be worth 430 odd crore rupees, and there'll be another 410 crore expansion. The stock is up almost 2% odd. So on expansion front, especially Varun Beverages catches my eye highly. So the stock, especially on the technicals front, a lot of analysts have stayed away from it. Is there any contra bet for Varun Beverages? Here the stock is up 3%. Positionally, are we looking at some up moves more from here?
I think yes, the stock has been underperforming from last 2-3 quarters. We all know the reason why. Again, I think they are also trying to get into a lot of other countries, a lot of other products also. I think they are also getting into liquor business. I think I read somewhere in the market last few months back. So I think yes, obviously they need to do some acquisitions. They need to expand their business model out of India so that the growth remains intact. So overall, I think post this underperformance, and if this acquisition turn out to be a very EPS lucrative going forward, at least 1 or 2 quarters, I think this price looks good for an investor.
All right, okay. So that's the view with regards to where Varun Beverages is concerned. Prashant, overall, I mean, if you take a look at, some of these FMCG staple names, we've seen a turnaround in terms of where, the last 2 quarters are concerned. Fundamentally, that's the trend that we've observed, that now things have started to pick up for the consumption space. Of course, the government has done a lot to boost consumption, but going forward, the expectations are that the second half is going to be better than the first half. Any particular FMCG staple name that you're liking right now?
I think Dabur would be one stock one should focus more on in terms of volume growth as well as some kind of EBITDA margin growth. You rightly pointed out second half would be better post this GST benefit. I think the Federation chairman also mentioned a few days back saying that the GST benefit will not come immediately after a month of this discount. So I think it will take 3 months to 6 months to get into some kind of premiumization in terms of customers upgrade and all. So I think Dabur would be one stock I am very much bullish on for a short period of time.
Right, there's an important development coming in for Shriram Finance. The MD and CEO is speaking about their MUFG deal. Let's cut into it.
Chris Capital Private Equity, Cambridge Place, and Merrill Lynch. They were early investors. They would have exited over a period of time. We had strategic equity partners like Sunlam, TPG, and Piramal. Sunlam still continues for our insurance ventures, and so is TPG. Piramal Group also has some minority stake in insurance but exited the credit business. When it comes to divestment, we divested our housing finance company in 2024, which was taken by Warburg Pincus, and we have a vehicle buying and selling platform called Shriram Automall, where we have 51% partner car trade. With this, I'll ask Rajesh to take me.
Thank you, Parag. And we'll have a quick one slide background and the scale and size of MUFG. May I invite Itagaki-san to come and tell us about the MUFG side of it.
All right. First and foremost, good afternoon, everyone. Good afternoon, our media partners in India. I am Yasushi Itagaki, introduced. I am very happy to be a part of this media conference here. Just a quick introduction. MUFG is one of the Japan's largest financial conglomerate or group, with a history of spanning over 360 years. Our global network spans across 50 plus countries with over 2,000 branches. And I am in charge of this all global operations, 50 plus countries. Over the years, we have built a robust global network and capital base, strengthened by our investment in Morgan Stanley back in 2008, and over $15 billion in strategic investment.
Yes, so that's the management of MUFG and Shriram Finance talking, and that's near the day's high level as well. A strength coming in. The stock is up almost 5% in the day's trade, and we'll be getting you more details from this call as well. But let's move on to the railway segment. That has been doing really well in the trade with intraday gains and a notable pickup in volumes across the basket. Anushi joins us with all the details. Anushi, all the railway stocks up. How's the sentiment looking like, especially with the pre-budget trade on?
Hi, afternoon, Sharad. So, yes, as you mentioned that, a lot of these stocks are in focus today, and the focal points are very news specific for a lot of these counters that we are looking at. Jupiter Wagons right at the top, 15 times volume. 15% is kind of the intraday that we are seeing, and this is with 42 times of volumes over a 30-day period. RVNL, Texmaco, Titagad also seeing that 4 to 5% of an uptick, while volumes have traded anywhere between 2x to 3x is what we are seeing compared to its 1 month performance. Now, coming specifically to Jupiter Wagons, this is in focus after the promoter has bought 28.7 lakh shares, which represents about 135 crore of stake in the company, with which the promoter shareholding increases to 19.2% versus 18.7% earlier. So this is a huge positive that the street is seeing, with more promoter buying now in focus. Coming to Texmaco Rail, here the board has approved sale of 31,500 shares of its arm, Panihal Engineering Udyog, with which it will cease to be its wholly owned subsidiary. Coming to Titagad Rail, now here, while the stock is seeing an uptick today, actually a negative note came out wherein Morgan Stanley had downgraded the company's rating to equal weight from overweight, cutting its target price in fact to 771 versus 1,117 earlier, citing that freight business will continue to be a key growth driver and not the passenger rail segment. Last one in focus is RITES, and this is after the company has signed a MOU, that's a Memorandum of Understanding with Botswana government, and this is for development modernization of transport infra in Botswana is what we are seeing. So this is the reason why a lot of these railway counters are buzzing in trade today.
Okay, Anushi, thank you so much for getting us those details with regards to all of these railway names. Prashant, I'll quickly come to you. Of course, Anushi mentioned a couple of reasons, stock-specific reasons as to why they are buzzing. Sharad was also mentioning earlier as to how railway and defense counters have, started to buzz just before the budget is announced. Any particular name that you're focusing on in this entire railway pack?
I think those stocks, one would be RVNL. I'm very much positive the way they are into the infrastructure, rail development. Government is also focusing more on to develop a lot of the city-based or state-based railway stations. So I think that will get a lot of order books going forward. Maybe by budget or before budget, there will be a lot of order books which are going to flow into the railway sector. And RVNL is a good stock right now. Technically, the stock has underperformed. Fundamentally, also valuation looks very good at this point of time.
Okay, all right. So that's with regards to where RVNL stands. But viewers, it's time to step into a very quick break. We'll be right back. Lots more lined up on the other side. So do stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
It's not keeping in mind only our richest passengers, it's also keeping in mind our entire passenger segment. We are very well looking at 10 years down the line. This is probably one of the most well-connected places in India. It's going to be a buzzing hub of economic activity.
2025 has been a tremendous.
Welcome back to Profit Buzzers, and let's pull up the nifty IT pack. They have been doing really well, and this is a fourth straight session. We are seeing, a strong buying happening across this segment. And today, also, let's pull up Infosys, TCS, Wipro, HCL Tech. Most of the stocks are in the green as well. To give us the reasons why IT stocks are in focus on the back of high trading activity, Jasmeet joins us. Jasmeet, what are the reasons we are gathering for the IT stocks to actually, of course, just stay put. Jasmeet, will be coming to you. We are joined by Shrimi. She's asking a question on Shriram Finance, which we had stated earlier, and the call is live right now. Shrimi.
Dilution, when promoter dilution appeared relatively lower.
See, basically, when you plan capital, you plan for a long term. It is not planned for a very short term requirement. So when we are planning for a very long term share capital or equity requirement, we plan for two different ways. I can go to retail, or I can raise QIP, or I can have a partner who is strong enough, big enough, so that I can walk a long way. So we felt that it is better we look for a very long term and walk a long way with a partner, and therefore we were looking at an institutional partner. And as our discussion progressed positively, then we came up with this proposal now. And the requirement, capital requirement, statutorily it is 15% in India. But we are also borrowing international funds. We have been raising bonds and syndicated loans from the international market. We have an international rating, and the international rating agencies prefer a 20% capital adequacy. So we were in the border already. So we had to plan for a long term, because international, when you go to market, they need a proper capital buffer, and that's the reason we planned it. And the second question, it is obvious. No, when you have when you have a partner coming in with a large capital, then the retail portion will, to the extent, comes down.
Of course. So since you now have a long-term partner as well, are you also planning to apply for banking license?
No, it's not a discussion at all. We have not talked about being a bank, and even MFG also, they want us to service our constituency. What is our constituency? We have been serving the customer who are underbanked and unbanked. We would like to remain there. So there's no point in becoming a bank and serving the unbanked and underbanked. So we would prefer to remain where we are, and we feel that there is enough and big opportunity for us growth. And also, since India is growing very fast, because last 2 quarters, if you have seen, the GDP growth is around 8% plus, and that gives us a large opportunity to do a retail lending in a big way. And we believe that there is enough scope in the constituency which we have built, that is vehicle and SME, to expand our AUM or loan growth.
Good afternoon, sir. Piyush from Business Line. Hi, Umesh. So you can also do financial inclusion by becoming a bank also. I mean, there's a lot of...
All right, that's the commentary coming in from the management. But let's go back to the IT stocks. Jasmeet, give us the reasons why IT stocks are buzzing.
Well, sure. Thank you for that. Before we get into the overall sector information of why this IT pack is buzzing, let's understand the stock-wise information. Infosys ADR hit a 52-week high in the NYSE, touching a $30 mark. Even today in trade, Infosys up almost 3% buzzing on the same volumes. While the 52-week high was on the back of low liquidity and algo trading, but the stock overall sees positive momentum over past few days. Now, if you look at the overall IT pack, what is like helping the IT grow is the rupee depreciation, which is helping the margin expand. Then we have the AI commentary, which has changed over time from narrative to numbers. TCS coming out and reporting the first AI revenue alongside HCL Tech. Further, the acquisitions which we are seeing alongside for HCL Tech and TCS again, where they're expanding their margins by inorganic growth as well. Further, we also saw Accenture earning coming in a very positive numbers with regards to the financial services, as Indian IT is heavy on financial services. So Accenture saw a good amount of booking in terms of financial services. That's something also helping the overall IT. Further, we have the option traders sitting and buying the IT, and as the IT is undervalued for almost 15% on Y20 basis, that's also something which is showing a very attractive valuation at this point in time. So these are the few reasons why IT is buzzing in trade today and sees momentum over last 4 days and few weeks as well.
All right, thanks Jasmeet for that. IT stocks and lots of, you could say, reasons he has pointed out. But Prashant, looking at the IT names here, anything looking good for the large caps for positional bet, and even in the mid caps, is there any interest, something like say a Persistent or a Coforge?
I think you pointed it right with respect to Coforge. Very much attractive at this point of time. The stock has still not performed well as Wipro or TCS or HCL has done. So in the large cap, I think HCL still looks good for me with at least 5 to 6% upside from the current levels. In the mid cap, Coforge looks very attractive.
Okay, all right. So that's with regards to where some of these IT names are concerned. But, the other pack of stocks that are in focus is the OMCs, because oil price volatility has been one of the top hot topics of this year. Oversupply and slow demand have been keeping the prices below expectations. But despite lower oil prices, Indian OMCs have been kind of crying foul over margins. Populist policies and higher excise duties keep OMCs sulking. Now, why this trend, and what would change going forward? Somit is here to illustrate that for us. Somit?
If you look at the last 1 month move for the oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL, they're down anywhere between 2 to 6% in trade, and this is despite the fact that crude prices have fallen nearly 8% from the recent peak of $64 per barrel and now currently trading between $59 to $60 per barrel level. Now, usually lower crude oil prices is positive for the oil marketing companies, given the fact that lower crude oil prices means higher marketing margin for them. And so why is it this time that there's an inverse relation that we are seeing? And this is largely because the street is now expecting that, given the fact that crude is trading around the $60 per barrel level, there could be an excise duty hike or a fuel price cut that could come in going forward if crude continues to remain on the lower level. Now, this is because, firstly, when it comes to excise duty hike, because there could be a fiscal slippage this year of around 35 to 60,000 crore rupees. This is as per what the brokerage is expecting, and this is every 1 rupee per litre hike in the excise duty increases the government's revenue by nearly 17,000 crore rupees. So this is the most easiest option for the government to make up for that fiscal losses. Now, why there could be a fiscal slippage here? Because of the GST rate cuts and because of the populist spending that the government has been doing during state budget. So both these factors could lead to a fiscal slippage. Now, why there could be a cut in fuel prices? Now, cut in fuel prices could be because since 2022 we have not seen any change in the petrol and diesel prices, but crude prices have fallen from around $94 per barrel to $60 per barrel. So there is a very high chance that there could be fuel price revision as well going forward. Now, what would be the impact of both of this? The impact of both of this is that oil marketing companies cannot pass on the impact to consumers, so they'll have to lower their gross marketing margin that they are earning currently, and currently they are earning a margin of close to 8 rupees per litre, and every 1 rupee per litre drop in the gross marketing margin lowers the EPS estimates for Indian Oil Corporation, BPCL and HPCL anywhere between 14 to 24%, and when it comes to EBITDA, the impact is anywhere between 8 to 13% on an annual basis.
Okay, so clearly the crude comfort is missing for a lot of these OMCs, plus a lot of factors also playing its part. Prashant, I'll come to you. Any of these counters that you think that despite of everything playing out could be something that you can take a bet right now from a slightly long-term perspective?
I think no, all the factors are still a concern for all the three marketing companies. If you want to just go out of this, I think Chennai Petroleum would be a better pick because the negativity would be very much different for those stocks. But again, despite having a lower crude prices, pressure from the government and chances of price reduction, will keep these three stocks under pressure.
Okay, all right. So that's the view with regards to where some of these OMCs are concerned. But viewers, it's time to slip into a very short break, but we'll be right back. Lots more lined up on the other side, so do stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
'25 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The Wall Street stays buoyant over global rally and US rate cut expectations as Nifty stays steady above the 26,100 mark. Broader markets continue to outperform benchmarks and all sectors trade in the green. IT and metals top gainers.
Gold prices surged to a record high, riding on growing expectations of further US interest rate cuts and strong safe haven demand, with silver and copper also joining the rally to hit an all-time high peak.
And Infosys shares continue to stay in focus after a volatile trading session in the company's American Depository Receipts, which is ADR, on the New York Stock Exchange last week. The company, however, clarified that there were no material events that required disclosure for the ADR surge.
Shriram Finance deal with MUFG gets brokerages thumbs up. Brokerages widely upgrade outlooks and raise target prices, citing strengthened capital adequacy, improved funding profile, and enhanced growth prospects. Management sees robust tailwinds going ahead.
And KEC International surges after Delhi High Court allows the company to bid on Power Grid Corporation. KEC will be allowed to continue participating in ongoing tenders, including those floated by the state-owned transmission utility.
India and New Zealand jointly announced the successful conclusion of the ambitious free trade agreement. FTA grants India zero duty on 100% of tariffs lines of New Zealand. In return, India will give tariff liberalization in 70% lines covering 95% of bilateral trade.
Welcome back to Profit Bazaars on NDTV Profit with me, Hiral Radia, and my colleague Mahima Vachajani. An interesting day of trade because a lot of individual counters that have been buzzing in trade as we speak. In fact, first up, let's quickly look at a few of the newsmakers that we're talking in trade, the ones which are buzzing. Overall, first up, we have Triveni Engineering. Now, they've gone ahead and launched 2 premium whiskey brands, and on the back of which, if you see a strong move coming in there, the stock is up at the day's highest levels with gains of 4% on that one. This is actually strengthening their footprint in premium and super premium whiskey segment, and that's the reason why the stock is seeing some smart moves. Apart from that, you have Apollo Micro. That stock is also up in trade, and this is because they've got a nod from DRDO for 2 distinct transfers of technology, and this will strengthen their capabilities when it comes to directed energy weapon systems. So on the back of this transfer of technology, a 5% up move coming in terms of Apollo Micro. Let's get in Prashant Tapse, VP Research Analyst at Mehta Equities, and we have Amit Bhuptani also who's joining in from Nirmal Bang. Prashant, let me come to you first. My first question coming to you is Triveni Engineering as well as Apollo Micro. Both of these stocks buzzing in trade. One is foray into IMFL, a launch coming in Delhi, and Apollo Micro on the back of the transfer of technology deed with DRDO. What would you advise investors to do with both these counters?
I think those both stocks were underperforming from last 2-3 months at least. So such news with respect to new launches as well as some kind of MOUs with DRDO, etc., that will give a lot of clear picture about the visibility of the earnings going forward. So I think currently when we see all the mid caps, small caps which were underperforming from last 2-3 months, so such kind of news will give some kind of benefit with respect to the business visibility. So I think very positive on both the stocks. I think can continue to hold for long term.
Okay. Amit, what are charts indicating? Would you play the momentum in today's session with the kind of surge that's coming in terms of markets, or would you advise investors who have the stock to probably sell and book profits?
No, we should hold the long positions. And here, if you look at the overall setup, Nifty has currently given a breakout of, and if you look at the stock perspective, also Apollo and Triveni both are looking very nice at this point of time. And on the defense pack, also we have seen that from last 1 to 2 months of trading session, there was some break and there was some retracement going on. But in today's session, there was a good momentum breakout in Apollo, and we are expecting more buying can be seen ahead while going towards 265, 270 levels in next 3 to 5 days of trading session.
Okay, all right. So that's with regards to where charts are concerned for Apollo Microsystems as well as Triveni Engineering. But it's time for trending in trade. Your snapshot of the stocks making the most noise today. Jasmeet is here with an entire list. Jasmeet, what is there on your list and what's causing the buzz?
Well, right, thank you for that. Starting off with the segment, I have NIIT in my list today. If you look at the particular stock movement over last 1 year, the stock is down 46%, is nearly halved. In terms of key financials, the top line remains strong, but the margins and the profits are fluctuating for the company. If you look at on the charts, the 50-day moving average and 200-day moving average, the stock is trading below that, showing a weak momentum over last 6 months and 1 year. But today the stock is buzzing in trade. Today touches the 8-month intraday high, almost up about 13.5-14% on the back of the strong volumes coming up.
Okay, all right. Thanks, Jasmeet, for getting us those details with regards to where NIIT is concerned. Prashant, I'll quickly come to you first with regards to this counter. Any particular view that you have?
I think H2 can be a better expectation with respect to the earning growth. So that is the one reason why I think the stock is getting into a very positive situation. After the underperformance of last almost 4 quarters from January till date, the stock has remained under pressure, both in terms of the earning growth as well as on the price action. So I think some kind of expectation, Q3 would be better than Q1. That is the reason why the stock is in buzz.
The other pack of stocks that have been buzzing is the stocks that are metal sensitives. Now, this is on the back of the gold, silver, copper rally that we've been talking about. Jasmeet, which are the counters that are buzzing on the back of this?
Well, if you look at the overall year, it has been more of the metal and the IT pack. Now, if you look at the metal segment altogether, it has been buzzing on the back of a lot of buzz in terms of metal prices. Now, if you look at the gold prices, something like Nifty Metal is up almost 21% over last 1 year. And if you look at the gold prices, they have hit a new intraday high of $4,401. And the stocks like Manappuram Finance and Muthoot Finance will be in focus. Well, this focus will come on the back of their asset value increasing, given they have the same value, but the risk also falling down. Something like Manappuram Finance is almost up about almost flattish, while Muthoot Finance is again flattish. Now, in terms of the other aspect, we have Hindustan Zinc also, while the stock is up almost 33% over last 1 month, while the silver prices are up over 34%. So any movement in the silver pricing is something that will impact the price going forward. The stock is up about 3.5% in trade today. If we look at the last counter, Nalco and Hindalco again will be in focus on the back of copper prices. Coppers have also hit a new high in the current months, where the prices are high almost by 8.23% over last 1 month. That's the reason why these two counters are buzzing in trade today, up about 4.72% for Nalco, and for Hindalco it's about 2.5%.
Okay, so that's with regards to where some of these metal sensitive counters are concerned. Amit, I'll come to you. Any of these names where charts are looking attractive, and if at all, you have a perspective on some of these commodities as well, gold, silver, copper?
Definitely, if you look at the overall Nifty Metal Index only, the breakout for this index is at 10,850 levels, and currently the setup on the long-term perspective is very much strong. So if we need to select any of this counter, we can take a bet on the metal front, and I am expecting more buying can be seen while going ahead. The counter that looks positive on the chart terms will be Hindalco. Hindalco is looking very much positive, not only on the technical front, but also on the derivative perspective. The chart is showing some strong data points, and we can expect the buying strength to be carried ahead towards the 940 to 970 levels. So Hindalco and Manappuram, both these counters are looking positive at this point of time.
Okay, so, Hindalco and Manappuram both looking positive here. Another pack which is really buzzing in trade is the defense pack. Within that, shipping stocks are in focus as well. Pull up all the three names, from a Mazgon dock to a Cochin shipyard to a, Garden Reach. Strong moves coming in there. Jasmeet again with us, who's standing by to tell us what's happening there. Jasmeet, over to you.
Well, thank you for that. See, all the stocks have been beaten down in trade over last 1 year, and we see recovery coming in this particular month for the stocks. If we look at all three stocks, they're buzzing on the back of volumes. Now, something like Mazdoc is currently trading twice the 20-day average for their trading value, while in terms of the trading aspect, it has hit the biggest intraday gain since month of June. Now, something like Cochin Shipyard is buzzing again on the back of volume, where it's trading at 4 times over the 20-day average volume, and in terms of the current trading value, it's still down 36% from the all-time high basis. So we see recovery coming in this aspect. Well, lastly, in terms of the Garden Reach, the stock has advanced 54% above the 20-day average. That's why the buzz in the stock on the back of the volumes. And even this counter is down almost 31% since the all-time high of the stock. So we see some recovery coming in all the shipping company stocks in trade today.
Prashant, any view when it comes to defense and shipping as a whole? Because this year has somewhere, not really done much for defense, but if you see in terms of the last leg rally, pretty good overall. Now, the key is going to be from here on what the defense spends are going to look like. There was an expectation that there would be a supplementary, grant that would be given, but it's nearly not come through for defense. Eyes are when it comes to the budgetary spendings as well. So is this a pre-budget rally that you're seeing when it comes to defense, and would you advise investors to look at them?
I think yes, on a trading perspective, it is just focusing on the pre-budget rally. And again, after the long underperformance of the stocks, all the three, Mazagon, Cochin, as well as GRSC, I think some kind of volume trades with respect to the underperformance in the price action. But again, yes, I think order book would be a new thing which investors are trying to think about before the budget. So I think government is going to have a lot of allocations towards defense as well as shipping as a sector. And even I'm expecting some good news from the recently put in meeting which was held in India. I think by year end or the first week of January, you may see some kind of news based on shipping industry in India with Russia.
Okay, so that's with regards to where shipping companies go. The other two stocks which are buzzing in trade, HCC as well as Sterlite Tech, are also in focus. Jasmeet, what do you have for us in terms of these two names?
Well, something like HCC, we see the stock is buzzing on the back of rights issue. Company is doing a rights issue worth ₹1,000 odd crore. And as of last Friday, the subscription has received with 100%. They're raising roughly 1,000 crore for repayment of debt as well as for working capital purposes. And that's the positive news that the stock is buzzing in trade today. If you look at the overall issue size, it was 80 odd crores, raising with a per share price of ₹12.5, which is at a discount of roughly 55-60% from the current highs of 20 odd rupees. And that's the reason why the rights issue was 100% subscribed back on Friday. And that's why the stock is buzzing in trade today, up almost 8.5%. If you look at something like Sterlite Tech, while the stock is buzzing on the back of volumes, again, this counter has almost flattish over last 1 year, down over 10 odd percentage, and this stock has hit the June month's intraday high in terms of trading volumes of today, and trading stands at almost 19 times the 20-day average. So all in all, we see the stocks buzzing on the back of volume for Sterlite Tech, and something like HCC is trading on the back of rights issue.
Thank you for that, Jasmeet. In fact, this is an interesting segment that we have, which is trending in trade, in profit buzzers, which tells you everything that's happening in and around individual counters. Amit, looking at the shipping companies, HCC and Sterlite Tech, anything that you like on the charts?
Currently, both the counters are facing strong resistance on the upside level. Both the counters have retraced strongly from the upside level. So risk reward is favorable at this point of time. But I am seeing that the breakout for this both the counter will take time. The breakout for HCC is at 22.5. Once counter goes about 22.5 level, then only we will witness a fresh long positions in this counter. Till that point of time, counter is likely to remain in the range of 22.5 to 16.5. The major support for this counter is at 16.5. So whomsoever is holding the long position should place support at 16.5 levels. For STL Tech, 96 is a strong supportive level. For we should hold the long position with the support of 96 in STL Tech, and on the upside 118 is a breakout level. Once the counter goes above 118 level, then only we will expect some momentum in this counter. Till that point of time, in Sterlite Tech, there will be a range bound momentum while going ahead.
Okay, so that's with regards to a few of the counters which are trending in trade. But stay with us. We'll quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Woo! 2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get
Welcome back. You're watching Profit Buzzers here at NDTV Profit. Now it's time to take a look at the pump stocks that have gone from boom to bleed. Some of these stocks have gone from multi-baggers to reeling under margin pressure. Varsha joins us with more details on the key triggers for this and a closer look at some of these counters. Varsha?
Well, thank you so much for that. So we've seen these stocks going from multi-baggers to, seeing sharp pains when it comes to stock price. If you see Shakti Pumps, Oswal Pumps and Roto Pumps, all the three stocks are down when it comes to year-to-date returns. Now let's see what are the key reasons. One is of course the sector corrected after strong multi-bagger return in 2024. Then also there was a profit booking plus margin worries plus tender price pressure which has hit stocks when it comes to these pump companies. Talking about the major, I would say, reason why all these stocks have given a negative return. One is, if you see the solar panel prices fell sharply and these contributes almost 80% of solar pump system cost. And because of this, if you see all the lower panel prices had forced fresh tenders at lowest prices. And if you see the older inventory which were bought at higher panel prices did hurt margins for these companies. Let's analyze if in actuality were the margins of these companies were hit. If you see, if I were to talk about the margins for all the three companies, starting from March 2024 to September 2025, there you go. For Shakti Pumps, the margins have reduced from 25% to 20%. For Oswal Pumps and Roto Pumps have also reduced their margins from March 2025 to September 2025. Now, in the recent days, all these stocks were in focus. Let's analyze why Shakti Pump was in focus despite having pressure when it comes to business, business growth. So, the bounce was driven by multiple large Kusum order wins. The recent order wins of almost 443 crore order from Maharashtra, which needs to be executed within 60 days. Now, this order contributes almost the order size is equal to 61% of Q2 revenue. So sharp near-term revenue you can expect in Q3 and Q4. Now, talking about the Roto Pumps, why the stock was in buzz and in the last few days have given a good returns to investors. One is there has been a sharp increase in buying by promoters in the open market, and promoters buying has seen as a confidence signal when it comes to Roto Pumps. Stock has been reacting positively after sharp correction. Talking about Oswal Pumps, let's see, although there's not much returns that Oswal Pumps has given, but if you see, management is expecting margin recovery from Q3 FY26. Moving on, the order book includes 18,800 pumps, and overall the growth for Oswal Pumps also looks good when it comes to Q3, Q4 and for FY26 and FY27. So if you see overall, these companies have given a negative return year to date, but looking at the Kusum orders and the margin growth expectations leading to recovery in most of these pump stocks.
Okay, Varsha, thank you so much for getting us those details, and of course, an entire research on this pump stocks. Prashant, I'll quickly come to you. Any of these names that you think can see a good recovery from here on and could be a good bet for the next 1 odd year?
Despite having a larger order book in the books, again there are some kind of pressure which has been seen on the EBITDA level, and I think the reasons have already been mentioned. I would like to wait and watch for Q3 earnings. So once I see those some kind of consolidation in terms of EBITDA margins or some kind of comments post these Q3 results, then only it will be right time to take a good call on that. But if we compare both this, I think Oswal looks good for me at this point of time.
Okay, so that's with regards to where pump stocks go. In fact, Pharma Pack, that's also buzzing in trade today, from a Divi's Laboratories to Aloris, Pyramil and other CDMO players that are in focus. Varsha standing by to tell us more as to what's really happening and why this uptick. Is it something to do with the US, Varsha?
Exactly. So this is everything is about US Biosecure Act. Now we all know that what US Biosecure Act is US companies won't be working with certain Chinese biotech companies. Now the names have been revealed basically. So 9 US congressmen have formally requested the US Secretary of War to add Wuxi group of companies into the banned list. So what does this mean? So 3 companies are being flagged. One is Wuxi Aptech, Wuxi Biologics and Wuxi XDC. Now this entities, so US will, so according to the 9 congressmen, so they've formally requested not to do business with these or rather with Wuxi group. Now why this is important for Indian CDMO companies? Because if you see Wuxi group if you see is holds a massive significant market share when it comes to CDMO segment or CDMO market overall, and this group being banned from US, all the projects will come from US to India, and Indian CDMO companies will gain massively from these projects. Now to take a name, you have Divi's Lab, you have Cohen's Life Sciences, Sai Life Sciences, Promotional Pharma, Syngene International, Newland Labs. Almost every CDMO company will benefit from this new the requests that have been clarified.
Okay, thank you so much for that, Varsha. In fact, a quick question with Amit in terms of all of these pharma names. What are charts indicating?
If you need to select any counter, Glenmark Pharma is looking positive. At this point of time, counter has given a consolidation and breakout from last 2 days of trading session. The stock has shown some great strength from the volume front also. And the weekly chart, we are seeing that the rounding pattern formation is getting carried ahead. So we are expecting the target on the upside towards the 2100. So can create new long position at this point of time.
All right, so that's the view with regards to where some of these pharma names are concerned. In fact, if we take a look at as to how some of these pharma names have done in 2025, it's been a stock pickers market, of course, where the entire space is concerned. The Nifty Pharma Index is closing in a negative territory. Persistent US pricing pressure, tariff uncertainty and weak earnings from index heavyweights have dragged the sector returns throughout the year, is what we've seen. Overall, if you see, if some of these counters, something like a Torrent Pharma, which has been a safe harbor in the pharma space, which has been like a counter bet in the entire space. You've seen the Nifty Pharma, if you take a look at the calendar 2025 year, it's been a negative return of around 3% odd. Large cap weaknesses dominates the entire index movement is something that we've observed. But Prashant, I'll come to you on this one. A lot of these counters, as I mentioned earlier, it's been a stock pickers market in this space. Stepping into 2026, would you still be a stock picker in the pharma space? And if yes, what would your bets be?
Ultimately, one time the sector would be very much positive once the deal is done between US and India. But again, obviously, right, we cannot bet whole theme on pharma. There will be 2-3 stocks. Like we like granules a lot at this point of time. It's majorly focused on domestic business as well as some part of export. But again, granules looks very positive for us. Again, Glenmark also looks very positive for us. I think even that business model looks very good for me going forward. So these 2 stocks are highly focused under our in-house research. But other stocks like Dr. Reddy's also looks good. But again, it will be a very stock-specific, large cap as well as mid cap stocks.
That's with regards to where the pharma names go. Now, KC International is in focus, and all this while we were thinking there could be negativity because of the Delhi High Court order initially, but now they've come out and said that the Power Grid Corp's order has been kept in abeyance, and they've allowed the company to participate in ongoing bids as well, and that's the reason why the stock is up 5%. Anything, Prashant, that you would want to add on KC International? Is it a good buy?
I think yes, in terms of underperformance, the stock looks very good at this point of time. The valuations are a little bit comfort for me at this point of time. Why? Because they got the permission to even bid for the lot of projects going forward. I think H2 would be a better space for in terms of earnings growth, and I think that is taking part in the price action. So very positive on the stock.
Okay, all right. So that's with regards to where KC International stands. Another counter, just to give you as a perspective, Meesho is down by about 10% as we speak. Let's try to pull up the kind of listing gains since its listing that we've seen. But yeah, it's right now almost locked in its lower circuit, 10% as we speak. But with that, we're completely out of time on this edition of Profit Bazaars, but small cap bazaars on the other side. So do stay tuned.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
शौर्य और महापुरुषों की पहचान, किले और हवेलियों की शान,
संस्कृति और परंपरा का मान, राइजिंग राजस्थान, विकास की छलांग,
प्रगति पथ पर अपना राजस्थान, नया राजस्थान, विकास भी विरासत भी। NDTV राजस्थान पर 24 दिसंबर। The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me Soumit Sarkar and my co-anchor Anushi. Well, in the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. But first, let's see what's on the show today. Firstly, we'll be speaking with the management of Zota Healthcare. Now, the stock is up nearly 89% on a YTD basis, and recently the company has raised close to 350 crore rupees via QIP. The second stock on the show today is Centum Electronics. The stock has hit an intraday high of 15% on the back of strong volumes and because the company has closed down two of its loss-making subsidiaries. When it comes to HCC, that stock has been gaining in trade given the fact that the company's rights issue has been fully subscribed. And lastly, we'll be speaking about Knowledge Marine. The stock has turned ex-split today, and on the back of high volumes, the stock had hit an intraday high of nearly 17%. But firstly, when you look at the markets, the Nifty is at day's highest point. The stock index has gained more than 180 points, trading close to the 26,150 level, and these gains are largely led by Bharti Airtel when it comes to the benchmarks, followed by ICICI Bank and Shriram Finance. Apart from that, the Nifty IT index, that's up more than 2%, while the Nifty Bank index, that's up around 0.4% in trade today, Anushi.
Even a cause of bigger cheer would be something like small cap markets. Now we are seeing small cap 250 being up around 0.8% at this time of the day. In fact, 0.9% is kind of an uptick that we're looking at. A couple of stocks which are in focus. This includes Knowledge Marine, as Somit spoke about. Very high volumes is something that we are looking at here. On Friday, we had discussed about a stock called Neeraj Cement Structurals that continues to gain in traction, up over 14% in trade. Along with that, we have NEAT in focus, which is seeing a 13% of an upside. Saskintech, Idea Force, a couple of other stocks with higher volumes, and a 10 to 11% of an upside is what we are seeing. But on the other side, what is not working out so well is something like Devangri, this % in trade. Along with that, we have NEAT in focus, which is seeing a 13% of an upside. Saskintech, Idea Force, a couple of other stocks with higher volumes, and a 10 to 11% of an upside of a downtick. But coming to the management in focus is something like a Zota Healthcare. Now, if you just look at what's happened here, the company has raised 350 crore via its QIP, and this was with an issue price of 1,535 per share that we are looking at. In fact, we have the management with us, Himanshu Zota, the director of the company, joining us. Mr. Zota, let me start off this conversation by understanding about this preferential issue that is there. 350 crore is the size that we've seen. You received an approval of around 500 crore. Just give us your overall plan on how do you expect to use these proceeds from this QIP that we are looking at, and apart from that 150 crore, would there be another QIP that should be in focus?
So thank you. ओरिजिनली हम अप टू 500 करोड़ का हमने शेयर होल्डर अप्रूवल लिया था, लेकिन मैनेजमेंट ने सोचा कि दिस इज नॉट राइट टाइम, मतलब 350 करोड़ ही हम रेस करेंगे. सो हमने 300 करोड़ प्लस 100 करोड़ का ग्रीन शू ऑप्शंस से QIP ओपन किया था, और हमने 350 करोड़ का QIP सक्सेसफुली क्लोज किया है. ये इस फंड का हम प्योरली दवा इंडिया में ही यूज करेंगे. दवा इंडिया इज अवर प्राइवेट रिटेल जेनरिक फार्मेसी चेन, और जहां पे हम अपने स्टोर खोलेंगे नेक्स्ट 2 years में इस फंड से.
Right. When you mean you will use most of the capex towards Dawa India, which is your subsidiary or your segment, how many stores do you plan to open up?
So roughly 1200 से 1500 स्टोर इस 350 करोड़ से खुल जाएंगे in next 2 years.
Okay. और सर कितना रेवेन्यू पोटेंशियल होगा, या कितना रेवेन्यू अपटेक आप एक्सपेक्ट कर सकते हैं अगले 2 साल में जब ये सारे स्टोर्स ऑपरेशनल हो जाएंगे?
सो बेसिकली मैं रेवेन्यू का एसेस तो नहीं बोल सकता, लेकिन नॉर्मली मेरा स्टोर जो कंपनी ओन स्टोर जो कोको स्टोर होता है दवा इंडिया का, वो नॉर्मली फर्स्ट ईयर ऑफ ऑपरेशन, मतलब फर्स्ट ईयर में ये 2 से 2.5 लाख रुपया पर मंथ रेवेन्यू करता है. एंड आफ्टर 3 to 4 कोको स्टोर होता है दवा इंडिया का, वो नॉर्मली फर्स्ट ईयर ऑफ ऑपरेशन, मतलब फर्स्ट ईयर में ये 2 से 2.5 लाख रुपया पर मंथ रेवेन्यू करता है. एंड आफ्टर 3 to 4 years, मतलब एज ए मैच्योर स्टोर, इट विल रेवेन्यू विल बी गोइंग टू 6 to 7 लाख. मतलब ये पिक में जब 3 से 4 साल कंप्लीट होता है नॉर्मली स्टोर को, तब ये 6 से 7 लाख रुपया पर मंथ का रेवेन्यू पिक पे जनरेट करता है. सो हो सकता है ये 1500 स्टोर अगले 3 से 4 साल के बाद ये इस रेवेन्यू पे पहुंच सकते हैं.
सर, दवा इंडिया के अलावा और क्या क्या बिजनेस है जिसमें ये पैसे आप यूज कर सकते हैं?
मेनली तो दवा इंडिया ही है. जनरल कॉर्पोरेट पर्पस में भी हमने जीसीपी पे भी हमने कुछ पैसे किए हैं, ताकि हम कोई ऐसा कुछ प्लान करें कि कोई भी हम और कंपनी को बाय आउट करने के लिए या ऐसा कुछ कर सकते हैं. लेकिन मेनली हमारा ये QIP का जो पैसा है वो मोटा मोटी सारा दवा इंडिया में यूज होगा इन फॉर्म ऑफ कैपेक्स और ऑपेक्स.
सर, पिछले 2 क्वार्टर से आपका EBITDA पॉजिटिव रहा है, तो क्या आप सिमिलर ट्रेंड हम सेकेंड हाफ में और FY27 में भी एक्सपेक्ट कर सकते हैं?
यस, ये EBITDA पॉजिटिव हमने, क्योंकि हमारे पुराने स्टोर है वो काफी मैच्योर होना स्टार्ट हो गए हैं, जो कोको स्टोर, सो ये ट्रेंड यही ट्रेंड पे रहेगा और आगे जाके इसमें और बढ़ोतरी होगी EBITDA में।
तो सर हमें अगर सेकेंड हाफ का अगर गाइडेंस चाहिए इन टर्म्स ऑफ रेवेन्यू या फिर इवन प्रॉफिटेबिलिटी अगर हम देखें, सो व्हाट्स द पाथ अहेड क्या हम देख सकते हैं?
मतलब एसेट तो मैं एग्जैक्टली नंबर्स तो नहीं बता सकता, लेकिन ये इसी ट्रेंड में रहेगा। या जैसे फॉर एग्जांपल हमारा जो फर्स्ट 2 क्वार्टर में अच्छा खासा रेवेन्यू में इंक्रीज हुआ YOY, और इसी ट्रेंड में नेक्स्ट 2 क्वार्टर मतलब सेकंड हाफ भी इसी ट्रेंड में रहेगा।
ओके, एंड इसमें भी आपने बताया कि द फोकस विल बी इन दवाई इंडिया ओनली, 74% आपका रेवेन्यू वहाँ से आता है। बट आगे जाके आपके कौन से ग्रोथ प्लान्स हैं? मुझे जस्ट अगर रेवेन्यू मिक्स चाहिए 2 से 3 साल में, तो ये 74% ही रहेगा दवा इंडिया या कोई दूसरे सेगमेंट्स भी है जिसमें बढ़ोतरी हो सकती है?
नहीं, दवा इंडिया में ही रहेगा ये। आगे जाके फॉर एग्जांपल नेक्स्ट 2-3 साल में ये 74% का रेवेन्यू ग्रोथ है, ये बढ़ के हो सकता है 85 या 90 तक भी जा सकता है, क्योंकि आपने 2 साल पहले ये रेवेन्यू ओनली 30-35% ही थी टोटल रेवेन्यू का, जो आज बढ़ के लास्ट 2 साल में 74% तक आई है। तो अगले 2 साल में ये 85 या 90% तक जा सकता है दवा इंडिया।
सर, दवा इंडिया की कंपटीशन मार्केट में क्या जन औषधि केंद्र है, और अगर वो है तो आप कैसे उसके लिए कैसे आप तैयार हो रहे हैं और कैसे आप अलग रहेंगे जन औषधि केंद्र के सामने?
एज सच दवा इंडिया की जन औषधि हमारा कंपटीशन एज सच बोला जाए तो कंपटीशन है, और एज सच बोला जाए तो कंपटीशन नहीं है, क्योंकि जितने जन औषधि स्टोर खुल रहे हैं वैसे ही उतनी जेनरिक अवेयरनेस बढ़ रही है, और जितनी जेनरिक अवेयरनेस बढ़ रही है उतना ही मार्केट साइज बढ़ रहा है, और जैसे ही जेनरिक एडॉप्शन बढ़ रहा है, जेनरिक का मार्केट साइज बढ़ रहा है, तो कहीं ना कहीं उसका बेनिफिट प्राइवेट प्लेयर, एज ए प्राइवेट प्लेयर वी आर नंबर 1 आफ्टर गवर्नमेंट, सो इसका फायदा हमको भी मिल रहा है। मतलब ये वाइस वर्सा है, जितने जन औषधि के स्टोर खुलेंगे उतना फायदा ओवरऑल पब्लिक को भी होगा और दवा इंडिया को भी होगा।
आखिर में एक ही क्वेश्चन है मेरी तरफ से कि अभी आई बिलीव आप महाराष्ट्र, वेस्ट बंगाल और यूपी में ज्यादा कॉन्सेंट्रेटेड है, तो कोई और नए स्टेट्स आप एक्सप्लोर कर रहे हैं जहां पे आप ज्यादा दुकानें ओपन कर सकते हैं?
या सो नेक्स्ट 2 साल में हम इसी टेरिटरी को और एक्सपेंड करेंगे। फॉर एग्जांपल वेस्ट बंगाल है तो वहां से हम आसाम की तरफ, ओडिशा
में ओपन कर सकते हैं।
या सो नेक्स्ट 2 साल में हम इसी टेरिटरी को और एक्सपेंड करेंगे। फॉर एग्जांपल वेस्ट बंगाल है तो वहां से हम आसाम की तरफ, ओडिशा और झारखंड में पेनिट्रेट करेंगे। यूपी है तो यहाँ से हम यूपी से पैरेलली बिहार में पेनिट्रेट करेंगे अगले 2 साल में। सो वी आर कंप्लीटली फोकस ऑन that area.
ओके, अगर आपके टोटल स्टोर काउंट को ले तो वो 2055 या ऐसे कुछ था सितंबर एंड तक। मुझे जानना है इसमें से कितना प्रतिशत मैच्योर स्टोर्स का पोर्शन है, कंसिडरिंग कि उसमें 20 से 25% के मार्जिन्स है। सो जस्ट वांट टू अंडरस्टैंड कि जैसे जैसे समय के साथ आपके स्टोर एक्सपेंशन बढ़ेंगे तो मैच्योर स्टोर का प्रोपोर्शन कितना रहेगा और उससे फिर मार्जिन्स में कैसे इंप्रूवमेंट आएगी?
So as on 31st September, we have a 2055 total store. उसमें से 1200 स्टोर कोको थे और 850 स्टोर फ्रेंचाइजी ओन थे। सो 1200 स्टोर में से ऑलमोस्ट 1000 स्टोर तो हमने लास्ट 18 मंथ में ही डाले। सो रफली 150 स्टोर अभी करंटली 150 स्टोर मैच्योर लेवल पे है। ये अगले 2 साल में ये जो 1200 स्टोर है अगले 2 साल में मोर देन मतलब मैच्योर स्टोर पे आ जाएंगे। सो मैं अगर गाइडेंस की बात करूं तो नेक्स्ट 3-4 साल में ये 1200 के 1200 स्टोर मैच्योर लेवल पे आ जाएंगे, और मैच्योर लेवल पे नॉर्मली स्टोर 25 to 30% स्टोर लेवल EBITDA बनाता है।
ओके, सो अगर आपके अभी 4 to 5% के मार्जिन्स है जो मैं ओवरऑल देख रही हूँ लास्ट 2-3 क्वार्टर्स में, सो अगर ऐसे आप बॉल पार्क फिगर दे सकते हैं कि अगर 2 साल में जैसे आप बोल रहे कि स्टोर्स ज़्यादा मैच्योर होने लगेंगे तो ये 4 to 5% ऑफ मार्जिन्स कितने % तक आ सकते हैं?
ये अप टू मतलब इसका पीक लेवल पे ये फॉर एग्जांपल ये सारे स्टोर अगर मैच्योर हो जाते, करंटली जो हमारे 1200 स्टोर थे ये सारे के सारे स्टोर अगर मैच्योर हो जाते तो ये पीक लेवल पे 25% तक EBITDA मार्जिन जा सकता अप टू।
Thank you, sir. Thank you for joining us and giving us the way forward for Zota Healthcare. With that, let's also welcome in Avinash Gorakshakar. Avinash, you heard the management. For the last 2 consecutive quarters, the company has been reporting positive EBITDA. They are expecting this EBITDA number to further grow going forward. So at current valuations, is it a good buy, Zota Healthcare?
I think, Somit, my sense is that most of the companies which make QIPs, we find that obviously after the QIP is done, there is some price correction, and I think currently the stock looks to be fairly expensive, although growth prospects look very encouraging. So I think it's better that we wait for the December quarter number and then take a call. I think investors can probably get a chance to buy this share, which has good long-term prospects at slightly lower level. So I know at that point of time, the risk reward would be better, because looking at the management, the mature stores would take at least 2 to 3 years to contribute to roughly about 7-8 lakhs revenue per month. So, it's still a long way. So I think, most of the improved profitability would come beyond FY28. So maybe after the December quarter, one can definitely take a fresh review. But I think it's a hold from our side.
Shifting focus to the defense company Centum Electronics. Now that stock moved up nearly 15% on an intraday basis. Currently it's up around 8%, but this is largely on the back of strong volumes. Firstly, volumes were nearly 5 times its 30-day average. But the more important news, in fact, what Jasmeet was highlighting is the fact that the company has shut down 2 of its loss-making subsidiaries, right, Jasmeet?
Well, absolutely. Someone has rightly said the stock is buzzing on the back of this recent news where they have shut 2 of their Canadian subsidiaries. Now, given the shutting of the subsidiaries, we see that the losses to come down going forward, as this were creating loss for the company. If you look at the overall turnover for the company, both of them together impacted by roughly 7% and the loss contributed by them in FY25 stood at 51 odd crores. Even if you look at the Q2 numbers, right, the Q2 numbers have seen a good growth of revenue, but then EBITDA and net loss for the company is something that's really highlighting. And as per management Q2 highlights, we see that the consolidated profitability is held back by the overseas subsidiaries, which they plan on closing as per the Q2 and which they have already shut. And that's the reason why the overhang of the stock is gone and the stock is up almost 8.5-9% in trade today. So going forward in Q3 and Q4, we'll be something to watch out. How does the overall EBITDA margin and the profit turns out for the company, and will this really change the game for the stock, as the stock is up almost 10% over last 1 year as well?
Right. Avinash, at the current valuations, is Centum Electronics a good buy, given the fact that all the defense stocks have corrected from their higher level, and given the fact that company is shutting down 2 of its loss-making subsidiaries? Is that should one look at it positively?
Yeah, definitely, Somit. This news is positive because clearly, 50 crores loss from overseas subsidiaries means that hopefully from the third and the fourth quarter, these losses are not going to come on the books as of now. We'll have to find out what kind of one-time loss the company has booked on disposing these subsidiaries, which I think will be clear in the third quarter numbers. But I think, buying the stock at a 8 to 10% upside actually leaves a little less room of comfort. So my sense is that let the news settle down. And I think let the December quarter come in. I think you will get better clarity on the order book and the kind of one-time loss which the company has booked here. Because obviously, if the company has disposed these subsidiaries, they have been disposed possibly at a cost less, price, and that definitely will be booked in the company as a one-time set-off. So it's better to wait and hold for some time, and then I think maybe if the price corrects, definitely a good opportunity to acquire this defense company.
So that's the view regarding Centum Electronics. To keep that one on your radar. But Avinash, stay with us. We'll be rightly back after a short break. So don't go anywhere and stay tuned to NDTV Profit.
शौर्य और महापुरुषों की पहचान, किले और हवेलियों की शान,
संस्कृति और परंपरा का मान, राइजिंग राजस्थान, विकास की छलांग,
प्रगति पथ पर अपना राजस्थान, नया राजस्थान, विकास भी विरासत भी। एनडीटीवी राजस्थान पर 24 दिसंबर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Welcome back. You're watching Small Cap Bazaars. Before we move on to our next stock, first let's speak to Sharad and understand what's been buzzing in the F&O segment.
Well, since our last update at 10:45, we are seeing a up move actually sustaining in the markets, and now, of course, above the key levels. Look at the numbers: Infosys, Bharti Airtel, Tech Mahindra. The buying has intensified in this counter. It's likely that basket buying is happening. We have to check the delivery data. Of course, today not much when it comes to the losers front, but net the day is showing a good strength coming in, and of course, some hope of a Santa rally also. Let's pull out how the contracts are actually working when it comes to Sensex, and largely we see the action has moved. The futures has touched the 85,500 odd levels mark, and the bullish sentiment is slowly turning into a strong call as well. But the VIX levels is still, on a very lower levels, so options work is still on the lower side. But the BankX also, the story remains the same. Just remove SBI from the analysis. We'll see have participated in this up move. We could just show the other stocks also in the BankX. And yes, that's the pain coming in, which I mentioned earlier, and that pain is still sustaining in the markets. And these are the contracts on the screen which you should be tracking. Also, let's see the stocks, how the changes have happened. Long build-up continues in Mazgaon Dock and Solar Industries. Defense names, pre-budget buying theme, keep that in mind. Also, the short covering coming in for RVNL and Piramal Pharma, and this list, the railway stocks, keep an eye on them. Long unwinding also, there are a couple of candidates. Samman Capital and Oberoi Realty comes in, but not so much convincing to actually put in a trade. And last is your key short build-up happening, and that's happening in AB Capital and Hero Moto, but not much. But Hero Moto is something you should be looking at. Recently, there was a downgrade also coming in from a broking house. So these are the important stocks which are buzzing in the F&O space.
Well, thank you, Sharad, for that F&O snapshot. Moving on to HCC, that stock remains in focus as its rights issue gets fully subscribed before time. Let's get in Jasmeet with more details on the same.
Well, thank you so much. As rightly said, the HCC is buzzing on the back of the confidence that we have seen from the investor side. The company is raising roughly 1,000 odd crore by issuing 80 odd crore shares. And as of last Friday, we see that the subscription is already achieved by 1.1x, and the company has received proposal for 93 odd crore share. That's roughly 13 crore more than how much they wanted to right issue. Now, in terms of this rights issue, the use of this particular proceeds, the company sees to use this in terms of investment in the joint venture, while they also see of clearing few debts going forward. And the investment will be also used for working capital management, which is creating an overall buzz in the stock, stating that this rights issue could lead to positive up move in the top line and margins going forward. If you look at the issue price for this particular counter is at 12.2 odd rupees, which is at a discount of 40 odd % on the current level. That's another reason why the rights issue was subscribed with a 100% level. Now, in terms of the Q2 numbers, we see a very weak set of numbers coming for the company. We see revenue is down, while the margins have also suffered by 200 basis points in the previous quarter. In terms of net profit, even that is about 25 odd %. But the order book still remains healthy. Something to watch out for. How does the overall order book play out for the company? As for Q2, the order book stands at 13,000 odd crores for the company. So all in all, good set of reaction in the stock we can see, but it's still wait and watch. How does this side issue actually creates the positive up move that the stock is expecting going forward in the top line as well as in the investments that they're going to make?
Right. Avinash, HCC, the rights issue has been oversubscribed. How are the prospects, forward-looking prospects looking like?
No, I think, Somit, as Jasmeet mentioned, the order book visibility continues to be very strong. And I think, the bigger challenge for HCC was access to working capital. I think make these projects operational, they wanted working capital, and I think you could see some benefit of this coming in the fourth quarter. So possibly, now the money has come in. We could see a better traction, in the fourth quarter, and I think investors who can take a call for the next 12 to 18 months can be rest assured that execution once working capital comes in can be definitely be done at a faster pace. So maybe at these levels also, if somebody wants to take a kind of a investment decision, say around 18, 19 rupees, this is not a very expensive share, but at the same time, it's a very strongly beaten down company. So once quarter four numbers come in, I think you would see a good bounce back on the company. And I think definitely this could give a decent risk reward for investors who have got a 12 to 18 month kind of time frame.
Okay, so that's regarding HCC. Coming to another stock which is in focus is Knowledge Marine and Engineering Works. Now here the stock has turned X-split today, hence we're looking at that reaction if we just take the 1 week chart in account. But stock did mark an intraday high of around 17% with volumes of over 2 times compared to its 1 month average. Now the stock has been in focus on the back of its order wins. Recently it won a 58 crore worth of an order from Dredging Corporation of India, and this is for rock dredging at coastal port at JNPA port that we are looking at. Order to be completed in the next 3 months is what we are seeing. If you take the order book in context, the balance contract value stood at about 1,008 crore, while the awarded contract value, that's the order wins, that stood at about 1,180 crore or so. Do note that the company expects to convert more than 50% of its bids in pipeline, and it expects a minimum growth of 30 to 35% with margins at 35 to 40% is what we are looking at. The company also has a capex plan of around 600 crore lined up for the next 2 to 3 years. Just if we take the second quarter numbers in account, revenue is down about 4%, while margins also saw about a 26 basis of contraction to 39.8%, while net profit saw about a 8% of a dip. Avinash, coming to you on this counter, the main focus here would be on execution. What do you make of this?
No, I think, Knowledge Marine, right from the time it got listed, it's a very large private sector player in the private dredging space and competes with the PSU Dredging Corporation. So I think, in terms of order book execution, they've been doing pretty well ever since they went public. And I think the management bandwidth has been quite strong. They know the business very well. And I think that is why we have seen a lot of marquee investors like Ashish Kachole also, entering this company long time back. So now the stock has come to the main board. Our sense is that you will see a lot of institutional and a lot of marquee investors getting into the stock. The split will further create a lot of liquidity for the stock. Overall, I think the order book will be executed in the time given by the company. And I think, the market opportunity for the marine sector, specifically the dredging opportunity, is very large. So to that extent, I think Knowledge Marine definitely should benefit. I think one could definitely add on dips. Today, the stock is up by 15%. So, at these levels, I may not suggest you to buy immediately. But in case the stock corrects for some reason, I think it's a good opportunity to add it to your portfolio.
Right. Avinash, I wanted to check with you on Taj GVK as well. Over the weekend, the announcement that came in where Indian Hotels is exiting by selling it to the founder. They are selling at a price below the current market price. So, being an investor in this counter at the current value, is it a good time to exit or should they continue to hold?
No, I think, frankly, one would have expected a premium given to the promoter, but I think this is one news which the market would not like about. But overall, the hospitality space, Somit, is doing pretty well. And I expect that October to March would be a very decent period, both in terms of, the average room prices as well as the inventories. Taj GVK has a very unique and a niche positioning. And they have been showing decent amount of profitability in the last 2 to 3 years. So as an investor, I think one can hold on. This news is not going to actually result in any panic sell-off. But I think clearly this news about the promoter getting the shares at a discount is something which the markets would not like. Typically, in a deal, the market would have expected a decent premium because it's an existing profit-making company. But nevertheless, based on fundamentals, one can hold on.
Lastly, NIT, that stock is up 13% in trade. And if you look at the volumes, they are nearly 53 times the 30-day average. Anything on that front, anything that you're hearing?
So, Amit, I think some corporate announcement could be around the corner. Typically, you don't see 12-13% moves in a single day. And the stock has been, very silent for a pretty long time. So I think some corporate announcement could be forthcoming. And that is the reason the stock is, in a bigger spike today. We've not heard anything latest on the stock as of now. So we continue to be positive. But on this spike, we'll like to get, little more clarity from the management.
Okay, well, thank you so much, Avinash, for joining and sharing your outlook on all of these small cap stocks that we've discussed on the show. But with that, it's a wrap on this edition of Market Cap that we are seeing of small cap buzzers that we are looking at. But do stay tuned. India Market Close coming up next.
शौर्य और महापुरुषों की पहचान, किले और हवेलियों की शान,
संस्कृति और परंपरा का मान, राइजिंग राजस्थान, विकास की छलांग,
प्रगति पथ पर अपना राजस्थान, नया राजस्थान, विकास भी विरासत भी। एनडीटीवी राजस्थान पर 24 दिसंबर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Woo! 2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves...
We wanted to have a long-term plan. We did not want to have a short-term plan, raising capital frequently. And since we were already at 25.3, we had to have a long-term partner to remain with us for longer. And that's the reason we have raised. And when we have a strategic partner, when a large institution is coming, you can't be doing a small ticket or small equity raise. Therefore, we made a large one.
But during the press conference, you did mention about that you are expecting a rating upgrade after this deal. What is the expectation there, if you could throw some light on that?
Basically, if I look at my rating upgrade, post the merger of the STFC and SCUF, when we became SFL, we were hoping that a combined balance sheet and the diversified portfolio will give us a rating upgrade. And it was taking its little time, and then we felt that probably now with the balance sheet getting very strong, it will be a very strong case for the rating upgrade. See, one thing is there are two things here. One, strong balance sheet itself will give us an advantage on cost of borrowing. Because the lenders will feel more comfortable with a company with a strong balance sheet. Second, rating upgrade. So there are now, we have two things to talk to my lenders, so that the credit borrowing cost coming down is steeper than what it is normally if it all had upgraded to AAA rating.
So how that the promoter shareholding after this deal, especially given the fact in mind that we are seeing the retail shareholding dilution as compared to promoter dilution, it's relatively low. So how that ratio would be post this deal?
It's basically what happens is when a 20% gets added, the promoter stake is coming to 20.3, the new shareholder is 20. And the retail comes down as an overall portfolio. So it is just a mathematics number. So it is not that retail number is coming down. The proportion of retail is coming down because of the new addition of capital, which is a 25% addition. To arrive at 20, you need to put 25%.
If you could share the timeline as well, that when we could see the capital coming in, what is the timeline in the mind to seal this deal? How much time it will take?
See, basically we are going to apply for RBI approval and CCI approval. So we have kept 3 to 4 months as the timeline and the broader terms. It can come early also, because now I have seen the regulator and government are very much pro-business, pro-active in supporting the business. Supporting the business. They want to see the India's growth story to continuously to keep growing. And last 2 quarters you have already seen that Indian GDP has grown 8%. Keeping that momentum really helps.
So, given NBFC sector in mind, there are a lot of steps government has taken in last few years and measures probably that how to boost this particular sector. Is there any expectation from your end, from the government side, especially since budget is upcoming? So is there any kind of expectation from the government you are pushing, or you want government to sort of implement for the overall sector?
I believe that government is doing, the government is really doing a lot of things to build infrastructure, to bring down the logistics cost, so that India can become the export hub in the long run. What I believe that government has to do is build a sufficient infrastructure in the rural India. Because rural India, if you look at the agri-based income economy, around 65% of the population is involved in agri economy, which has 15% GDP. Definitely, the more people getting out of the dependence on agriculture and getting into some other activity or businesses or self-employment will definitely help the GDP growth to become much better. So rural infrastructure, rural job creation, is very important, and that will also help us because we being in the rural India, we can grow our business much faster.
With this synergy with MUFG, could you please also elaborate a bit what kind of innovation and technology they are bringing on board and how you getting benefited out of this deal on that front?
See, we are not really discussed much on what kind of a technology coming to the Shriram or to India. But we have seen their investment into various countries. They have invested in Vietnam, Philippines, Indonesia and Thailand. And they have also invested in Morgan Stanley. But what is very important for us is Asian countries. Their investment, and they have built a robust technology platform. That should really help us in learning their experience. So what we can do is we can learn from them and try to get it into India if that is really helping us to grow our reach much faster.
Assuming that this is quite a big deal for this year itself, so if you could also give some outlook for, asset of return for FY27, is there any estimation you arrive at as far as, asset going forward in FY27 is concerned, return on asset?
Yeah, we have for this financial year, I don't really see a big change. We have been growing at around 16-17%. We should end up at 17% AUM growth for this financial year. But next year onwards, we expect to grow at around 20% year on year for next 4 to 5 years, because we believe that the strong capital base, lower cost of fund gives a lot of advantage for us to grow much faster.
Last question on the banking license. Of course, I asked you also during the press conference, but with a long-term strategic partner you have in place, are you not planning on those direction to have a banking license to enter into banking space?
See, you are a lender, whether it's a bank or an NBFC, you are a lender. But when you are a bank, you have to have multiple activities. Yeah. Savings bank account, overdraft facilities, forex, so many things are there.
Absolutely.
So we have no knowledge on the same. MFG definitely has a knowledge in other countries. So right now they have liked our business model of being NBFC, our ability to reach to the customers, and our constitution. Our constitution is basically vehicle financing, asset-backed lending, and creating a sustainable income. So that they liked. So they have been they are partner with this move now. So as we progress, then probably we have to look into whether we need to create a separate structure, infrastructure, or not. So right now we are not discussing that at all. They are very comfortable, happy being in NBFC, investing in NBFC.
Absolutely, and I think there's no immediate plan. That's the wrap of this insightful conversation. Thank you so much for speaking with NDTV Profit, sir.
Thank you.
Well, yes, that's the management for Shriram Finance, and the story continues. Its stock is up almost 5% Mahima. And to give it more flavor, I think Anushi is joining us. That's also a stock of the day. Anushi, what are you gathering from this entire setup? You know, the brokerages have been bullish, the management has been also good, and looking at the commentary from even MUFG, it looks like the partnership is there, it's just limited to the company itself. They are not going after any other Shriram Group entities. Correct. So Anushi, anything else we are gathering from here?
Well, it's a very positive commentary that we are seeing, and overall this deal is also something that the street has been excited about. So what we've seen is, of course, the stock has seen a 40% of a run rate in these last 6 months only, and in this 1 month also it has seen about a 13% of an uptick. If you just look at what has led to the surge, of course the deal is something that the whole street is talking about, it being one of the largest. Now MUFG has invested over 39,000 crore for around 20% stake in the company, and this is a leading financial company that we are seeing in Japan. So with this, MUFG will be subscribing to over 47.1 crore shares at the rate of 840.3 per share is what we are seeing. Coming to the benefits of this deal, what we are looking at is this deal is expected to boost the long-term fundamentals of the company and will also increase the cost of funds as well. And with this, it is expected to unlock synergies as well in technology, innovation and other fields that we are looking at, valued at around 1.9 times FY27 3.7 book value is what the number we had come with this. Now coming to the overall conference that had happened and what Shriram Finance had to say on this, they say that post infusion MUFG will be classified as minority shareholder and the control over board will remain with Shriram Finance. In fact, post-deal focus will continue to be on the vehicle finance side that we are looking at, with enough scale and opportunity to focus on vehicle finance business is what we are looking at. So that is on the existing line of business that we are seeing. They also said that capital adequacy will strengthen to 31% versus 20.6% in September of 2025, and rating change may result in this 50 to 75 basis points of reduction in credit cost. That's what the street is most excited about. Coming to what the brokerages make of this, if we just pull up that table, Morgan Stanley, Jefferies, Citi have all a buy rating on this stock. They are seeing a potential upside of around 18 to 23% as of well. MK and DAM Capital also seeing about a 16 to 20% of an uptick. So that's the overall picture that we have for Shriram Finance, and why the stock is the stock of the day.
Okay, interesting. Anushi, thank you so much for bringing us those details. And Sharad, as you were mentioning earlier as well, right? There's a lot to unlock in this entire deal, and
there's
very
a broader
beneficial.
picture also.
Exactly,
there's a broader picture also.
Broader picture, and very beneficial for Shriram Finance, and that's why we're seeing the kind of moves that we're seeing on the stock as well. With that, let's also welcome in our guest for the day, Heyman Kapadia of DR Chowk FinServ, and Siddharth Khemka, Head of Research of Wealth Management at Motilal Oswal, joining us now. Siddharth, I'll come to you first on Shriram Finance. What's the entire view that you have now that we have the entire details of the deal? How do you think will this benefit Shriram Finance? And as Shad was mentioning earlier as well, that this is to grow the company further ahead, and this will not focus on any other group companies of Shriram.
Yeah, hi, good afternoon. I think a lot have been discussed just now, but if you look at Shriram Finance on its own has been now trying over the past several years to diversify out of just being a pure auto financiers. Initially, the used CV market to the CVs auto stocks. Now they've also reflected this by the change in name from a Shriram Transport Finance to a Shriram Finance. So I think on its own they have shown a strong delivery over the past few years. Yes, you have a credible partner in MUFG, which brings in a lot of global understanding of the financing business. Apart from the funds and the credibility, I think the interview also spoke about the possibility of a credit rating upgrade, bringing cost of funds down. But what I believe is that the execution strength that Shriram Finance brings in, that will only get complemented with the global expertise of a bank like a MUFG, which is a Japanese bank. And generally what we see is that compared to a lot of other American financial institutions, the Japanese are much more long-term oriented. They come in for the long haul. They are not in a hurry. So overall, we believe that it's a long-term structural positive. It definitely gives a strategic edge now to Shriram Finance to venture into other financing businesses more aggressively, be it your newer vehicle financing, two-wheelers, gold loans. So that is something that we believe should enable the strong growth going ahead. In the near term, yes, the funds will deleverage the balance sheet, enable growth over the next 2 years. So we are expecting an about 18-20% AUM CAGR in the next 2 years. Book value has definitely increased, and the price at which the transaction has happened. So finally, that's the most important point, that the dilution is at a minimal point. If you look at the valuation, even after today's run-up on an FY27 basis, Shriram Finance is trading at about 2.2, 2.3 times with an ROAs of excess of 3%, ROEs of about 17, 18%. And you look at some of the other peers in the segment.
So that's a view coming in. Thanks a lot, Siddharth, for that. But Heyman, let's get back to the markets. A good performance coming in from both Nifty Bank, and surprisingly, small caps have also joined the party for the last 2 odd days. Let's look at the levels now, what you're looking at for both Nifty and Nifty Bank. And a question which everybody is asking is, the Santa rally on? If yes, what are the key levels?
A very good afternoon to you, Sharad. Thank you for having me on the show. So it's a pleasure. Well, the Santa rally is threatening to be on once again, and this rally has threatened to rally 5 times over the last 1.5 months. So it's a question of crying wolf, but this time around, hopefully the real thing. Levels to watch: 26,104 now needs to hold. 26,277 we need to take out. Once that happens, then it sustains. Well, after a couple of hits and misses, it looks like this time it's happening. That is the case, then after almost 15 months, we'll be seeing a breakout coming in. The VIX is 9.72. It's too low. That means people are not expecting anything volatile or much. But it also means that any move could spark a lot more activity if the VIX is so dull. Having said that, if I look at the Bank Nifty, relative strength, but we've been corrective for almost 5 weeks now. Levels for the Bank Nifty to watch out. I believe we need to take out 59,533. That would be the first level to watch out for. Second one would be 59,897. Setups are positive. As of now, it's been a very narrow move with few stocks moving the market. The rest has been completely untouched. But like you said, finally the small caps have started moving. Hopefully the mid caps do the same. And the rupee strengthens, RBI intervention. Hopefully the trade deal goes through and the Santa rally continues through the new year. Setups are fine. Everything is nicely poised, Sharad. But this, like I said, has happened. The difference between the cup and the lip. It's happened a few times. Hopefully this time is a real thing.
Absolutely. That makes complete sense, Hemen. So considering that, on a positive note, that the Santa rally will be here to stay. I mean, it'll be the case till we end 2025 and enter into 2026. Would your picks be in the large cap space right now, or would you be very stock specific in terms of the mid caps and the small caps?
Well, the safe option would be to choose the large caps, Mahima, because that's been the move up till now. But I believe that if the mid caps promise to deliver after 15 months, that's where we could see the hockey stick sharp turnaround to beat the alpha. So I would maybe take a leap of faith and go for some of the mid caps, Mahima. Firstly, a buy call on Apollo Hospital. All these are contra trading buy calls. They've fallen off significantly, supports, oversold, positive divergences, blah, blah, blah. So a buy on Apollo Hospital, that's 7050. Stop loss 6975, target 7200. It's come up from 8100 to 6900, Mahima. Like I said, oversold, positive divergences, crossover buys coming in. It's simply nicely set for a decent, if not a good, pullback. The second one, Mahima, is Supreme Industries. The logic remains almost similar. We've fallen off a cliff from 4664 to sub 3200. We're at strong support levels just below 3200. Once again, oscillators buy, crossovers, volume spike, positive divergences. Everything seems to suggest we are playing for a pullback recovery. Currently, I'm not labeling this a rally. So buy Supreme at 3350, stop loss 3275, target 3400.
Okay. All right. So those are the picks that Hemen has on his radar. But Hemen, I think one counter that's standing out is something like a Jupiter Wagons. Let's try to pull that up. In fact, a lot of railway, defense, shipbuilding stocks have been in focus just ahead of budget. Jupiter Wagons up 16.5% as we speak and almost at its day's high point. Any of these counters in the railway space or maybe in the defense space that are looking very attractive on the charts right now?
Well, Mahima, for years there used to be this activity in fertilizer stocks, but now we've gone down to the defense and railways, changing times. But yeah, seriously speaking, I think RVNL, okay, like you said, Jupiter has done phenomenally well. But I mean, if the stock goes up 17% in one day, in a market which is still sort of not exactly out of the woods, I would be slightly reticent about going long. Setups are positive. It's got a bullish gap. Everything is hunky dory, but it's moved too fast. Some of these stocks, RVNL is one, like I was mentioning, Mahima. It's made a base 301.75 with a good support downside appears limited. We've been corrected for more than a year. It's closing over the 55-day exponential moving average today. Very interesting. And I'll just take 30-second home, Mahima. Some of these stocks, PFC, REC, Railway, Defense, not all of them, but an overwhelming majority of them have been corrected for 1.5 years, simply because they've moved 5 to 10 times. So, not a benchmark, but normally if a stock moves, multiplies, expect the next couple of years for it to cool off, however good it may be. Maybe fundamentals need to catch up. So that's what has happened over here. If you take a 2-year view, they all seem set to test the earlier highs, Mahima. As of now, we are looking for a trading bounce, which very well might get converted into a longer term move, which has taken a breather, but is still inbuilt in the system, Mahima.
Well, that's the positional bets coming in for these themes which Mahima was discussing, and even Heman pointed out these sectors you should have a look at: defense, railways, even fertilizers. And these are the things which have a run up, especially before a budget. But let's move on to the trending segment of the trade, your snapshot of the stocks which are buzzing in trade. And to get all the details, we are joined by Jasmeet. Jasmeet, what are the stocks in your list?
Well, thank you for that. Starting up with the first counter, I have NIIT. If you look at the overall stock, it has nearly halved on full yearly basis. In terms of fundamentals, the top line has been growing, but margins are something that should be watched out for, given they have been weak, and even the profit has been stable around 40 odd crores. But H2 going forward is expected to be a better year for the learning company, so that's something to watch out for. Now, in terms of the volumes have touched the 8 months high of the trading given in the trade today, and they are roughly hit the 15% high mark on the intraday basis. If you look at the next counter, I have metal pack in my counter, given that most of the metal stocks have been buzzing and it has been a year of metals, given the gold hitting all-time high, even silver hitting all-time high every once in every couple of days. Now, in terms of silver, stocks like Hindustan Zinc is nearly up 33 odd percentage, given on the back of the silver rally we have seen. Now, if you look at the overall impact, so every 1% increase in the silver price is something sensitive of almost 1% to the EBITDA of the particular counter. The next counter would be Nalco and Hindalco. Given the copper hitting all-time high, also would make the stocks be in focus, given the copper prices are almost up 8.2% in the current market. If you look at the next counter in my trade, it's Sterlite Tech. For this company, particular counter, the stock is buzzing on the back of the volumes. We look at the overall volumes are roughly 19 times on a 20-day average, and the stock has hit the biggest intraday high of 14% since the month of June. While the last counter is again a pack of shipbuilding companies which have been in focus. We recently saw Philip Capital note coming up for the company, which specifically states that 95% of Indian trade happens to shipping through shipping business, but given that production is something that will be in crucial focus, that only less than 1% of the global production of shipping is done in India. Now, stocks like Mazdog, Cochin Shipyard and Garden Reach have been in focus. They have the trading volumes higher in trade today, up almost 5%, and since then, the stocks are up almost 10% in trade. Now, Mazdog has hit the biggest intraday gain since the month of June in trade today. On the other hand, Cochin Shipyard is trading 36 times lower, the all-time high. While that's something to watch out, given most of the shipbuilding stocks have been beaten down in trade over the last 1 year, and we see a recovery coming in this particular month, which will be in focus given the H2 and the budget as well. How this thing would impact the stocks going forward, all in all.
Thanks a lot, Jasmeet, for that. Siddharth, I want to get you in, especially on the metals pack. I want to avoid NIT. These are low volume counters, but metals. Siddharth, there seems like the up move is just not having any cap. Each day we are seeing record level announcement, be it silver and even record reclaiming its, even gold reclaiming its record high levels. In the metal pack in the Indian space, there has already been a very significant run. Do you recommend some profit booking in the counters, or would you like to be with the metal counters? And if yes, what would be one of your favorite picks?
So, Sarad, I think two parts of the question. If you ask about the direct commodities, that's a different question altogether. But if you are asking about the stock plays for some of these, especially the precious commodities which have seen a strong rally, I think the results for Q3 for some of these companies will be very strong on back of the high commodity prices, and hence I would continue with some of them. For example, as you rightly highlighted, companies like Hindustan Zinc, Hindustan Copper, Vedanta. I think these are proxy plays to the precious metal stocks. Otherwise, also if you look at globally, I think they post the announcement of a stimulus by China, the other base metal prices have also been on the high, including some of the industrial commodities like copper has been at a record high. I think going forward,
Yeah, seems to be some technical error, but Hemen, I want to get your views also into the metal space, especially because the up move we have seen. Is the right time to take some profits off, or for you also the stance remains the same for almost all the stocks in the metal and the mining space?
Sharad, normally what I do is I track international copper, and obviously then you have the Hindustan Zinc, the Hindustan Coppers, and everything else moves in line with it. Now, interestingly enough, 5.2 in terms of dollar levels, international copper had this resistance for some time. It went above it a few times, didn't sustain. Now we comfortably quoting above 5.20, which is a breakout of sorts. The recent all-time high was above 5.90, Sharad. So I believe there is some headroom left. But I agree with you. There's no harm in taking some profit off the table, or you can keep a progressive protect profit. You can raise it higher at the earlier bottom. But I believe some more headroom is there. And if you have a slightly longer term point of view, there could be still more headroom left. But yeah, I think taking some money isn't exactly a bad idea. Despite what I see is that copper and Hindustan Zinc have further upside, as international copper has further upside. Sharad.
Okay, all right. So that's with regards to some of these metal names, where some of these metal names are concerned. But we've been talking about this. The India and New Zealand have signed a historic free trade agreement after a pause of 10 years, resulting in bilateral trade in sectors like IT, engineering and agriculture. Rishabh is here with more details as to what this deal means for India. Rishabh?
Right, another trade deal in India is back. This one right after UK and Oman, you have another developed country with New Zealand. What we're seeing is that this is unprecedented. This is 100% lines that New Zealand has included for absolutely 0% tariffs. So in earlier FTAs, we saw 98, 99%, but this one, all tariff lines are completely exempted. Basically, if anyone that has to send anything to New Zealand will be going tariff-free. That is number one. The second big headline that's coming out of this is the large $20 billion FDI commitment that New Zealand has baked into this free trade agreement. That essentially means that over the next 15 years, New Zealand will be plowing in about $20 billion. And to put that in context, they've only put in roughly $90 million over the past 25 years. So this is a massive multi-fold increase, similar to the EFTA agreement that we saw. They had committed roughly $100 billion. New Zealand has committed $20 billion. What we're seeing is that the gains from this particular FTA will be concentrated in the labor-intensive sectors. That is your textile, leather, footwear, pharma, chemicals, plastic, rubber. Those are the sectors that will stand to gain from this particular free trade agreement. What we're seeing is that a lot of mobility-related and visa-related changes have also been brought into this particular FTA. And that is a major feature of this. There's a post-study work visa that is opening up. There's a lot of temporary visas that are opening up. So a lot of jobs also are part of this particular free trade agreement.
Right. Okay. Thank you so much, Rishabh, for bringing that those details to us, and of course, breaking that down for us as to what this means for India. Siddharth, I'll quickly come to you. Any particular stock or company that you're looking at from this India-New Zealand FTA agreement that we've now been able to sign after 10 years?
I think broadly textiles as well as I think gems and jewelries, these two sectors will be positively affected.
All right, so that's with regards to where the FTA. In fact, Shad, I was just thinking about it. This has been a year of FTAs, right? It's
Oman
the third,
was there.
Yes, third or the fourth FTA that we've finally.
But we are waiting for something.
Yeah.
And that's the biggest wish list for us.
Yeah, absolutely. We'll have to wait and watch out for as to how the US FTA happens in 2026. But with that, Hemen and Siddharth, thank you so much for taking out the time and of course giving us all those insights. We'll take a very quick break. Stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing rooms in our segment Heard on the Street.
शौर्य और महापुरुषों की पहचान, किले और हवेलियों की शान,
संस्कृति और परंपरा का मान, राइजिंग राजस्थान, विकास की छलांग,
प्रगति पथ पर अपना राजस्थान, नया राजस्थान, विकास भी विरासत भी। एनडीटीवी राजस्थान पर 24 दिसंबर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
$2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas.
Welcome back. You're watching India Market Close with me, Soumit Sarkar, and my co-anchor Sharad. Let's also welcome in the technical guest Akshay P. Bhagwat, Senior VP with JM Financial, and G. Chokhalingama, fundamental guest, founder and MD of Economics Research. Firstly, coming out to you, Mr. Bhagwat, if you look at the benchmark, we are comfortably in green for the second trading session. 26,150 level has been achieved. What's the kind of upside that we can see from the current levels now?
Good afternoon to all. For the December month, the prices show a very clear trend. That is, there is buying time in again at the support zone of 25,700 to 800, and the market resists around 26,350. So it looks like more of a buy on dips or a neutral setup if we were to see a broader perspective for the December series. But overall, there is no change in the trend. The trend continues to be strong as far as Nifty index is concerned. In the last couple of days, we have had the mid and small cap space also participating again back in action. So with the broader market participation, IT space getting back into the picture, I think the markets are setting up once again to test and break the upper end of the resistance band, which is around 26,350. So that's the short-term target area for the Nifty index.
It comes to Nifty Bank.
Nifty Bank is slightly slower in the current scheme of things compared to Nifty, but again the trend is very strong in Nifty Bank. It is in a sideways phase, and the likelihood is that Nifty Bank may again try to reclaim the 60,000 mark. So 60,000 is the conservative or the minimal target one can work with. 58,800 is the strong support base which it has built, and a positive view in the banking space will continue.
And Akshay, any top picks?
On the top picks, I have recommended two buy picks, both from short-term trading perspective based on technical charts. The first one is in Nykaa or FSN e-commerce, expecting targets of 265 to 270 on the upside with stop loss of 245. The second one is ITC, which has been in a range since long, but I believe that this range should break out soon on the upside, and 415 and 418 should be the targets in the making. 397, pardon me, will be the stop loss on the long position in ITC.
Right, Mr. Chokhalingam, coming to you on Bharti Airtel. Today, if you look at the benchmark, Bharti Airtel is a top contributor in trade. Any key triggers that you see for Bharti Airtel now going forward, and at the current valuations, would you recommend anyone any fresh buy position here? Mr. Chokhalingam, the question is to you on Bharti Airtel. Okay, Bharti Airtel, the stock is up nearly 2.5% on the Nifty benchmark. It's contributing nearly 35 points in trade. If you have Mr. Chokhalingam back, we could ask him his fundamental view. But Akshay, how's the chart looking like for Bharti Airtel?
So the charts are absolutely strong. There is strength in the prices, and if you look at the historical tendency, the way the stock works is that it stays in a hibernation or in a sideways zone for 15-20 trading session, and suddenly it breaks out, and you see the momentum catching up. So we are in the phase where after a hibernation or a sideways phase of around 10 to 12 session, the stock is again showing strong movement in intraday. With all likelihood, it should get past 2200. That's more of a short-term target, but the broader trend is also very strong, and the advice is to continue to hold on to Bharti Airtel on the buy side.
All right, that's the view coming in for Bharti Airtel. But let's look at the small cap space, and there is a case for chat, especially is the Santa rally on. We have been talking about it, and over the last two trading sessions, the small caps have actually done well. But let's see whether this will continue or not. The Santa rally, that's indicating that the small caps have outperformed the mid caps and the large caps over the last 10 years. And now also let's see what's the definition of the Santa's rally. This rally happens in the last 5 trading sessions in the December month and 2 trading sessions in the first 2 days, you could say, in the month of January. And that is where this definition comes in. 100% win rate is there when it comes to the small caps we have seen. Now, this report has actually come in from a research from Samco, and they've stated that the strongest year for small cap was in 2022, with the index surged almost 7%. So this side only small cap is there, but let's give you a bigger picture how this actually stands. Last 10 years average small caps, the Santa rally, the number has been 3.5%, and this has time and again this has come in. Mid caps on the lower side 2.6%, and then large caps, if you look at it, that's at 1.8%. That means a Santa rally is showing some kind of warm up. But let's look at what are the key reasons for this Santa rally. The first one is the tax planning flows. This is a year ender which globally the FIs actually follow. Sentiment resets. You're starting a new year. There is some positivity here, and maybe because of this, a broader risk on tendency starts to kick in, and that's why we see small cap positionings happening. But Santa has been warming up in the small caps in the last 2 sessions, and there are these 5 stocks I've picked up from the Nifty Small Cap 250 index. Jupiter Wagon is 18%, Ola Electric 9%, GRSC, RR Cable and NBCC are buzzing in trade, but this is just the last 2 trading sessions, which also includes today. But there's something as a Santa I should be giving you, and that is the highest return potential for the at least 5 analysts tracking the stocks in the Nifty Small Cap 250 index. These are the 5 counters. Saregama 60% up move expected. Aditya Birla, Acme, that's around 50 plus, and also Deepak Fertilizers and Techno Electric Engineers, they make it to the list as well. So of course, Mr. Chokhalingam, I would like to get you into it. Small caps, you have a very good coverage in that for next year, because we're looking at a longer time period for investment for our viewers who are into investing. Which are the couple of good stocks in the small caps, which should be in our reading list?
Yeah. So next year, Jan March, in fact, I have given it in writing that small cap should start performing well. Nearly 25 to 30 lakh crore of market cap has been wiped out from small cap and small mid caps from the peak of 2024 September. So I believe beginning next year is going to be the ideal time to once again invest in small cap and create wealth. But the investor should be very, very cautious while investing. Some of the stocks I would reiterate. Before that, I would like to disclose that we have also personally invested two stocks. One is Nespo and second is Bombay Burma. These are the two stocks I still believe that there is a huge upside potential. And third one is Phenolics cables. I firmly believe that the consolidation happening in this industry should lead to re-rating of cable and wire company like Phenolics cable. Fourth, it's a fairly large small cap or mid cap is Oracle Financial Software Solution, OFSS. It's a phenomenal stock, I believe. Personally, I do not own this stock, but I like a lot. A lot of cash on the book. Order on hand is also substantial as per the company's presentations. And sitting on huge cash, it pays good dividend. And the dependence on America is least. It only about 1/4 of the revenue comes from America. Rest is spread across the rest of the world. And rupee depreciation is also positive. It's a product business, not IT service business. And lastly, it makes a couple of thousands of crores from maintenance business, which gives you a lot more stability as far as revenue and profit streams are concerned. So these are some of the stocks I would strongly recommend.
Okay. Mr. Chokalingam, interesting names that you've given in terms of recommendations right now. But I want to touch base on a few of the other counters which Sharad took us through as well, which have a good upside potential. He's spoken about Saregama. We've already heard of the deal with Sanjay Leela Bhansali Production Films. And that could see a potential upside, which is EPS accretive from FY27 onwards. Aditya Birla Real Estate, Acme Solar, Techno Electric. Anything that you like from these names as well?
Yeah. So out of these four, I have studied all four. I like Saregama. Apart from price correction, it is also sitting on decent cash. It's quite attractive. And also Techno Electric, I have looked at it. That also looks very promising. These are out of these four, only these two I'll have a research view of buy for medium to long term.
Okay, so that's with regards to where a fundamental view goes. Akshay, my question to you is, again, the question is there a further upside potential with any of the names that we're talking from the broader markets, specifically the ones that probably Sharad has highlighted, and anything else that you like, which is a good potential buy at current levels for 2026?
Well, see, for 2026, I believe the small or the mid-cap banking space should do well. And this is completely based on the chart readings from a medium to a longer term perspective. So if you look like counters like an IDFC bank, these stocks have a tendency to remain dormant for long. But the best factor is that they have got momentum well in the last 1.5 months. So it builds a good case for a strong upside in the year 2026. So if you look at the price structure of IDFC First Bank, there is accumulation which is evident in this space from the levels of around 75 to 80. The charts are signaling that the levels or the swing highs of 100 should be revisited soon, and further upside opens up once you see those breakouts happening. Second, you can look at City Union Bank, which is another name here, which has given a positive breakout at the levels of 250, trading almost at its life highs. This also builds a strong case for an investment or a longer term holding perspective for the year 2026. And lastly, Federal Bank would be the third name, which has has had a very healthy run up in the last 3 months, one-way run up from 190 to 269, and still more to go is what the charts have to predict for the year 2026. So these are 3 names you can keep on your watch list in the small and the private banking space.
Okay, so some banking names are also coming in from Akshay, but let's move on to our special segment, Heard on the Street. where Somit will get us all the important stocks, which are in focus, especially what he's hearing from the dealing room. Somit?
Well, firstly, it's Religare. Now, what dealers have indicated is that there are buy flows on large HNI desk on this counter, and they're expecting some positive news flow regarding the listing of its insurance subsidiary. Now, either it could be via demerger or via reverse merger. We don't have clarity on that, but there could be some positive news flow regarding the same. When it comes to Lloyd Metal, there are buy flows on PMS desk, hence that is also one of the reasons why the stock is up nearly 4%. Dealers are expecting a strong Q3 number coming in from this counter. When it comes to LTI Mindtree, there are sell flows on large HNI desks. Dealers are expecting that the company could miss its earnings guidance that they had given earlier, hence this sell flow. And despite the fact that the Nifty IT index is up in trade today, LTI Mindtree has been a laggard here. And lastly, when it comes to PFC, there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter in trade today, and delivery volumes are expected to be on the higher side for this counter. So keep an eye out for PFC as well. And lastly, HCC was part of our segment on December 18th, where we did indicate that a prominent influential investor has been accumulating, and one should keep an eye out for this counter. And there's strong demand for its rights issue. And do remember that the rights issue has been oversubscribed today as per the exchange notification.
So are tables turning for an HCC? I think that's the question from here, Somit. That's going to be interesting. Mr. Chokalingam, would you agree to that? Because you have the rights issue, which is seeing a strong demand. Somit mentioned a large prominent influential investor is accumulating as well. So are fundamentals actually becoming very strong as the way they used to be in the past for a HCC?
Which stock you meant?
HCC.
No, I am sorry, I have not tracked that company in the recent times, so I am not able to.
Okay.
Yeah.
And anything that you have to add in terms of where LTI Mindtree goes? Because right now we're talking about the uptick that's coming in with regards to where IT majors are concerned, and LTI Mindtree is seeing a large sell flow on a large HNI desk as well, and they're expecting the company to miss earnings guidance. Now, basis this expectation versus what's happening with IT, what would you advise investors to do?
This is a time to have some exposure to IT stock, because rupee is remaining weak and there is a little uncertainty. Of course, November export trade deficit numbers are very good, but we are not sure whether it's going to be sustained. And therefore, also considering weakness in the small and mid cap segment, it is good to have. And I looked at IT stocks. One can consider Infosys, and apart from that, yes, L&T Mindtree and also Coforge. Both are costly, but still, in terms of growth momentum, they lead. So therefore, one can consider, apart from Infosys, L&T Mindtree and Coforge, and also medium to long-term investors can consider Cyient. Semiconductor subsidiary has a lot of growth potential. Stock also corrected a lot. So these are the four technology stocks. I am quite optimistic.
And Akshay, what will be your views on LTI Mindtree? If you could just show the chart here. This is just like an outlier in today's performance. Today, IT has been the flavor, but look at LTI Mindtree. There seems a reversal at play when it comes to peers. What are your views on that?
See, for LTI Mindtree, the stock has been, I think, in a range pivoting around 60 to 65. This been around 7 to 8 sessions that it's been in this range. And even if you look at the broader or the medium-term charts, there is a strong case building for a resistance around 6,500. So at least if you're a short to medium-term trader at a time horizon within a month, I think the upside can be capped because there is a small case building for a resistance around 6,500. So for fresh entry, I would say give this one a miss. Let the prices break past 6,500. We take a review. Other IT names like an HCL Tech or a Persistent System or a bottom fishing candidate like a Dixon Tech should do well in going by the technical setup in the IT space.
All right, Akshay has stated that LTI Mindtree should be given a miss, but one thing you should not miss is our special segment. That's the bulls versus bears, and the stock itself in focus is Grow. On Friday, there was a foreign broking house, Jefferies, which come out with a bullish report, and today a domestic broking house, which is JM Financial, they have come up with a bearish report. So now that makes us a big concern for this bull and bear space. So Jefferies has initiated a buy rating, target price at 180 odd rupees, and just in the middle is the current market price, and the lower side JM Financial, they're initiating a sell and the target price is at 144. Now that becomes a confusing for us as well. That's why we are trying to break it down for you. Jefferies, they say that Agro has become the largest broker in India, and last 3 months data also suggests that it has left Zerota way behind. JM Financial, it's too expensive. They are challenging the valuations for the broking business for Grow. Let's go again to Jefferies. What's the bull case scenario? And Jefferies has stated that the product velocity is driving growth akin to Robinhood. Robinhood is a very large player, and Jefferies is comparing that and making Grow as India's alternative. That's very interesting. JM Financial, they have stated that fall in broking orders is a huge tail risk going ahead. That means only way from the top will be the down. Jefferies 5 times growth in MTF, margin trading facility and wealth management. So they are banking on the new age businesses apart from the broking segment. And the concern is raised by JM Financial. They believe MTFs is a low hanging fruit and concerns will come up. Another scenario, let's play it out, how actually plays out with Jefferies and JM Financial, and I think we have run out of them. But the bulls and bear scenarios definitely there, and it makes it very confusing for our viewers as well. But to remove this confusion, Mr. Chokalingam will be here. Sir, if you could just give us Grow's setup right now. Already a good listing pop, a little bit of correction, but still, is it expensive or is it cheap? What is the view?
Yeah, so very tough call, but still I would not run away. I would take a stand. I believe it is expensive at current prices. Yes, one should appreciate the management. Done phenomenally well, but I think it is in price. Around 55 PE on a trading basis. For a brokerage company, I would be little nervous to buy at this price. Even if you look at the Q2 September number, year-on-year revenue growth, which is not impressive to support this valuation multiple. And not only that, I believe in India's entrepreneurship. There's going to be a lot more competition in the digital space. It is easy to build an intangible asset, intangible sales, rather than building tangible assets, tangible profit. So there will be a lot more competition from the new player as well as from the existing player. So therefore, on any further rise, I would be a seller rather than buying this stock at this price.
Right. Meesho continues to remain in focus. We did a deep dive last week, clearly explaining why we are seeing such kind of a moves when it comes to the Meesho stock price. But let's get in Mahima to understand what is the reason why the stock could be down in trade today.
Right. So, Somit, as you rightly mentioned, last week also you did talk about how overall there is low free float available for Meesho as a stock, and that is why any small buying or selling trigger could probably move the stock in upward or downward moment and could cause volatility as well, as there is limited supply of shares in the markets. Plus, if you take a look at the overall holdings as well, there's 75% of public holding, promoters around 16%, and FI is around 3%, and DI is around 4%. Now, plus what we've seen earlier in Grow's case as well, right? There possibly this could be the reason that there is pullback following the kind of intense demand that we've seen in the counter, the buying demand that we saw since its listing, and there could be now short covering pressures happening, and that is why that could be one of the reasons as to why the stock is locked in the lower circuit as well. Plus, the path to profitability is still under the radar. A lot of brokerages believe that it is on the path to profitability, but we'll have to see as to whether Meesho is able to prove that or not, because we've seen a lot of new age tech platforms still struggling with their path to profitability. Lastly, in terms of where valuation stands, of course, not cheap in terms of where the EV to EBITDA 3-year forward is concerned at 40 times, at par with where Eternal and Nykaa are right now, but still not cheap in any which way. Lastly, of course, while the IPO was being subscribed, we've been talking about how competition is intensifying in this space, especially in the e-commerce and quick commerce space. Plus, there's high regularity risk around the kind of product quality and reputation that Meesho also has. So all of these factors considered together could be the possible reasons as to why the stock is under pressure. And lastly, in terms of where what one needs to watch out for is 7th of January, where the lock-in for around 11 crore shares will end, and see as to which direction the stock goes in. So that's the overall view as to what's happening with Meesho right now.
Thank you so much for that. In fact, all of your new age companies that are in focus as well. We've spoken about Grow, we've spoken about Meesho. You have Lenskart also, which is in focus, because if you talk about this counter, the stock is up nearly 1.5% right now. Up almost 18% from its issue price. It's gained around 14% on Friday as well. Macquarie has initiated an outperform, and they have a target price of 530 on the counter, and they've said that it enjoys competitive edge when it comes to cost, design and efficiency. They're saying that the move in terms of EBITDA margins, they are 33%, is what they will be looking at in terms of store level margins, and a triple return on investment capital to 20+% by over 26-28. So ICICI AMC is another one that you should be watching out for as well from the recent listings. The stock is up nearly 20% from its issue price of 2,165 per share. As we know, it listed on exchanges at around 2,600. So good amount of correction that's come in from there. Fourth most subscribed IPO is what we've seen in terms of Indian markets. It was subscribed nearly 39 times. Grow, we've already spoken about today, and JM Financial has initiated a sell on this counter. Mr. Chokalingam, apart from the other names, if you have to look at a ICICI AMC or a Lenskart and even a Meesho, which is down around 10% in trade, what is your view?
I would sell Meesho, as your colleague rightly said, the low retail float. We have seen in the last 10 years, low retail float helps in the short term, but medium to long term, it is ultimately the tangible bottom line what will determine the further value accretion. So this company, I looked at the number FY25, bottom line is quite unimpressive. And, instead of being a investor of these digital businesses, I would be a consumer of these businesses. Really, these companies have made a consumer as a king. Consumers are the beneficiaries in terms of, the subsidized products and services. So I would stay away. Definitely, ICICI AMC is a good stock. It is into tangible business model. And not only that, it is going to be a perennially growing industry. Even now the penetration of AMC and stock market, capital market is very low in India. And AMC asset is going to double, triple, or even 4 times in the next 10 to 20 years. So definitely ICICI Pru for a long term, it's a great stock to buy.
Right, Chola Finance is another stock that we need to watch out for. Now, since the announcement of Shriram Finance MUFG deal, we have seen a consistent decline. Even on Friday, the stock was down as much as 4% at one point of time. Today also, the stock is down nearly 4.5% in trade. Now, one of the major reasons behind this is the fact that Chola Finance used to trade at an expensive valuation as compared to Shriram Finance, and given the fact that Shriram Finance has now got this MUFG deal, their credit rating might get an upgrade, and the borrowing cost would also come down. So that puts Shriram Finance at an advantage as compared to Chola Finance, and hence this move in funds that we are looking at. But Bhagwat, Mr. Bhagwat, how at the current level on technical, are we seeing any signs of bottoming out when it comes to Chola Finance?
Well, if you look at the price structure of Chola Finance, I think there is a support around 1800 roughly. But still it is too early to say that this may be a bottom for the stock. Roughly there is a zone of 1750 to 1800, which is a support as of now, but we need some recovery to confirm that the volumes too are supporting at the support zone. So I would say that since we are at or near the support, those who are holding the stock should continue to hold with a stop loss below 1700. Longer term chart structure.
Sir, I meant about Chola Finance and not Chola Holding.
Oh, okay.
The other one, the 1500 rupees one.
Yeah, I'm sorry. So I think technically this stock has broken the support today on an intraday front at the support of 1650. So that's a negative short-term setup for this counter. It may see some additional selling pressure going ahead, which may see the stock going down till 1475 to 1500. So if you're holding the stock, you should be prepared for some more downside, possibly around 1500. And that's the point where you can consider averaging it out, where a possible temporary support or a bounce back can be anticipated in this stock.
Akshay, for that view coming in and for your technical aspect also. And while India is rejoicing New Zealand FTA, all eyes are also on US trade deal. We had a conversation with Abhay Agarwal, Managing Director at Piper Serica Advisors, who said a trade deal with US is important and FPIs will open up after it. Listen in.
I think from a signaling perspective, it's very important that we get a deal done. And I think once that is done, I have no doubts that will open up the FPI taps, because that is one of the biggest signals that people are waiting for. I think the pressure on rupee that we have seen will also ease off once this flows reverse. So without a trade deal done, yes, we would probably be slightly ahead of the consolidation zone that we have been in. But to really see the tap open up, we would need to have a trade deal in some form of fashion, whether even if it's a multi-step trade deal that evolves over 2 or 3 months, but starts somewhere. If a trade deal doesn't get done soon, will the US put further tariffs or penal tariffs on India? I don't think that's likely, but of course, till a deal is done, it's not done. So I am waiting for some announcement, some positive announcement. There has been multiple stop and goes on the way. Announcements that trade deal is just around the corner, multiple visits by both parties, but nothing material has happened. So I'm hoping that at some point of time there will be some ink on the trade deal document, and then the FPI flows can resume in the normal manner that they have been.
शौर्य और महापुरुषों की पहचान, किले और हवेलियों की शान,
संस्कृति और परंपरा का मान, राइजिंग राजस्थान, विकास की छलांग,
प्रगति पथ पर अपना राजस्थान, नया राजस्थान, विकास भी विरासत भी। एनडीटीवी राजस्थान पर 24 दिसंबर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Woo! 2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Select Live. Ask
Welcome back to India Market Close. Interesting day of trade. Let's just quickly pull up Nifty 50 and see what that is doing in trade along with Bank Nifty as well. Because seems very strong. There you go at the day's highest levels, gains of 0.8%. So we're sustaining categorically above the 26,150 mark. And let's just quickly pull up Bank Nifty on the screens as well and see what that is doing in trade, because good support coming in, but pretty much where we started off with gains of 0.4%. You know, one sector which is not really participating as such is the India Pharma pack. It's ended 2025 as a clear stock pickers market, with the Nifty Pharma index closing the year in the negative territory. It's down nearly 2% in trade in the year. Now, the persistent US pricing pressure, the tariff uncertainty, as well as you can talk about weak earnings from index heavyweights, that has dragged the sector returns through the year. Varsha joins us with a breakdown of the outperformers and what drove the returns for these select pharma names and what's in store in terms of 2026. Varsha, what are you picking up?
Well, thank you so much for that. You know, the reason why I call 2025 with respect to pharma stock pickers market, because overall, if you see, the Nifty Pharma has given a negative return of around 2 to 3%. Now, why? Because there was a persistent US pricing pressure which actually impacted the financials of the company, and tariff and trade uncertainty was overhang, which hurt export visibility for the companies, and the earning disappointment in index heavyweight also impacted the returns of pharma companies, and regulatory overhang capped value re-rating. But why this was a stock pickers market, if I were to talk about, the index level returns, if you see, was a negative. Most pharma stocks, if you see, delivered flat or negative returns. Only a selectful pharma companies did post a positive returns, and this was only driven by the execution of these companies and was not a sector specific. But let's quickly pull up the chart wherein the companies which has given a positive returns, there you go. Laurus Lab have gave almost 70% returns to its shareholders, Glenmark Pharma 23%, and Torrent, Sai Life, Newland and Divi's Lab have also given returns of around 15 to 20% to shareholders. Now let's see what are the key reasons of the positive returns for these select companies. Starting with Laurus Lab, Q2 was beat across the board. ARV business is expected at 2,500 crore for FY26, and investments in animal health and crop science CDMO will be the next growth lever for the company. And also the strong export data in November 2025 also helped stock returns. Moving on, if I were to talk about the Torrent Pharma, which has given a positive, Glenmark, which has given a positive return. They are expecting to be back in high growth phase in the next few years. Also, strong export data in November 2025 also helped company. Talking about Torrent Pharma, which has given a positive return, the limited exposure to US generic pricing pressure is the key highlight when it comes to Torrent Pharma, and consistent earnings delivery and margin stability have also helped the stock performance. While talking about Sai Life Sciences, the strong CDMO performance in Q2 FY26 was the key highlight for this company, and they've also invested in complex peptide synthesis and ADCs, which will be the next growth catalyst for this counter. Talking about Newland Labs, if you see, there was a strong beat all across when it comes to Q2 FY26, and EBITDA was at all-time high, and even companies moving towards high value added products, superior product mix, which will also aid EBITDA margin. So overall, FY25 was a stock pickers market because only a handful of companies have given a positive return to shareholders. Overall, Nifty Pharma was down around 3%.
Okay, these are interesting names that we should be watching out for, because, if you talk about a Sai Life Science, yes, it is one of the beneficiaries when it comes to the Biosecure Act. And that's probably the reason why we've seen this outperformance that has come in for that one. Newland, again, the growth story seems to be redefined, as Varsha was mentioning. Laurus is leading the pack as well today, though your Newland Laboratories is trading under pressure. Sai Life Science, all of them, some bit of pressure that continues. In fact, when you're talking about the US Biosecure Act as well, there is a couple of, new development that is coming in from that aspect. Varsha standing with us again to tell us what's happening on that front. Firstly, Varsha, the US lawmakers are pushing to blacklist 3 WOOXI firms under the Biosecure Act. I'm assuming we are calling it WOOXI as well. If you could help us understand, what would this actually mean?
So if you know the US Biosecure Act, what does it say? That it will ban, or rather US firm won't be working with certain Chinese biotech firms. And now the new update is 9 US congressmen have formally requested to ban the WOOXI group of companies. So the companies flagged are WOOXI Aptech, WOOXI Biologics and WOOXI XDC. Now these entities have been classified having links to Chinese military and inclusion, or rather US banning this WOOXI group is a major positive for Indian CDMO companies. Why I say that? Because WOOXI have a significant market data when it comes to CDMO segment, and banning WOOXI will directly help Indian CDMO companies, because a lot of projects will be diverted to Indian CDMO companies, and hence Divi's Lab, Laurus Lab and Syngene International, all the CDMO companies will be benefited from this overall.
Thanks a lot, Varsha, for that. Interesting word, WOOXI, and I don't know, I think I'm pronouncing it wrong.
Even I didn't know, that's why I said
Yeah,
WOOXI.
but that has been continuing. At least 8 or 10 times we heard WOOXI. We're joined by Jay Bala. Good afternoon to you, Jay. We are speaking about a lot of pharma names here. Varsha had picked out, detailed research was there also on 2 topics. Any good counters for a technical up move from here also?
Yeah, I've been liking Glenmark for a while, and I've been pointing out when it hit record highs that a pullback closer to 1800 odd levels, that will be an ideal entry point for Glenmark. It went below 1800 and it started to bounce again. So I think Glenmark is in line for fresh 52-week highs, fresh record highs. So a stop loss at about 1800 will make a lot of sense. And in my opinion, from here on, Glenmark is probably the best within the pharma space.
Okay. So that's with regards to where pharma majors are concerned. Jay, I would want to come back to you when it comes to overall markets as well. 26,150 is what we're looking at in terms of Nifty 50. Strength, absolutely strong. That's what it comes across. Bank Nifty also pretty stable in today's session. What are the levels that you're tracking from here on? And going ahead, are you expecting this kind of momentum to sustain?
Yeah, hi, Hiral. I'm bullish on the Nifty, and I remain bullish on the Nifty. But in the short term, we could the markets are at crossroads. 26,325 and 25,693. That's an important range. Whichever side the market's going to break out, it's going to be a big move. But even if the market were to break down to below 25,693, that will be a short-term blip. And I'm bullish for the Nifty. I maintain the target that I've given since April 2025. I'm expecting Nifty to scale 29,000. So let's see, if 26,325 were to get taken out in the immediate future, then we could see 29,000 much quicker. But whatever happens, we are likely to see 29,000 in the first half of 2026.
Mr. Chokhalingam, I wanted to understand your view when it comes to Siemens Energy. Stock is down nearly 5% because the street anticipated the order win that GE Vernova has got. It might as well come to Siemens, but that has not come in, and hence this sharp negative reaction that we are seeing. But after this 5% downtick in trade today, is it a good time to enter this counter?
No, I would rather prefer L&T. Because yes, standalone in absolute basis, Siemens Energy is a good stock. Those who are holding can hold for long term. There is no doubt. Stock has already corrected a lot. Slightly, outlook also on the basis of the price point looks good. But in relative terms, I prefer L&T. I do not own any of the stocks. L&T gives me tremendous confidence because it has a technology company, so rupee falls, that would give a cushion. And then in various new segments like realty, semiconductor, electronics manufacturing, nuclear energy, data centers, I think the kind of aggressiveness in many new businesses is really phenomenal. the kind of order book it has been securing, almost every week is also very impressive. So I firmly believe that L&T would outperform both Siemens and Siemens Energy in both short term as well as in the long term.
Okay. So that's with regards to where Siemens Energy goes. The stock is down nearly 4.5% in trade. In fact, let's look at all the pump stocks in today's session. They've actually gone from boom to bleed, and that's what the analysis tells us. Varsha standing by to tell us more. Varsha, what are you picking up when it comes to the pump stocks from here on? Is there steam from here, or are you expecting the pressure to continue?
Well, Hiral, once these pump stocks were multi-baggers in 2024, and now they've seen, now they've been a pain point when it comes to giving returns to investors. So let's see, if you see for year to date, Shakti pumps, Oswal pumps and Roto pumps have given a negative returns to its investors. Let's analyze why. One is the sector corrected after strong multi-bagger run in 2024, and there was a profit booking, then there was a margin pressure and tender price pressure did hit stocks in 2025. Now, let's deep dive and analyze. If you see, the main pain point over here is solar panel prices. So solar panel prices fell sharply, and why this is important, because 80%, if you see, the solar panel forms 80% of a solar pump system cost, and because of that, because of sharp fall in prices, if you see, lower panel prices force fresh tenders at lower price, hence impacting the revenue for these companies. And also old inventory which were bought at higher panel prices did hurt margins of these companies. Let's analyze if there and also the company faced margin hits or inventory write down risk. And if you see, the top line expectations were cut, valuations got derated. Let's analyze the margins of these companies over the last 3 quarters. If you see, for Shakti pumps, Oswal and Roto pumps, the margins from March FY25 to September 2025, if you see, they have deteriorated because of the fall in the solar panel prices, which hit, or inventory losses have led to this pressure in the margins. Now let's analyze why all this pump stocks were in focus in the last few days. Talking about Shakti pumps, the bounce was driven by, if you see, in the last 1 month the stock is up 7 to 8%, and this bounce was driven by multiple large PM Kusum order wins, and one of the order win was of around 443 crore. If you see, from Maharashtra, which is to be executed within next 60 days, and this order size equals 61% of Q2 revenue. That means sharp near-term revenue is expected in Q3 and Q4. Then talking about Roto pumps, the management is the stock was in focus because of the huge promoter buying in the open market, which actually gained investors' confidence, and hence you have seen that sharp rise in Roto pumps as well. Talking about the Oswal pumps, although the stock has given a negative returns, but overall management expects margin recovery from Q3 FY26, and the order book includes almost 18,800 pumps, pipeline visibility of 30,000 pumps, and they expect PM Kusum 2.0 rollout by the end of fiscal year. So overall, yes, these stocks have given a negative return to investors, but some kind of buzz have been seen in the last few days.
A lot of Varsha for that, and we just have around 40 to 60 odd days, and if the allocations of the government schemes are not complete yet, maybe the last minute allocation announcements might be coming in, and that's why these stocks are buzzing in trade. Jay, just looking at the technical charts here, any kind of positional bet we can take with the names which Varsha discussed?
Definitely. Shakti pumps is an avoid for me for the moment. It's seen the sharpest up move, but technically I don't think the bottom it saw at 549 was a durable bottom. But what is interesting in the space is KSB pumps. KSB pumps is coming off from a very important support, rising up. So a stop loss at about 700 for it. Potentially for it's got energy to scale right up to about 1,000 odds. So KSB pumps is the most interesting stock in the space. I'm also watching Roto pumps, but it's got a little more fluctuations to be done. So once that's done, that will also probably get interesting. But the best, in my opinion, is KSB pumps.
And Jaybala, what would be your BTST pick, BTST stocks today?
I like Bharat Forge. Bharat Forge at 1456. With a stop loss of 1450. I'm anticipating it to touch 1470 tomorrow.
Okay. Right. And Mr. Chokhalingam, on KEC International, there was yet another positive news flow that came in where they have received a stay order from Delhi High Court for the ban that was put in place by Power Grid. Now, does this, obviously this is a positive news coming in, but the stock has also moved up of late recently. So after this move, would it be a good time to enter this counter?
I think yes, for medium to long term, the price has corrected a lot. And also it has got a very credible growth story in the last 5 years. So I am sure even if there is a little problem in, in order from particular vendors, I think overall with the exports, good exports profile, this company can come out of this current pressure. I would give a buy call on KEC International at current price.
Buy call coming in for KEC International from Mr. Chokhalingam, but let's put the focus on the small cap space. As small cap index has been growing in the last 2 trading sessions, and some interesting names have come up. Anushi is here to give us the reasons for why they are buzzing. Hi Anushi.
Right, so a couple of stocks that make it to the small cap buzzers today. Firstly, we had the management of Zota Healthcare, which if you see the stock price, it's seen about an 89% of an uptick this year itself, with the company's recent news flow being that it has raised 350 crore of funds via QIP. Now, the board had approved 500 crore of QIP earlier, so how does that pan out is something that we should be watching out for. But this QIP funds will be utilized towards Dava India and general corporate purposes. The second stock on radar was Centum Electronics, and this is after this stock had hit an intraday high of 15% with volume surging 5 times compared to its 30-day average. Here, the board had approved shutting Centum's 2/4 level of subsidiaries in Canada. So that was the news flow for this particular counter. Coming to HCC, here the company's right issue has been fully subscribed, with the right issue now closing today. So that is another stock which was on radar. And lastly, coming to Knowledge Marine and Engineering, the stock turned split today. After that, it also hit an intraday high of around 17% with volumes over 2x compared to its 1-month average. Do note that the company was recently in focus on the back of a 54 crore of order win as well. So these are a couple of small cap stocks which are in focus.
Thank you so much for that. In fact, Jay, anything that you like from all the small cap buzzers in trade today, because that's where the rally is?
Yeah, Centum Electronics starting to look interesting, but it's a high risk call. You might want to keep a stop loss of 2100 and possibility to scale to 2800 to 3000. So, but it's a bit of a high risk call, but the technical setup is coming at the right place. 2100 has the potential to be a double bottom.
Okay, so that's Centum Electronics. Mr. Chokhalingam, anything with regards to Knowledge Marine and Centum? I know HCC is something that you don't track, you told us, but any of these two counters?
I looked at both Knowledge Marine and Centum. Centum is a quality player. Valuation is stretched, so one can hold on to it. Knowledge Marine, I am not comfortable with the kind of over ATP on a trailing earning basis. It's supposed to be a dredging company, and I have been tracking dredging from early 90s. It's not a great business model to justify this kind of premium valuation. So I would give a sell call on Knowledge Marine.
Sure. MCX and BSE, let's just show both of these exchange related stocks. PSC, of course, are buzzing. There is a media report suggesting that they might be introducing some monthly index options coming in to get their more market share in. That's what we have been gathering. And the second is MCX. Looking at MCX, they are looking at the SEBI chief's comment came in the weekend that they are looking at making this a commodity market go well. Now both of these stocks are at the day's high level. MCX is up 5%, BSE is also up almost 3%. Jay, I would like to take your views on it. The exchange related stocks, they are seeing some good volumes also. From these current levels, what are the good exchange level stocks you are looking at?
We've been bullish on MCX since October, and from 8,700 it's come to 10,800. So it's a bit late now when it comes to MCX. So I would say people should trail with the stop loss at about 9,500, 9,800 for MCX. BSE Limited, yeah, probably it's still given that I'm expecting fresh record highs for the overall market. I think it's the structure as well as sentiment looks positive for it. but not too much upside, I would think. So a stop loss at about 25.78 for BSE, possible objective of 3100.
Okay, so that's with regards to BSE and MCX. Mr. Chokalingam, two companies that I want to talk to you about on the back of acquisitions. One is Varun Beverages. You're talking about an acquisition in the South African market, which is a firm called Twiza, and they've done this at an enterprise value of little over 1100 odd crores. Simultaneously, you have a Samvardhan Motherson that has also just announced a acquisition right now. Now, both of these, anything that you would add? Because Samvardhana has always been an acquisition capex play, and the kind of business that it is into, it's very interesting to see what happens. Your views on both these counters?
See, both valuations are stretched, but one should also accept the fact that they have got a fantastic track record of fast growth. So, considering both, I would give a whole recommendation for both for medium to long-term investments.
Right, Jay, I also have a question for you. India Energy Exchange, I would like to get this stock in. The stock is, of course, on the lower side. The day's trade, it's not actually following what its peers are following. But IEX, fundamentally, there are some news flows expected to come in just before the budget on this electricity front as well. But is there any kind of a low-level buying for this counter? This already, if you just show 1 year counter, you'll understand where the impact was for IEX. And the coupling news flow is, of course, coming with it. But Jay, any kind of bottom fishing value buying we can expect for IEX here?
See, the stock is trying to build a base between 130 and 149. So, until the stock comes out of either direction, it's better to stay away from this counter. So, I would wait for a breakout on either side, either a breakdown below 130 or a breakout past 149, 150. Then we can take a position. Until that point, this is an avoid, but it could be forming a base. It's a very sideways consolidation since August to December. So that's a sizable consolidation. Whichever side this breaks out, that will be a sizable move.
Okay, so decisive move coming in with regards to where IEX goes. The stock is at the day's lowest levels as we speak. Few of the other names that I was just looking at right now is a trend. Let's just pull up a trend on the screens, because interesting moves and buying interest coming in terms of today's session. The stock is at the day's highest levels. The year has been really troublesome for this counter. Probably a pickup game coming in on this one. Jay, a quick view in terms of where trend goes?
See, I'm generally neutral to negative on most of the FMCG names. So, trend has seen a lot of downsides since 2024 September. So, I would right now I would see this as a short-term bump up rather than an investment opportunity. I would say this can bump up somewhere about 4,700 to 4,800. But I would think this is just a trading rally, not a reversal in trend.
That's the view coming in from Jay Bala. But thanks a lot, gentlemen, Jay and Mr. Chokalingam, for giving your time and giving both technical and fundamental perspective for the markets. But markets, it's showing what the morning was showing, a strong gap up, and it's holding up. Nifty comfortably up above the 26,150 odd levels, and hopefully we can expect that lifetime high levels of 26,200 plus levels being achieved this week as well. But a 200-point rally, that is a significant up move, and Nifty Bank, that's also going, but the technical setup for Nifty is much stronger when it comes to Nifty Bank. But all in all, the key levels have been defended, and now we are hoping that this Santa rally can start. But now let's see how the constituents have actually worked out for Nifty. Largely trend, that's the last minute move which we have seen, that's up almost 4%. Shriram Finance for the second straight day, we are seeing an up move coming in, but the IT pack has been doing well. Wipro, Infosys, Tech Mahindra, even Bharti Airtel is showing strength coming in. A sea of green coming in, Reliance holding the fort, but nothing much happening when it comes to the profit booking. Slight pressure is there in HDFC Life and SBI, but nothing of any kind of worry. Let's look at the sectors, how it's actually panning out. And overall, the sectors looking at it, defense, metal doing a really strong job, railway stocks doing a good job. The pre-budget theme, the trades are being placed right now, and largely there's nothing happening, but the winner of the day is the small cap index. That has done really well. Let's pull up the advanced decline ratio to show how dominant the broader markets were in today's trade. Almost you can say 3:1 ratio, and it has continued right from the beginning. It has maintained all throughout the day, and it's expected to close also at a very strong footing. That means value buying again comes back. There were 2 dead cat bounces 3 weeks ago, but now the action is here. Let's look at the Nifty Mid Cap Index, likely to be near the day's high, the closing. The winner is of course the Nifty Small Cap 250 Index. That has done really well. That's up almost 1%. Let's look at the BSE contribution of the 500 stocks in Rajesh Exports. Interesting name. FTA is also being signed. The textile and the gem and jewelry stocks are definitely there. KNR Construction on order win. But largely you see the realty name, the Privy Specialty, Mazgaon, Cochin Shipyard, they're also making it to the list, and these have a sectoral move apart from stock specific news flows. Amongst selling, Chola Financial for second straight day, there is a kind of selling coming in, some reversals at Dixon Tech, but largely it has been the day of bulls in the broader markets. And tomorrow itself going into the markets, we're expecting that the global sentiment continues on a positive manner as what the entire community is expecting as a Santa rally. But let's see what to watch out for. Infrastructure output will be there. These are not very major macro updates. Just like to point it out. These 2 stocks would be buzzing in trade. There's JK Energy, Satvik Green. Their shares will be exiting the anchor locking. These are the numbers. Board meeting coming in, of course, for the stocks which should be in focus, especially focus on Granules India. A fundraise would be there in focus. NIB, that's also fundraising expected to come in. Preferential issue, small cap, but a lot of retail interest is there. There was a big correction. KSH International, the IPO listing would be there. These bids were led by QIBs. Somehow it has been subscribed with just 83%. So we'll see how listing can happen, likely to be muted as what our grey market premium is suggesting to me. So that is something which we'll be watching out for. And last but not the least, Trump will make an important announcement at 4 p.m. EST standard. That means it's the evening or the night in India. Let's see what happens, but still there is an overhang for India and US trade deal. That's all folks for India markets close. Stay tuned to NDTV Profit, and up next, Himangshi gets us Market Express.
शौर्य और महापुरुषों की पहचान, किले और हवेलियों की शान,
संस्कृति और परंपरा का मान, राइजिंग राजस्थान, विकास की छलांग,
प्रगति पथ पर अपना राजस्थान, नया राजस्थान, विकास भी विरासत भी। एनडीटीवी राजस्थान पर 24 दिसंबर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and good afternoon. You're watching Market Express and I'm Himakshi Bahugna. Now let's dive straight into the show and let's see how the markets have fared today. So benchmarks have started the week on a very good note. Nifty has shut shop near the day's high. Sensex has jumped more than 600 points. And if we talk about the advance decline ratio, so that was sharply tilted in the favor of the advances. Now looking at the sectoral picture, so most of the sectors barring realty have ended the day in the green. Defense and IT have led the gains. Realty was the only sector that was on the back foot. Now let's look at some stocks that were buzzing away in trade. First up we have Meesho. So Meesho shares were locked in the lower circuit today. The sharp pullback comes after, intense early demand and also a low free float, which limited the supply in the market. Analysts are pointing to concerns over the company's path to profitability and also an expensive 3-year forward EV versus EBITDA. And just for context, so EV versus EBITDA multiple is basically a valuation metric showing a company's total worth enterprise value. And that's relative to its operational cash flow, that is the EBITDA. So adding to the pressure here, higher regulatory risk around the product quality, and all these factors are weighing heavily on the sentiment for Meesho. And big relief for KEC International. The Delhi High Court has put Power Grid's 9-month ban on the company in abeyance. So this means that KEC can continue participating in the ongoing bids, including those from the Power Grid. So the ban imposed on November 18 had threatened to restrict KEC's business pipeline. So today's court order clears the way for the engineering major to stay in the race for the key power transmission projects. Next up, we have GE Vernova's Grid Solutions arm that has bagged a major order from Adani Energy Solutions for a high voltage direct current project. So this contract includes design, supply and execution of a 2,500 megawatt terminal station to evacuate the renewable power from Khavda to South Olpad. Now, GE will set up two 1,250 megawatt HVDC terminal units with execution spanning multiple years, and this is marking a very significant boost to India's green energy infrastructure push. Now on to another stock that was buzzing in trade. Fortis Healthcare is expanding its footprint in Bengaluru. The company has signed a deal to acquire TMI Healthcare, which operates the 125-bed People Tree Hospital for 430 crore rupees. So Fortis is planning to invest an additional 410 crore to upgrade and also expand the facility, taking the capacity over 300 beds. So this transaction is expected to close by end of January 2026, and this will strengthen Fortis' presence in the high-growth southern market. Next up, we have MV Solar that has kicked off operations at its new 2.5 gigawatt solar module line in Bengaluru, now taking its total module capacity to 10.3 gigawatts. The expansion is part of the company's IPO-linked growth plan, and this is aimed at meeting rising demand for the renewable energy solutions. So this move, strengthens MV's position as a leading player in India's fast-growing solar manufacturing space. And continuing with the solar theme, Vari Energies is also making a strategic upstream move with a $30 million acquisition in Oman to secure polysilicon supply. So its US arm has signed a deal to acquire 5.37 million preferred shares of United Solar Holding for $30 million. So this acquisition gives Vari an exposure to a 100 KTPA polysilicon plant in Oman, and also ensuring supply security and reducing the dependence on China. So this plant will meet a large part of Vari's, wafer ingot needs, with Vari likely to be an anchor customer. So deal completion is expected by end of January 2026. And RITES is taking its expertise global. So the company has signed an MOU with the government of Botswana to develop and modernize the country's rail and transport infrastructure. So under this agreement, RITES will also provide capacity building and technical training programs, strengthening its international footprint in the engineering and consultancy services space. And if we talk about some brokerage notes, so Morgan Stanley stays bullish on Shriram Finance, maintaining an overweight rating with a target of 925 rupees. So this brokerage is calling MUFG's capital infusion a structural positive, boosting the long-term fundamentals, loan growth and also financial flexibility. So gains are expected in the cost of funds and also credit ratings, with EPS upgrades limited in the near term but likely later. So Morgan Stanley sees upside coming from a valuation re-rating as the company strengthens its balance sheet. On to some more brokerage notes. Jefferies remains bullish on Shriram Finance, maintaining a buy and hiking the target price to 1,060 rupees. So the brokerage says that MUFG's equity infusion will be, book value accretive, also pushing tier 1 capital to 30% and potentially, paving the way for an AAA rating. And this is also boosting CV and MSME growth. So while FY27 to 28 EPS estimates are trimmed by 6 to 7%, book value is projected to rise 25% and 20% respectively. So at 1.9 times of FY27 post-money book, Jefferies calls valuations pretty reasonable. Next up, we have Varun Beverages that is going global with a big acquisition. So the company has bought 100% stake in South Africa's soft drinks brand Twizza for 1,119 crore rupees. So this deal values Twizza at 1.2 times trailing sales, significantly lower than Varun's own valuation of around 7.5 times. And this is making it a strategic and cost-efficient move to strengthen its international footprint. Next up, we have Concord Control System that has also secured a 139 crore order from Indian Railways for its advanced locomotive wireless control system. The company has announced the development in an exchange filing, marking a significant boost to its rail technology portfolio and also reinforcing its position as a key supplier for the railway modernization. Next up, we have Triveni Engineering that is raising the bar in the spirits business. So the company has launched 2 premium whiskey brands, strengthening its presence in the premium and super premium segment. So this move marks a very bold step in diversifying beyond its core sugar and engineering business as Triveni taps into India's growing appetite for high-end spirits. Now let's get you an update when it comes to another newsmaker. Apollo Microsystems has received a major boost from DRDO. So the defense technology firm has secured approvals for 2 distinct transfers of technology from the Defense Research and Development Organization. So these transfers are aimed at strengthening India's directed energy weapon capabilities, and this is marking a significant step in advanced defense systems development. So this move positions Apollo Micro as a key player in the cutting-edge military tech. Next up, we have Soma Textiles that has also bagged a big infrastructure order. So the company has secured a 281 crore rupees of contract from Roadway Solutions India for railway construction work. So the project comes with an execution timeline of 24 months, marking a significant step in Soma's expansion into the large-scale infrastructure projects. Now on to some corporate action there. UPI payments may soon come with new limits, and this is all about stopping the fraud. Sources are telling NDTV Profit that NPCI is planning changes to 2 key features, collect and autopay. So the focus is on the collect feature, where merchants send you a payment request instead of you initiating it. NPCI has asked the payment aggregators to prepare for a selective phase out of the collect for a category called person-to-person merchants after reports of misuse and customer losses. And at the same time, autopay rules could actually get stricter. So the idea is very simple here. Clearer screens, clearer consent, so you know exactly when a subscription starts and what you're approving. So while small merchants may feel some sort of impact, the industry says that these changes could, cut down the fraud, unwanted charges, and also long-term subscription traps, making UPI safer and also more transparent for users. Viewers, Starbucks has named Indian origin tech veteran Anand Varadarajan as its new Chief Technology Officer, bringing in nearly 2 decades of Amazon experience to run its global tech engine. So Varadarajan joined Starbucks as Executive Vice President and CTO and will also report directly to the CEO Brian Nicole. So he replaces Deb Hall, who retired earlier this year. So, who is Anand Varadarajan? He has spent almost 19 years at Amazon, where he built large customer-focused technology platforms. And most recently, he led the global grocery technology and also supply chain systems powering businesses like Amazon Fresh and Whole Foods. So known for handling scale, complexity, and rapid growth, Varadarajan is expected to play a key role as Starbucks sharpens its digital supply chain and also customer experience strategy worldwide. Viewers, the FMCG industry is sounding optimistic for 2026. Companies expect high single-digit volume growth helped by low inflation, cheaper raw materials, and also policy support. So what's driving the cheer here? Benign inflation is likely to improve profit margins, giving companies more room to spend on advertising, which is technically the lifeline of FMCG brands. And there's some more here. With the tax reliefs and GST reforms expected to kick in, companies are also betting on a comeback in the urban demand, which is a key growth engine. But strategies are changing here. Traditional media is losing its punch, so FMCG firms are reworking how and where they can advertise. So at the same time, they're investing in AI, automation, and data analytics, while the quick commerce deliveries from same day to 10-minute slots are emerging as a critical pillar of future growth. And if you're planning a smartphone upgrade, then this deal might grab your attention. Apple's iPhone 16 is now available at an effective price of just 40,990 rupees during Chroma's Chromtastic December sale. So the year-end sale runs till January 4th, mainly across Chroma's physical stores. Here's how the price drops. So the in-store base price is 65,990 rupees with an instant cashback of 3,000 on select bank cards. Now, adding to that, there's an exchange offer of up to 16,000 rupees plus an exchange bonus of up to 6,000 rupees. So put it all together and the latest iPhone becomes significantly cheaper, making this one of the steepest discounts seen so far on the iPhone 16 series. Now let's also look at the key development coming in on the new visa norms. So big tech companies like Google, Apple, Microsoft and ServiceNow are giving a clear warning to the employees on H-1B and other work visas to avoid traveling outside the US for now. And why is this happening? Well, new visa screening rules, including the additional social media checks, have led to huge backlogs at US embassies and also consulates worldwide. So here's the risk. If a worker travels abroad and their visa stamp expires, they must get a new stamp before returning to the US. But routine visa appointments are being postponed or pushed far into the future. So that means even a short international trip could leave employees stranded outside the US for months or even up to a year. So until the system clears, tech firms are advising visa holders to stay put. Now let's shed some light on the precious metal space. After a historic rally in 2025, both the gold and silver are still shining, but 2026 may come with more twists and turns. So silver was the star performer, jumping nearly 130%, while gold has gained strongly on geopolitical risk, ETF inflows and also central bank buying. So looking ahead, experts are saying that gold remains the stability play. The long-term story is intact, but investors are advised not to chase, prices blindly. So a disciplined SIP via gold ETFs is seen as the safer way to handle the volatility. Silver, meanwhile, offers higher growth but higher risk as well. So corrections of up to 30% are possible, but analysts are still seeing 20 to 25% of upside. This is supported by demand from the solar, clean and energy and also data centers. So therefore, the message for 2026 is hold gold for balance, add silver carefully for growth and avoid FOMO trades. Now, nearly 15 years after the Fukushima nuclear disaster, Japan is preparing to take a major and sensitive step, by restarting the world's largest nuclear power plant. So the Japanese region of Niigata will vote on whether to allow the operations to resume at the Kashiwazaki Kariwa nuclear plant located about 220 kilometers from Tokyo. So if approved, it would mark a key moment in Japan's return to nuclear energy. The plant was shut down after the 2011 earthquake and tsunami, which triggered the Fukushima crisis. So since then, Japan has restarted 14 reactors as it tries to cut the dependence on imported fossil fuels. But public concerns remain very high. Surveys, are showing 60% of residents feeling restart conditions aren't met, and nearly 70% worry about the TEPCO, the same company that operated Fukushima. So the vote could shape Japan's energy future and also its trust in the nuclear power. And one of the world's most famous bourbon brands, Jim Beam, is halting production at its main distillery in Kentucky for an entire year. So the company says that the shutdown is 2026 is to upgrade and also enhance the site while also adjusting production to match the consumer demand. Importantly, this does not mean a complete shutdown. Jim Beam's other distillery, bottling units, warehouses and visitor center in Kentucky will continue to operate, but the move comes at a tricky time for the US bourbon industry. Warehouses in the Kentucky are overflowing with a record 16 million barrels of bourbon, pushing up storage costs sharply. So on top of that, trade tensions and tariff under President Donald Trump, along with retaliatory taxes and also Canadian boycotts, have hit the exports. So Jim Beam says that it's now in talks with worker unions on how the staff will be deployed during this pause. Now let's also look at an interesting report. Well, if you think that quick commerce is only about milk and Maggie, so you must think again. Yes, Swiggy Instamart's 2025 report is showing that Indians have ordered everything from iPhones to gold and even 666 roses per minute. Yes, you heard that right. One top user has spent over 22 lakhs rupees a year buying 22 iPhones, gold coins and also daily groceries all on Instamart. A Mumbai customer has bought gold worth 15 lakh rupees, while in Hyderabad, the single biggest card touched is 4.3 lakh rupees, and all of them were iPhones. So Bengaluru shoppers went big too, tipping delivery partners generously. In fact, one user has tipped 68,600 a year. And there were some quirks as well. Valentine's Day saw rose orders spike to 666 per minute. So bottom line here is 2025 was the year quick commerce moved from emergency buys to everyday and even luxury shopping. And fresh details have emerged on Lionel Messi's India visit, with investigators now revealing how much the football superstar was paid. According to the event organizer, Messi has earned 89 crore rupees, while the total cost of the India tour touched 100 crore rupees. Officials are saying that 11 crores was paid as tax to the Indian government. Investigators were told that 30% of the money came from the sponsors, another 30% from the ticket sales, while the rest covered logistics and even the event cost. So over 20 crore rupees has been found in the organizer's frozen bank accounts, which he claims is ticket and sponsorship money. During the questioning, the organizer also said that Messi was unhappy with the crowd behavior at Kolkata Salt Lake Stadium after being touched and hugged despite warnings, and he left the venue earlier than planned. So the disclosures are now part of an ongoing SIT investigation into the high-profile event. Now on to some update from the Indigo. So if you were stranded due to Indigo flight disruptions earlier this month, here's some relief for you. Indigo will start issuing 10,000 travel vouchers from December 26 to the passengers who were severely impacted and also stuck at airports for several hours between December 3 and 5. So this voucher is over and above the mandatory compensation of 5,000 to 10,000 rupees already laid down under the government rules. So the move follows a high-level review chaired by the Aviation Secretary, after which Indigo was asked to ensure quick and full payouts. Passengers who booked the tickets directly through Indigo's website will get compensated first, as their details are already available. For others, Indigo has been directed to collect the data from travel agents and also online platforms. The DGCA and the Civil Aviation Ministry will closely monitor the process to ensure passengers get what they are owed. Now on to some national news. Delhi has recorded an air quality index of 366 early today, indicating severe pollution levels. During morning hours, the city's temperature stood at 12 degrees Celsius with humidity at 100%, adding to the winter smog conditions. And as such, the Commission for Air Quality Management has invoked the strictest measures under its Air Pollution Control Plan Stage 4 of GRAP. So this means the entry of trucks into Delhi is stopped. except those carrying essential commodities or even providing essential services. So the Commission has noted that AQI of Delhi has exhibited a continuous increasing trend owing to very low speed wind, stable atmosphere, unfavorable weather parameters, and also meteorological conditions for the dispersal of pollutants. So these have been have in turn resulted in the trapping of the pollutants in the region. Now deteriorating AQI, the AQI is deteriorating further. And an Air India Boeing 777-300 ER aircraft operating flight AIC 887 from Delhi to Mumbai has returned to Delhi today after facing a serious glitch. The flight returned shortly after takeoff due to a technical issue. As per standard operating procedure, the aircraft landed safely at Delhi and also passengers and crew were disembarked. In the beginning, sources indicated that the right engine was shut down mid-air. Following this, a full emergency was declared for the flight at 6:40 a.m. As per DGCA, during a flap retraction, the flight crew observed low engine oil pressure on engine number 2. So shortly thereafter, the engine oil pressure dropped to 0, following which the crew took appropriate action and also returned the aircraft safely. The aircraft has landed without any incident. And New Zealand and India have concluded a free trade agreement today. The FTA is aimed at deepening economic ties and also expanding market access for exporters. Now, this comes after negotiations between the two countries resumed in March this year, following a gap of nearly a decade. Now, Prime Minister Narendra Modi held a telephonic conversation with New Zealand Prime Minister, during which the two leaders jointly announced a successful conclusion of what they described as a historic and mutually beneficial free trade agreement. So negotiations for the pact were initiated during Prime Minister Luxon's visit to India in March 2025. Leaders have said that the agreement was concluded in a record 9 months, reflecting shared ambition and also political will to strengthen the bilateral ties. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
Yeah.
शौर्य और महापुरुषों की पहचान, किले और हवेलियों की शान,
संस्कृति और परंपरा का मान, राइजिंग राजस्थान, विकास की छलांग,
प्रगति पथ पर अपना राजस्थान, नया राजस्थान, विकास भी विरासत भी। एनडीटीवी राजस्थान पर 24 दिसंबर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
– 2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world.
Market ends higher as the benchmarks gain close to 1%, with Nifty ending above 26,000. Mid and small cap indices slightly outperform Nifty and the Sensex. All sectors finish in the green, with defense as a top gainer. Shriram Finance tells NDTV Profit that it aims to have capital adequacy growth of about 20%. Says the company is not discussing banking license at all and is very happy being an NBFC. Gains close to 4% at close today. India concludes a free trade agreement with New Zealand. India will get duty-free access to 100% tariff lines and removes tariffs on 95% of New Zealand exports. FTA opens big opportunities for innovators, entrepreneurs, farmers, MSMEs, students and youth of both the countries. As the year draws to a close, gold and silver touch record highs. While silver surges nearly 130% in 2025, gold continues to deliver exceptional gains driven by geopolitical uncertainty. NPCI plans changes to collect and autopay features on UPI. Sources say it may have asked payment aggregators to prepare for a selective phase-out of the collect feature under the person-to-person merchant category. Billionaire Ray Dalio explains why gold is so special. Speaks to Zerodha's Nitin Kamath on his WTF podcast on the perception of gold in India and the value of the yellow metal. Catch a glimpse of it on the show ahead. Starbucks names Anand Varadarajan as its new Chief Technology Officer and Executive Vice President. The Indian origin Amazon veteran will take charge on the 19th of January. Hello and welcome viewers. It's a Monday evening, 4 p.m. Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour, we'll be taking you through some of the latest updates when it comes to markets, national as well as international news. Let's begin with checking the health of the markets. Well, it seems like a very strong performance. Benchmarks kicked off the week on a very strong note. The Nifty wrapped up trade near the day's high, while the Sensex jumped over 600 points. All sectors closed in the green. Defense and IT stocks led the gains, while realty was the only sector under pressure through the course of today's session. My colleague Mahima now joins us with a detailed market roundup of the day. Mahima.
All right, so if you take a look at the markets today, they've done fairly well. The Nifty 50 closed well above the 26,100 levels. The broader markets have outperformed the benchmark indices. Overall, if you take a look at the Nifty, it surged second day straight in this session. We'll have to see whether the Santa rally actually continues till the end of till the end of 2025 and goes forward into 2026 also. Overall, Shriram Finance and Trent are the top gainers in the Nifty. Shriram Finance, Trent, Wipro and Infosys gained over 3% in trade and were the major factors of pulling the Nifty up. The Midcap 150 gained for the third consecutive day. Cochin Shipyard, Solar Industries were the top gainers. For the small cap 250 as well, it was the second straight session where it gained. Jupiter Wagons, Rajesh Exports were the top gainers. In terms of sectoral indices, all sectoral indices ended in green. The Nifty IT up 2% emerged as the top gaining sector. And overall, Persistent System, Wipro were the top gainers on the Nifty IT. The Nifty PSU Bank, IT Metal gained for fourth day in a row, and Nifty Oil, Gas, Nifty Bank as well as Nifty Pharma gained for second day in a row. Lastly, Nifty Realty Financials gained for the third session in a row. So this is the overall view. A positive sentiment is what we are seeing in the markets.
Well, as Mahima clearly explained the positive sentiment and the underlying meaning of it for today in the Indian markets, we have seen a disappointing earnings season so far for this year, especially with growth remaining tepid. While the US and global tech story has continued to outperform, India's own earnings momentum has lagged. But there is a silver lining, and according to Arvind Sangar, managing partner at Geosphere Capital, the worst may now be behind us. He believes India is set for improving earnings, and we should see better numbers in the upcoming third quarter results. Listen into his comment.
The Indian growth story, which has been disappointing, and I'm not talking about the headline GDP growth, I'm talking about the earnings growth by Indian corporates, which has been somewhat tepid in 2025. And there are other better growth stories, whether it's the AI story in the US or AI and technology story in China and other places. I think that we're hopeful that AI will not be the dominant theme. It'll be an important theme, but it will not be the one and only driver for markets as has been for major parts of 2025, because that doesn't play to India's strengths. But B, more importantly, from an India standpoint, that India's own momentum in terms of earnings growth, hopefully the worst is behind us, and we will see in the numbers to come for the fiscal third quarter.
So the words of Arvind Sangar, as India is expectant or is poised to see better earnings growth in quarter 3 and onwards, oil price volatility has been one of the hottest topics this year. Oversupply and sluggish demand have kept prices below expectations. But despite lower crude rates, Indian OMCs, which are oil marketing companies, have been raising concerns over shrinking margins. Populist policies and higher excise duties continue to keep these companies under pressure. Now, why is this happening? And will the trend change? My colleague Somit is here to break down it in a special research report.
If you look at the last 1 month move for the oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL, they're down anywhere between 2 to 6% in trade, and this is despite the fact that crude prices have fallen nearly 8% from the recent peak of $64 per barrel and now currently trading between $59 to $60 per barrel level. Now, usually lower crude oil prices is positive for the oil marketing companies, given the fact that lower crude oil prices means higher marketing margin for them. And so why is it this time that there's an inverse relation that we are seeing? And this is largely because the street is now expecting that, given the fact that crude is trading around the $60 per barrel level, there could be an excise duty hike or a fuel price cut that could come in going forward if crude continues to remain on the lower level. Now, this is because, firstly, when it comes to excise duty hike, because there could be a fiscal slippage this year of around 35 to 60,000 crore rupees. This is as per what the brokerage is expecting, and this is every 1 rupee per litre hike in the excise duty increases the government's revenue by nearly 17,000 crore rupees. So this is the most easiest option for the government to make up for that fiscal losses. Now, why there could be a fiscal slippage here? Because of the GST rate cuts and because of the populist spending that the government has been doing during state budget. So both these factors could lead to a fiscal slippage. Now, why there could be a cut in fuel prices? Now, cut in fuel prices could be because since 2022 we have not seen any change in the petrol and diesel prices, but crude prices have fallen from around $94 per barrel to $60 per barrel. So there is a very high chance that there could be fuel price revision as well going forward. Now, what would be the impact of both of this? The impact of both of this is that oil marketing companies cannot pass on the impact to consumers, so they'll have to lower their gross marketing margin that they are earning currently, and currently they are earning a margin of close to 8 rupees per litre, and every 1 rupee per litre drop in the gross marketing margin lowers the EPS estimates for Indian Oil Corporation, BPCL and HPCL anywhere between 14 to 24%, and when it comes to EBITDA, the impact is anywhere between 8 to 13% on an annual basis.
Thanks so much for that special report, Samit, for explaining especially the perception of dropping oil prices in the Indian oil marketing industry. But in a landmark deal, viewers, in India's NBFC space, Mitsubishi UFG Financial Group is set to invest nearly 40,000 crore rupees for a 20% stake in Shriram Finance. And remember, last week, NDTV Profit reported the same to you, and we were the first on it. And the investment is totaling around 39,600 crore rupees, nearly 40,000 crore rupees. That will come through a preferential issue of equity shares. But today, for Shriram Finance, the partnership means a large capital infusion, lower borrowing costs, and expanded distribution network. And we say this because my colleague Shrimi Chaudhary had a conversation with Umesh Revankar, Executive Vice Chairman of Shriram Finance. Let's listen in to a snippet of that exclusive conversation.
Could you please take us through the, this largest strategic deal with MUFG, given the aspect in mind that you have sufficient fund there to push your growth for next 2 to 3 years. So what is the strategic rationale behind bringing in foreign partner at this stage?
See, basically, if you look at our capital adequacy, we are at 20.68 as on the last quarter. And since we have a borrowing from the international market, especially for bond and syndicated loan, and we have an international rating, they prefer to have a 20% capital adequacy, even though statutory requirement here is 15. So we wanted to remain about 20 all at any point of time. That's the reason we were looking at some kind of equity raise. But when we wanted to go in for equity raise, we wanted to have a long-term plan. We did not want to have a short-term plan, raising capital frequently. And since we were already at 25.3, we had to have a long-term partner to remain with us for longer. And that's the reason we have raised. And when we have a strategic partner, when a large institution is coming, you can't be doing a small ticket or small equity raise. Therefore, we made a large one.
If you could share the timeline as well, that when we could see the capital coming in, what is the timeline in the mind to seal this deal? How much time it will take?
See, basically, we are going to apply for RBI approval and CCI approval. So we have kept 3 to 4 months as the timeline, and the broader terms. It can come early also, because now I have seen the regulator and government are very much pro-business, pro-active in supporting
clearing the files.
Business. Supporting the business. They want to see the India's growth story to continuously to keep growing. And last 2 quarters, you have already seen that Indian GDP has grown 8%. Keeping that momentum really helps.
Of course, I asked you also during the press conference, but with a long-term strategic partner you have in place, are you not planning on those direction to have a banking license to enter into banking space?
See, you are a lender, whether it's a banker or NBFC, you are a lender. But when you are a bank, you have to have multiple activities. Savings bank account, overdraft facilities, forex, so many things are there.
Absolutely.
So we have no knowledge on the same. MUFG definitely has a knowledge in other countries. So right now, they have liked our business model of being NBFC, our ability to reach to the customers, and our constitution. Our constitution is basically vehicle financing, asset-backed lending, and creating a sustainable income. So that they liked. So they have been they are partner with this move now. So as we progress, then probably we have to look into whether we need to create a separate structure, infrastructure or not. So right now we are not discussing that at all. They are very comfortable, happy being in NBFC, investing in NBFC.
And in a milestone moment, India and New Zealand have concluded the talks for a free trade agreement after a pause of almost 10 years and nearly 9 months of discussion that started earlier in March this year. At the forefront of this deal, India gets zero duty on 100% tariff lines in New Zealand, and in return, it reduces or removes tariffs on 95% of their exports to India. In fact, both countries also aim to double bilateral trade in 5 years that currently stands at about $2.4 billion. Let's get in my colleague Rishabh Bhatnagar for all the key highlights from this historic FTA.
Right, another trade deal in India is back. This one right after UK and Oman, you have another developed country with New Zealand. What we're seeing is that this is unprecedented. This is 100% lines that New Zealand has included for absolutely 0% tariff. So in earlier FTAs, we saw 98, 99%, but this one, all tariff lines are completely exempted. Basically, if anyone that has to send anything to New Zealand will be going tariff-free. That is number one. The second big headline that's coming out of this is the large $20 billion FDI commitment that New Zealand has baked into this free trade agreement. That essentially means that over the next 15 years, New Zealand will be plowing in about $20 billion. And to put that in context, they've only put in roughly $90 million over the past 25 years. So this is a massive multi-fold increase, similar to the EFTA agreement that we saw. They had committed roughly $100 billion. New Zealand has committed $20 billion. What we're seeing is that the gains from this particular FTA will be concentrated in the labor-intensive sectors. That is your textile, leather, footwear, pharma, chemicals, plastic, rubber. Those are the sectors that will stand to gain from this particular free trade agreement. What we're seeing is that a lot of mobility-related and visa-related changes have also been brought into this particular FTA. And that is a major feature of this. There's a post-study work visa that is opening up. There's a lot of temporary visas that are opening up. So a lot of jobs also are part of this particular free trade agreement.
Thanks so much for that, Rishabh. And post the announcement, viewers, Commerce Minister Piyush Goyal told the media that this free trade agreement will be significant towards realizing India's 2047 Viksit Bharat mission. Now, he underscored that while this is the 7th FTA signed under PM Modi's leadership in the last 4 years, all FTAs so far have been signed with countries that are not in competition with India, but instead offer growth opportunities for us. Let's listen to Piyush Goyal's comments.
This is the 7th free trade agreement. All of them with developed economies with significantly larger per capita incomes than India, demonstrating that we are expanding trade relations rapidly with countries who complement the Indian economy rather than compete with India.
And as 2025 inches closer to its finish line, gold and silver are touching record highs. In fact, as of this morning, gold and silver prices hit their peak points in Asian trade. Spot gold jumped about 1.4% to a record high of $4,403 an ounce, surpassing its October peak, while spot silver rallied over 3% to a record high of $69.45 an ounce. Now, both the metals have in fact seen remarkable performance through the course of 2025 as well. Let's take a look at this report formulated by my colleague Shriram Singh, who is joining us to understand the drivers of this rally. Shriram.
Well, absolutely, Malika. And just as you rightly pointed out, another day, another week, another record high coming in when it comes to gold and silver prices. So when you take a look at gold prices, they have in fact rallied to the tune of about 1.5%. That's the kind of uptick that you're looking at for gold. And silver, it's about 3.7% uptick, closing in also on that $70 an ounce level. And this is quite unprecedented. Both of these metals, you're looking at both of them being set for the best year since 1979. And quickly, when you take a look at the year-to-date moves as well, gold is up about 70% thereabout, and silver in fact is up about 133%. So that's the kind of run-up that you've seen in terms of the key triggers.
You do have lower interest rates that make it to the list when it comes to silver as well. Other than that, it's also supply concerns that make it to that list, 5th year of supply deficits coming in for the white metal. And other than that, there's of course robust demand that we've seen for the last 8 years. Other than that, there's a tariff lining that you're looking at on the back of the US Geological Survey, also adding it to the list of critical minerals. So you're looking at a potential tariff coming in when it comes to the white metal. And on the back of that, you've seen that blistering, that scorching rally come in. Other than that, in terms of the other key tailwinds, you do of course have lower interest rates making it to the list when it comes to bullion as well. And what also adds to that list is of course geopolitical tensions. So there's safe haven demand that is getting bolstered on the back of that. And there's also robust ETF inflows as well as the de-dollarization trend that is also added to the tailwinds when it comes to gold.
So much for explaining. The common trigger for both gold and silver being rate cuts, obviously, and we'll have to track and see if this year actually turns out to be one of the best rallies for gold and silver since the year 1979. But coincidentally, viewers, in a recent chat with Zerodha's Nitin Kamath, billionaire investor Ray Dalio explained why gold is so special. Dalio said that in India, many people already see gold as a safe store of wealth. Gold, he says, works as money because people around the world accept it as it is. He explained that gold is an asset that is not a liability on anyone else's books. No one has to pay you anything to own it. All other money, like say rupees or dollars in his words, depends on someone fulfilling a promise. But gold does not do that. Let's listen in to a portion from that hour-long chat.
Money is a medium of exchange and a storehold of wealth. Very important to recognize it as a storehold of wealth. What is a storehold of wealth? Okay. So when you, in India, many people realize that gold is a storehold of wealth. Now, what it's the perception of money, that it can be used as a medium of exchange, that I can go around the world and I can go from one country to another and I can turn it in and get value to be able to buy things, right? So that is what it is. And through history, gold has been the most used money, most accepted around the world. But it's the perception of it. And so when we think about, let's say, money as we commonly think about it, which is fiat money, then that...
But there's a difference there, right? Like gold is an asset which is not a liability on anyone else's book.
Exactly. It's a money. It's the only money. Well, maybe it's not. We could talk about crypto. But yes, gold is the only money that you can have, and nobody has to give you anything to have it. Good. Yeah, all other money is dependent on somebody giving you something. Okay. Whether they give you, and so it's unique in that its confiscation risk is less than others. So that's why one of the reasons gold is unique. But it is also, back to your main point, it is a widely recognized storehold of wealth that I could bring around the world and I could use it. And it's particularly important in that it is not deflated. You can't deflate its value, but you can't print it. You create more of it.
And moving on from Ray Dalio's comment on gold, there's big news for UPI users in India. The National Payments Corporation of India, or NPCI, is planning to change or make some changes, in fact, to UPI payments that can make these payments safer. They're worried about fraud in two features: collect and autopay. Now, collect lets merchants send a request for money, which customers then approve. But this has been misused in scams, leading to losses for many people. NPCI has asked payment companies to prepare to stop the collect feature in the person-to-person merchant category. My colleague Nisha Podar joins us to tell us what else has she been hearing about the story from her sources. Nisha.
That's right. It's something that affects you and me and all of us on a regular basis, because sources with direct knowledge really suggest that collect and autopay options on our UPI apps are on NPCI's radar due to their misuse in unscrupulous transactions as well as frauds. Now, sources confirmed to NDTV Profit that NPCI has spoken to the payment aggregators to selectively sunset the collect option. which means that NPCI is likely to sunset the collect option for person-to-person merchant category. This will reduce the misuse by the merchants for recurring payments. NPCI is also likely to reiterate the strict display guidelines for auto-pay option for the payment aggregators. Now, NPCI's measures, remember, on both collect as well as auto-pay options on UPI is to prevent the misuse by the merchants on the UPI transactions. Now, NPCI is, remember, responsible for formulating the operating guidelines for the payment fintechs. We reached out to NPCI, Paytm, Pine Labs, MobiKwik. All of these are listed companies, payment aggregators, and we did not get the comment on this particular development, and even from NPCI as an operating guideline provider, we did not get any official comment. But sources do indicate that this particular measure is on NPCI's radar. Now, collect option is a transaction, remember, which is initiated by the merchants, not by the payer. Auto pay option allows automatic recurring payments of your bills or even your subscriptions. Now, payment aggregators are those fintech entities that act as intermediaries in collecting the payments from the customers for the merchants. NDTV Profit spoke to several of the payment aggregators who spoke anonymously with us about the menace of collect and auto pay options causing financial loss to the customers due to ambiguous display options. Now, industry sources say that collect payments to shift to intent and QR payments. So there are other options available for the same kind of payment. Now, small merchants to get impacted due to sunsetting of the collect option in the P2PM category. It will also reduce fraud collection of payments from customers using UPI and better auto pay display to prevent the misuse by the subscription-based apps. And also remember, auto pay display guidelines protect the customers from unknowingly subscribing for a longer term.
Thanks for that, Nisha. And viewers, that's all the time we had on this edition of Profit 360. But do stay tuned to the channel as we continue to bring you a lot more news and updates. This is Malika Mishra.
शौर्य और महापुरुषों की पहचान, किले और हवेलियों की शान,
संस्कृति और परंपरा का मान, राइजिंग राजस्थान, विकास की छलांग,
प्रगति पथ पर अपना राजस्थान, नया राजस्थान, विकास भी विरासत भी। एनडीटीवी राजस्थान पर 24 दिसंबर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time
ICICI
investment?
CDSL for the long term? Buy, sell or hold?
The Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today on show in KYC there is a very important company in this agro space, but I'll let you guess which this company is. It's an agro pesticides manufacturer. Also, looking at the stock itself, it has recently did a stock split and a bonus issue, and the stock is up more than 30% in just last 1 month. The company's name is Best Agro Life, and that has actually caught my attention, and a lot of viewers who look at KYC and they have stated to look into this company and to see whether this company is worth the up move or not. The first question is, will the sales actually do well in Q3 as well, or this impact will continue to happen because already they stated that in the Q2 numbers? That's the first question we'll be asking the management. Are there any recovery expected in the bulk sales? Is the management walking the talk? That mentioned that in the Q2 con call, so that's what we'll ask the management again. And what is the launch pipeline for the patented products? That's where the bullish sentiment is there, which the street is expecting, especially in H2. The fourth question is, what are the debt reduction plans? Already I saw the debt reductions are coming down. It's almost 0.5 debt reduction level. So will this actually come down more? And also any international expansions on the cards? That's what we'll ask the company. Apart from non-LATAM or the non-American regions, which else regions are they finding value going ahead? And that is going to be very much important. But Best Agro Life, let's just ask about more questions about the company, what this company is all about. Of course, it is a pesticide player itself. It is having some patented technologies also. So let's just make you understand what the company does. My company manufactures agrochemicals, but to just give you a perspective, the space has been under tremendous pricing pressure, and also the seasonality of the rain season, especially for domestic players, has been on the negative side. They have roughly 9 patented products. It's just on the start when it comes to the patented products, and they are supposed to have higher levels if they want valuation premium in the market. And the branded institutional sales, that's the breakup coming in. Branded is roughly 69% and the institutional sales, that comes in at 31%. Also, let's pull out, apart from the branded and the institutional, there's the contribution of products, how things happen. And largely in Q2, the number has been on the lower side. If we compare it with the Q2 FY26, that's 38% of sales has happened from the patented segment. And when you have a patented product, of course, you command a higher margin in a business like this. And also, you have a bargaining power. Non-patented products, they are a bit commoditized. And the sector itself, if you look at it currently, is going under a big pricing pressure, and the Q2 numbers have been on the weaker side. Now you must be wondering,
The stock is up 30%. Why? So we'll try to break it down why it is up. Of course, one of the main and the key reasons would be coming in is the stock split and the bonus issue announcements, and that is where the interest has actually come into the markets. So maybe it's a demand supply situation, because fundamentally also we need to judge the company. That's why we are having 8 of these parameters coming in: income statement, balance sheet, cash flow, return ratios. These are the 4 basic numbers which you should actually look out for. Apart from that, even shareholding, street cred, valuation amongst its peers, that's something which we will do for you. And also the outlook going ahead. Is it mixed? Is it good? Is it bad? We'll get you all the details. Out of these rating parameters, which are 8, we'll give our rating. The first one, that is the income statement, and we'll of course get you the numbers, how it's actually panning out. The 3-year CAGR for the revenue, that's a decent 14%, but my concern starts coming in when it comes to the EBITDA and the margin fronts. Nothing much happening. A company has given a target of 13 to 14%. So the question is, will that actually bounce back, in the H2? That's something which we'll ask the company. Net profit, there are some issues. The Q2, largely the numbers which had come in sequentially, the numbers have done well, but when you judge the company, especially a fertilizer company, you should do year-on-year basis, because there is a seasonality impact to it. And look at these numbers here: revenue down, EBITDA down, margins hit, net profit down, and that's where the concern starts coming in for me. Because of that, I'm just getting the short-term as well as the long-term numbers. I'll be giving this a total setup, a kind of a neutral rating, but there is some hope here. 15% coming in, and they're expecting that to be around that 13 to 14% odd mark. So there seems a hope, and if that has bottomed out, maybe we can see some kind of help in the margin front. But net, my view still remains kind of, neutral for the income statement. Also, let's move to the balance sheet segment, how actually that is panning out. And largely we see the book value that has gone up on the higher side, but the borrowings, that has largely come down, and that is why my comfort comes in the debt to equity ratio. But the concern is, of course, they're on the working capital front, because it's a very highly working capital business. And over here we see that the Q2 numbers were on the weaker side, Q1 also, and largely Q3 is supposed to be a good quarter for these companies, but this time the company has itself stated that the sales will be impacted. That means these numbers might see some more hit coming in, and because of that there are 2 divergences happening. I will give a neutral rating when it comes to the balance sheet. The third one is the cash flow segment. This is also very much important, and remember, a company like this will always have kind of, you could say, a very divergent cash flows coming in, because this is the nature of the business. There is lumpiness, there is seasonality involved, so that is something we'll be looking out for, and no clear trend actually comes out. Of course, the operating cash flow for September, that has done well. That you look at that amount, 228 crore rupees. PAT, that has come down, and I mentioned you there has been inventory hits coming in. Now whether this reversal happens in Q3 or Q4, that's something which time will say. The cash flow to PAT numbers, they are decent to actually get you in. Net cash flows, it's very divergent, but net I would say the upper numbers have been very strong. At least this seasonality impact which has come in, and because of that I will give a good thumbs up or for the cash flow segment. But return ratios, that's also my concern. Generally a 15%, when you look at it, it's a very decent number to actually look at for a company like this, and had this been on the higher side, I would have actually given a good thumbs up for it. But see, the reduction has started happening in from 26%, it's 15%, and then these numbers is going down to 13%, and that's where the concerns are happening. And because of that, I will be giving a thumbs down when it comes to the ROC, the return on capital employed numbers. Now let's come and show you the ratings, how things actually move when it comes to the overall shareholding, how it's actually coming in. Largely looking at shareholding, we see not much change happening. The promoters, it's maintaining that 50% mark. FIs, there is a concern. It was 9%, but then it has come down and it's almost 6%. DIs, nothing much change, but institutionally the participation has gone down, and retail participation, which was 41, has gone up to 42%. So because of the institutional participant slowly coming down, I would be giving this a thumbs down, and that's why shareholding pattern, we can see there's a red mark happening. Street cred, that's a very important trigger, and largely the stock came into my interest because it spiked up almost 30% plus in the last 1 month itself. But apart from that, let's look at how other numbers have panned out. Last 6 months, it's 22% and then the last 1 year, it's down 37%. That's very concerning. So if you're a shareholder for more than 1 year, that's where the stress starts coming. That's where your patience in holding this stock is getting tested. Last 5 years, let's see what has happened. It's decent, 73%. That's not a problem. So because of the divergence coming in, 5 years, this has been good. 1 year holding, this has been really big questionable investment. But last 1 month, that's where the interest lies for the market, and it's a very forward-looking setup whenever you come and invest in the market. So I would be giving this a neutral rating when it comes to the street trend or the share movement. But apart from that, let's see the valuations, because the company has two types of peers. One is, of course, the larger peers in the agri-pesticide segment, and ones are the smaller ones who are domestic focused. So I'm going to get all of them to give you the flavor. Where does the valuation stand? And these valuations are 12-month forward P ratios going ahead. Best Agro Life, remember the word, it is 16 times FY27 P. But now let's see how the competitors are faring. And we could just show the UPL and PI industries again, and we see here, it's almost 19 to 20 times. It's on the expensive side, but remember, they do command this premium in the market because of the sheer strength and distribution. Let's see the local players, how that has actually come in. And these are the local names, Dhanuka Agritech and Sharda Crop. They are largely similar, when it comes to their valuations. Not much changes happening. And remember, all of the industry valuations are on the lower side. There has been a significant correction. So most of them are showing some kind of strength and maybe a valuation comfort also if you want to play a short-term technical bet on this theme as well. But net, be it comes to the local peers and the valuations from the steep corrections from the highs, I would give this a neutral rating when it comes to the valuations. But now we are done with 7 of the rating parameters. The 8th rating parameter is also very much important. That's the outlook for the company. They're anticipating a lower Q3 sales number. They have mentioned it already. There's a change in the sales strategy and some adjustments as well. They're expecting a 13 to 14% EBITDA margins in H2, and that's a decent one. They have come out with almost 15% in Q2 itself. Patented sales, that's likely to improve from December onwards, and that's very much important. It contributes high margin push and also a strong momentum for other sales profile as well. Exports area growth expansion, that's what we'll be looking at and asking the company which are the geographies and by when these benefits will start coming in. So net, we can say that we have given this outlook a kind of a neutral rating going ahead. But let's just give you the entire picture, what we have done over the last 8 to 10 minutes and analyze the company itself. And let's just show the 8 parameters which are there. Largely for the income statement, balance sheet, it has been a neutral rating. Cash flow has something which I show some improvement in parameters. Return ratios were disappointing. Shareholding, the institutional participation has gone down. And street trade valuation and outlook, it's there. But is it fully there? That's the question, and that's why I've given a neutral rating when it comes to this space. And overall, for Best Agro Life, it's on the lower side in my show, KYC. It's 3.5 out of 8 I have given to this company. The stock has, of course, done really well over the last 1 month or so, but can this move sustain, or this is just a demand supply kind of a move, because the more shares will be available for the retail as company has announced a bonus as well as share split. So we'll discuss all these questions, and we'll be joined by Vikas Jain. He's the CFO of Best Agro Life. After the break, stay tuned to NDTV Profit.
शौर्य और महापुरुषों की पहचान, किले और हवेलियों की शान,
संस्कृति और परंपरा का मान, राइजिंग राजस्थान, विकास की छलांग,
प्रगति पथ पर अपना राजस्थान, नया राजस्थान, विकास भी विरासत भी। एनडीटीवी राजस्थान पर 24 दिसंबर।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.